respected dignitaries on the dais, distinguished speakers, faculty members, researchers, and dear participants. I am Shubhanjali.
And myself, Pranjal.
And it is our privilege to welcome you all to the National Conclave on Next Gen GST and the Road to Viksit Bharat at 2047. Established in 1938 by the Servants of India Society, the Gokhale Institute of Politics and Economics carries forward the ideals of Gopal Krishna Gokhale ji through rigorous research, teachings, and policy engagements aimed at addressing India's pressing socio-economic challenges. Today's conclave is organized in collaboration with the Indian Council of Social Science Research, New Delhi, a key institution supporting academic research and scholarship in social sciences in India. The partnership reflects a shared commitment to strengthening policy dialogue and promoting evidence-driven governance. The event stands as a result and committed guidance and planning of Professor Lalita Gauri Kulkarni ma'am and Professor Rimli Basu ma'am.
9 years ago, India embarked on one of its most ambitious fiscal reforms, the introduction of goods and services tax. Today, we come together not only to evaluate its journey, but also to imagine its future as India moves towards its vision of Viksit Bharat by 2047. Today's discussion aims to explore how GST reforms can further contribute to sustainable growth and development. This conclave brings together eminent scholars, policymakers, practitioners to deliberate on the evolving role of GST in shaping India's economic future.
To begin this auspicious occasion, we now move to the traditional lighting of the lamp, which symbolizes the triumph of knowledge, followed by Saraswati Nandana. May I please request Professor Umakant Das, Honorable Vice Chancellor of Gokhale Institute, Professor Santishree Pandit Ma'am, Shri Vivek Johri, Professor L.C. Malaya Sir, Dr. Nitin Kareer Sir, and Dr. Ramesh Salyan Sir to kindly come forward and light the ceremonial lamp and take their seats.
कुन्देन्दु तुषारहार धवाला या शुभ्रवस्त्रावृता या वीणा वरदण्डमण्डितकरा या श्वेतपद्मासना या ब्रह्माच्युतशङ्करा प्रभृतिभिर्देवैः सदा वन्दिता सा मां पातु सरस्वती भगवती निशेषजाड्यापहा शुक्लां ब्रह्मविचारसारपरमा आद्यां जगद्व्यापिनीं वीणापुस्तकधारिणीमभयदां जाड्यान्धकारापहां हस्ते स्फाटिकमालिकां विदधाति पद्मासने संस्थितां वन्दे तां परमेश्वरीं भगवतीं बुद्धिप्रदां शारदाम्.
thank you very much, esteemed dignitaries, for inaugurating the conclave with this meaningful tradition. It is now our honor to invite Professor Umakant Das, the Honorable Vice Chancellor, to deliver the inaugural remarks and set the tone for today's deliberation. Please, sir.
Professor Santishree Pandit ji, Vice Chancellor JNU New Delhi, Dr. Nitin, Kareer, Chairman Maharashtra State Finance Commission, former Chief Secretary, Government of Maharashtra, Shri Vivek, Johri, former Chairman Central Board of Indirect Taxes and Customs, Government of India, and Senior Advisor Indirect Taxes, KPMG. Dear distinguished guests, esteemed policymakers, respected members of the academic community, and representative from the industry, my dear friends from the media, faculties and students. It's indeed a great privilege to welcome you all to the National Conclave on the Next Gen GST, the road to Viksit Bharat 2047. I extend a warm welcome on behalf of the Gokhale Institute of Politics and Economics to all the distinguished speakers, panelists, participants who have joined us today to reflect on one of the most significant institutional reform of India in the fiscal history of India. This conclave seeks to create a platform for thoughtful dialogue on the future of India's tax architecture. We are grateful to ICSSR for its partnership in bringing this particular set, and we're also thankful to the scholars, policymakers, administrators, and industry leaders to engage in a meaningful exchange of ideas. Of course, the goods and service tax represents a landmark reform in India's fiscal governance. By subsuming a complex web of indirect taxes into a unified framework, the GST has fundamentally reshaped the way economic activities are taxed and administered across the country. Beyond the technical design, GST embodies a broader aspiration towards cooperative federalism, transparency, and efficiency in public finance. Nearly a decade since its introduction, the GST system stands at an important juncture now. The experience accumulated so far provides rich material for reflection, which happens to most of the policies or the changes that we make in India. The experience accumulated so far provides rich material for reflection. While the reform has significantly improved tax harmonization and compliance through digitalization and institutional coordination, it has also raised new questions about revenue sustainability, the fiscal autonomy of states, the compliance burden of small businesses, and the evolving architecture of fiscal federalism. As India advances towards its centenary of independence in 2047, the Prime Minister's vision of Viksit Bharat called for a robust, resilient, and forward-looking fiscal system. A next generation GST must therefore go beyond its foundational objectives, responding to emerging economic realities, which now we are going through, and many of the countries are going through the same kind of experiences. A next generation GST must therefore go and see how it is going to incorporate the challenges that we are encountering now in day-to-day life. These include a rapid digitalization of commerce, the expansion of the service economy, the growing importance of the data-driven tax administration, and the need for a tax regime that supports innovation, competitiveness, and above all, the inclusive growth. Equally important is the question of institutional evolution. The success of GST has been closely tied to the functioning of the GST Council and the cooperative federalism of the country. The processes that underpin fiscal decision making in India. As the economy becomes more complex, strengthening these institutional arrangements while preserving the delicate balance between national coordination and the state level fiscal space will remain a central policy challenge. It is precisely here that academic institutions have an important role to play. Universities and research institutions serve as a space where empirical analysis, theoretical insights, and policy experiences can come together. Forums such as today's conclave enable to bridge the gap between research and policy making, ensuring that reforms are informed by rigorous evidences as well as practical considerations. Over the course of the day, our deliberation will explore multiple dimensions of the GST ecosystem, because without understanding holistic, it would be difficult to it's like an elephant. Its macroeconomic implications, its administrative and technological architecture, and its role supporting India's long-term development trajectory. I'm confident that the insights generated here will contribute meaningfully to the ongoing national conversations on fiscal reforms. As we set the context of today's discussion, let us remember that the journey towards Viksit Bharat at 2047 will require not only economic growth, but also institutional innovation, policy coherence, and sustained collaboration across sectors. Tax policy, though often technical in nature, lies at the heart of this endeavor. It shapes incentives, mobilizes public resources, and reflects the values of equity and efficiency that underpin a modern economy, which of course, is one of the principles we teach our economic students. I hope that today's conclave will stimulate thoughtful debate, encourage interdisciplinary engagement, and generate ideas that can inform the next phase of the GST reform in India. Once again, I welcome all the dignitaries, participants, and our guests to the conclave, and I wish the conclave a very success. Look forward to the enriched discussion that we are going to experience the whole day. Thank you very much.
Thank you very much, sir, for your warm and insightful welcome remarks that perfectly captured the significance and vision of the prestigious conclave.
We now move to a special movement of the conclave, the felicitation of our guest, as a gesture of our deep appreciation and gratitude. To begin with, we request Professor Umakant Dash Sir, Honorable Vice Chancellor of Gokhale Institute of Politics and Economics, to kindly felicitate Professor Santishree Pandit Ma'am, Honorable Vice Chancellor of Jawaharlal Nehru University, Delhi. Please, sir. Now, may I request Professor Jayanti Kasle Ma'am, Dean of Faculty and Director of Agroeconomic Research Center at Gokhale Institute, to kindly felicitate Shri Vivek Johri ji, former Chairman of Central Board of Indirect Taxes and Customs, currently serving as the Senior Advisor on Indirect Taxes at KPMG. Please, ma'am.
We now invite Professor Lalita Gauri Kulkarni Ma'am, Associate Dean of Research, to kindly felicitate Professor Ramesh Salyan Sir from the Center for Economic Studies and Planning, Jawaharlal Nehru University. We now request Professor Naresh Bodke Sir to kindly felicitate Professor L.C. Malaya from the School of Economics, Center University of Hyderabad. Please, sir.
We extend our heartfelt gratitude to all our esteemed guests for sharing their time, expertise, and perspectives with us today. Your presence has truly enriched the deliberations of this conclave. As we explored the evolving landscape of GST, it is our privilege to hear from a leader who has played a pivotal role in shaping India's indirect tax administration. It is indeed a matter of a great honor for us to have with us Shri Vivek Johri ji, former chairman of Central Board of Indirect Taxes and Customs, currently serving as the senior advisor on indirect taxes at KPMG. May I please request sir to kindly deliver the inaugural address. The stage is yours, sir.
Very good morning to all of you. Professor Makandas, Honorable Vice Chancellor, Gokhale Institute, Professor Pandit, Honorable Vice Chancellor, JNU, other dignitaries on the dais, my fellow speakers and panelists, faculty members and students, ladies and gentlemen. It gives me immense pleasure to be here this morning in the hallowed precincts of this prestigious institute to deliver the inaugural address at the National Conclave on the Goods and Services Tax, a topic that has captured the imagination of diverse stakeholders such as policymakers, economists, tax practitioners, and the common man in India for well over a decade and continues to do so. I'm very grateful to the Gokhale Institute for giving me this privilege. I count myself very fortunate for having been closely associated with GST in India right from its conceptualization, design to its implementation and practice. I think my job for the day would be accomplished if I lay out the backdrop or the context for today's deliberations. The idea is to provide perspective on where we are with GST today and some of the imperatives that have driven us. Being an insider, I shall obviously provide an insider's view and refrain from being too technical, recognizing that there are students in the audience. Being in the city famous for the Film Institute, it would help if I were to use the popular cinematic tool of flashback. This is essential because the future is invariably a product of the past. And what we are out to discuss today, as I perceive it, are the ways and means of achieving convergence between the structure and design of GST and the impending goal of Viksit Bharat. So we should end the day by an assessment of whether GST in its present form, that is GST 2.0, is aligned to or compatible with this larger goal. And if not, what about it needs to change? Most would agree that the advent of GST in our country has been truly transformational, both in its scale and depth. There was wide acknowledgement that transition from the earlier, multi-layered, complex, and economically inefficient structure of indirect taxes was badly needed, despite reforms such as the introduction of service tax at the center and the switchover from sales tax to the value-added tax in the states. In a sense, these reforms had prepared the cultural and administrative soil for the adoption of a full-scale GST. Yet, there was a fair amount of skepticism whether the transition could actually be realized, and if so, in what time frame. Many, including few in the establishment, saw it as a flight of fancy. The task was indeed quite daunting for a variety of reasons. Cobbling a consensus on the concept, design, and operational details between the center and 28 states, the count at that time, and then among states with diverse political leanings and economic interests. Creating an appropriate legal architecture, starting with the Constitution, without compromising its basic structure. I do recall at that stage, there were very interesting discussions and dialogue about what is the best way to adopt GST. Should it be through agreements between the states and the center, because the states were being asked to give up their fiscal sovereignty? Or should it be through some other means? Should it be through entries in the concurrent list? Should it be through, insertion of new articles in the Constitution? So these are all, topics for discussion, and all options were considered legally and otherwise before a decision is taken. Convincing the states to dismantle their legacy tax systems, some with very peculiar need-based features such as octroi, entry tax, purchase tax, without jeopardizing their revenues. Making an appropriate choice of models. So I do recall at that stage, several models were explored all over the world. There's the European model, there's an Australian model, New Zealand follows a different way of implementing a GST. Canada, which is quite similar to India in terms of its federal features, was another one. So do we adopt one of those models, or do we come up with something of our own? Putting in place an altered administrative structure both at the center and the states. Addressing the concerns of businesses and taxpayers about the level of compliance burden. There were concerns that the onset of GST would bring additional compliances. Safeguarding the socioeconomic impact on equity, growth, and inflation. Besides, what made it more complex was that the switchover was going to be irreversible. It took years of painstaking deliberations, negotiations, as well as statesmanship for a consensus to be forged. The critical success factors were the creation of a constitutional body like the GST Council, its healthy convention of taking decisions by consensus, equal voting powers to all states, and eventually the revenue guarantee that was promised to the states. Was the outcome perfect or the best? Maybe not in all respects, but it was what the political economy of that time permitted. And at least in some critical aspects, it was also quite innovative and bold. Instances being the integrated GST model for interstate supplies and a fully IT-driven digitalized system right from its inception. These are some features which many developed economies and jurisdictions in the world are adopting now. So in Europe, currently they're discussing VAT in the digital age, which is their version of GST 2.0. And they're implementing, large-scale digitalization, adoption of electronic invoices as part of that. So these are things which we had already thought of when we introduced GST. Also, it was not an imitation of any other prevalent model, but something born out of our own genius and thus suited to our needs. Broadly speaking, I would divide the post-GST period into two phases. The first, between 2017-18, to 2021, I would call the stabilization phase, which was devoted primarily to implementation challenges and resolution of day-to-day operational issues. This was also a period of learning and quick course correction. The implementation committee set up by the GST Council was authorized to take decisions on a day-to-day basis for troubleshooting and smooth implementation, and it did so. The Council itself stepped in on several occasions to iron out the creases and provide relief, mainly to ease the compliance burden, as well as to dispel the perception that GST imposed a heavy tax burden on the common man. The overarching concern that determined the rate structure for GST was revenue neutrality. The rates initially adopted were thus based on the combined incidence of central and state taxes on a product or service pre-GST. Principles such as equity or ability to pay were not necessarily applied in each and every case. As such, the rate structure for GST has been a subject of constant review and recalibration so as to remove anomalies, correct inversions, and contain disputes. During the stabilization phase 2, rates were recalibrated downwards on many goods and services, especially those in the demerit bracket of 28%. Annual turnover thresholds were doubled to extend the benefit of GST exemption to a large number of small suppliers for whom the compliance burden was perceived to be very high. A composition scheme was also introduced to provide a simplified regime to small taxpayers on an optional basis. The refund procedure for exports was streamlined so that a single authority, either central or the state, could process claims in full. The dual GST model, although suited to our quasi-federal structure, had clear adverse implications for taxpayers who are required to face two tax administrations simultaneously, especially in the realm of disputes, audits, and investigation. This continues to be a point of criticism, and its streamlining would be an important institutional reform. Simultaneous implementation of GST across the country meant that the compliance requirements such as migration of existing taxpayers, enrollment or registration of new taxpayers, and issuance of transaction-level documents, namely the invoice, commenced immediately. Even though an independent professional entity, namely the GST network, GSTN, was created to put in place the IT infrastructure, it was difficult to accurately assess the size of the taxpayer population and thus scope its scale. As such, this period saw occasional glitches and outages during peak return filing. With the IT system still in nascent stages and deadline for the first return cycle approaching, the original return design, which comprised of three GSTR 1, 2, and 3, had to be replaced with a stopgap version comprising GSTR 3B. The legal obligation filing 3 monthly returns was perceived as burdensome, especially by small taxpayers who also do not have a very smooth filing experience owing to technical glitches in the system. The system of electronic invoices was introduced initially on a voluntary basis for B2B transactions from January 2020 and made mandatory for taxpayers with annual turnover exceeding 100 crores with effect from 1st April 2020. In brief, this phase witnessed an iterative process of alignment of GST rates, law and procedure, as well as IT systems with stakeholder expectations and the removal of anomalies. While this alacrity in tweaking the design showed responsiveness on behalf of the Council and tax administration, it also meant an enhanced compliance burden for businesses which had to constantly keep pace with these changes. And this itself became a point of criticism. Although the gross revenue collections during this phase yielded a buoyancy of close to 1, the annual rates of growth fell short of 14%, the rate assured to the states. This generated some despondency about the revenue productivity of the new tax, especially among the states, even though the collections from compensation cess were sufficient to bridge the revenue gap for deficient states. This changed adversely in the financial year 21, which was when the COVID pandemic struck, and there was a meltdown in economic activity leading to a very sharp drop in revenues. And if you recall, the government was not able to collect adequate revenues through the compensation cess to be able to compensate the states because the center and the states were both suffering from the sudden drop in revenue, and they had to borrow from the Reserve Bank to finance that gap. Another feature of this period was the use of nudge, both by the central and state tax administrations, for both expanding the taxpayer base and improving the return filing discipline. This strategy achieved good results. In terms of expansion of taxpayer base, this period saw a doubling in the number of active taxpayers from 60 lakh in July 2017 to about 1.25 crore by March 21. Return filing discipline, which was good to begin with, improved further. By March 21, the percentage of GSTR 3B, that is the payment returns filed by the due date, had already crossed 80%. However, misgivings about the capacity of the IT backbone and infrastructure to support the volume of return filing lingered amongst taxpayers that continued to report outages and delays. Towards the second half of the stabilization phase, concerns had arisen about evasion and abuse of GST by means of registration of bogus entities, bogus billing, and passing on of fake input tax credit. In fact, in the earlier batch of such cases, attempts were made by unscrupulous elements to even monetize such fake input tax credit through the export of high-rated items such as automotive components, tobacco products, etc. By now, the central and state tax administrations had commenced enforcement functions and started to unearth such cases. In financial year 21 alone, a total of 12,596 cases of evasion involving a GST revenue of about 50,000 crore were detected. This was in addition to almost 18,500 cases already detected from the time of introduction. This brings us to the period from 21-22 till now, which I would call the consolidation phase, and in which GST started moving towards maturity. One of the early developments in this phase was a significant upgrade of load-bearing capacity of the GSTN system through fresh investments in hardware and software. This was accompanied by measures to prevent system outages and SOPs to receive and resolve taxpayer grievances with respect to IT glitches, effectively and timely. Soon these became very infrequent, resulting in remarkable improvement in taxpayer filing experience. Having put one of the major points behind them, the Council and administration turned their attention to curbing evasion and improving compliance. One of the primary motivations for introducing GST was to improve revenue collections through the integration of a plethora of taxes and the taxpayer base. Moreover, the states were concerned that compensation period was going to end soon. Please remember that compensation was promised for the initial 5 years, which were coming to an end in March 22. Thus, shoring up compliance became an evident priority. In a bid to attract new taxpayers into its fold, in the initial phase, the entry barriers to GST were kept low, so that in most cases registration was almost automatic, and only in a few instances physical verification of the new taxpayer's premises was resorted to. It was now evident that while expansion of the taxpayer base was desirable, it was equally important to ensure that the taxpayer base is clean, comprising honest taxpayers, and does not allow entry to fly-by-night operators whose only objective was to generate and inject bogus input tax credit into the system. Apart from aggressive enforcement drives carried out in a coordinated way by the centre and the states, the strategy entailed a mix of legal and administrative measures. A very important development in this phase was the extensive use of technology and data analytics to monitor taxpayer behaviour, identify deviants, and to cull them out of the system. Tighter verification checks such as Aadhaar authentication, physical verification of premises, and geotagging of premises were used before new registrations were permitted or risky ones allowed to continue. Based on this exercise, the registration of a large number of risky taxpayers was suspended or cancelled, toxic input tax credit was blocked, and the scope for passing on bogus input tax credit was contained through sequential filing of returns. Technology-based solutions were also deployed in other areas. In order to create a digital footprint of taxable supplies for goods, the issuance of electronic invoices for B2B supplies of goods were gradually universalized. This was achieved by progressively lowering the turnover threshold of taxpayers to which this requirement applies. To deal with evasion in B2C supplies, a pilot project of e-invoicing has also been launched for very large taxpayers. E-invoicing has also become a significant facilitation tool inasmuch as it enables the construction of GST returns and their auto-population so that the taxpayers only need to verify and file. To monitor that e-way bills generated by taxpayers cover genuine supply of goods, RFID data on movement of vehicles is being used. Just to recall, there was misuse of the e-way bills facility also, in as much as there were many cases that were detected where goods were being sent to a particular supplier while the invoices were going to somebody else for just availing input tax credit. So this RFID data, which was used for tracking of vehicles, helped verify some of the claims that were being made. It is appropriate to call the post-2021 period the consolidation phase, also because conscious efforts were made to strike a good balance between enforcement and facilitation. The latter is also an important means of improving compliance, especially for honest taxpayers in need of support and guidance. The GST Council has been very proactive in this period in issuing circulars and clarifications on contentious issues with a view to resolve existing disputes, as also to prevent fresh ones from arising between the tax administration and taxpayers on taxability, rate applicability, availability of exemptions, classification of goods or services, and so on. Despite these clarifications, a significant factor contributing to the generation of disputes was the complex four-tiered rate structure of GST, especially for goods. Barring special rates, there were 4 rates of 5%, 12%, 18%, and 28%. The multiplicity of rates not only created arbitrage opportunities for businesses, but also created divergence in rates among similar goods or substitutes, thereby generating disputes. I'm sure those of you who follow social media would be familiar with the controversy of different rates being applied to different types of bread, rotis, parathas. That was something which was quite, much talked about on social media at one stage. So this was an example where products which are similar or substitutes were being charged at different rates of tax. This structure was also inefficient because of the existence of inversions whereby a finished product attracted a lower rate than that applicable to its inputs. This created blockages in the smooth flow of input tax credit in the value chain, causing cascading, that is tax on tax, one of the problems GST had set out to resolve. In the absence of an efficient refund mechanism to enable taxpayers to draw back this accumulated credit, the industry experienced working capital blockage. There was also a perception that a rate of 18% on items of mass consumption was too high and induces evasion. The package of reforms titled GST 2.0, introduced on 22nd September 2025, sought to address this issue by reducing the number of major rates to two, that is 5% and 18%, with a high rate of 40% applicable to very select demerit goods such as tobacco and tobacco products. The merit rate of 5% has been applied to most items of mass consumption, including processed food products. This broad banding of rates for the same class of products would reduce classification disputes. Many inversions, such as those for fertilizers, agricultural tools, and implements and textiles, have also been fixed by equalizing rates. The lowering of rates on final consumer goods, while keeping their intermediates and raw materials at the standard rate of 18%, has generated fresh inversions that are sought to be addressed through a speedier, hands-free refund procedure. In terms of outcomes, the consolidation phase of GST has produced much better revenue productivity, with monthly collections of gross revenue crossing rupees 2 lakh crore in several recent months. The taxpayer population has grown further to 1.53 crore, and return filing percentage remains steady at about 80 to 85%. GST 2.0 was undoubtedly a critical rate structure reform, while easing considerably the registration and refund processes too. Its primary focus, however, was to relieve the tax burden on the final consumer. There are further structural and institutional reforms or improvements that are essential for aligning GST with our Viksit Bharat needs of fairness, transparency, and efficiency of the tax system. Some suggestions that I am placing on the table would be base expansion to bring petroleum, real estate, and other remaining sectors under GST. Overhaul of input tax credit provisions so as to remove remaining blockages in its flow, owing mainly to inversions, not just in the case of goods, but also services and capital goods that continue to be at 18%. Eventual convergence to a single rate structure. Rationalization of the dual administrative structure so that a taxpayer does not face multiple authorities for compliance verification, such as investigations, audits. Possibility of further reducing the compliance burden through use of technology. More academic research, and this is something that's very, very topical and relevant here. On the impact of GST on economic growth and equity, I don't think we have too many studies. I do recall seeing a study done recently by an IPFP on whether GST is a progressive or a regressive tax. The common perception of a tax like GST, which is a VAT, is that it's normally regressive, which means that it imposes a high burden on people who are in a lesser income bracket. But surprisingly, the NIPFP study found that the Indian GST, because of the differentiated rates between essentials and other goods and services, is mildly progressive. My hunch is that with the adoption of GST 2.0 and the lowering of rates on most items of common and mass consumption, this progressivity would have increased further. So we need more academic research on the impact of GST on economic growth. I think there's just one study that I've come across by this very institute, which tried to track the impact of GST on economic growth, but there's not much evidence that's available to my knowledge. And the other important aspect, which I think we need to study in much greater detail, and this would be of interest to those who are multidisciplinary in terms of politics and political science and economics, would be the institutional mechanism of the GST Council. It's a very innovative feature of the Indian GST. I don't think anywhere else in the world is that kind of does that kind of a body exist. So has it been successful? What can be done to improve its decision making, to speed it up, etc. And also the impact of GST on Indian federalism. The jury is still out on whether the shift in revenues that was to occur based on the destination principle to consuming states from producing states, whether that has occurred or not, to what extent, the state finances are positively or negatively impacted by GST also needs greater study. So I look forward to these deliberations on these and many other aspects of the conclave, at the conclave today. Thank you very much.
Thank you so much, sir, for sharing your valuable insights on the future of GST and India's tax ecosystem. Now, we would like to welcome Dr. Nitin Kareer, sir, former Chief Secretary, Government of Maharashtra, currently serving as a chairman of the Maharashtra State Finance Commission, to kindly join us, sir, on stage. We would also like to request Dr. Ranjit Patnaik, sir, to kindly felicitate him. It is now our privilege to welcome Professor Santishree Pandit ma'am, Honorable Vice Chancellor of Jawaharlal Nehru University, New Delhi, an academician and a scholar with extensive experience in teaching, research and public policy. We are truly honored by her presence today, and we warmly invite her to address the gathering on GST as a critical geo-economics driving tool of India, aligning with Viksit Bharat at 2047. Ma'am, we request you to kindly share your thoughts with us.
सगळ्यांना माझा नमस्कार. Respected Professor Umakant Das, Dr. Nitin Kareer, Shri Vivek Johri, Professor L.C. Mallayya, Professor Ramesh Salyan, the convener, Professor Lalita Gauri, and the coordinator, Dr. Rimli Basu, all the speakers who have come here, students, faculty, ladies and gentlemen. Let me at the outset say maybe I'm the only woman and the only person from political science. I'm here proving that you economists may make all the rules, but like Dr. Kareer and politicians decide what should be implemented. See the war in West Asia. Economics is not the main cause. It is politics. So what I'm trying to say is, I want to bring in Susan Strange, who was a great economist of the London School of Economics. She warned that those economists who don't understand power are half-baked. And those political scientists who don't understand money are stupid. So if you want to understand power, you have to follow the money trail and vice versa. So political economy has become very important. It is interdisciplinary. None of us can sit in our own what to say wells and say, no, I'm only going to do this, I'm not going to do that. Because even society comes in. So I'm trying to bring in the other side. Let me at the outset thank especially the Vice Chancellor and the convener of the Gokhale Institute of Politics and Economics. Sir, let me tell you, I have been teaching at the Savitribai Phule Pune University for nearly 3.5 decades before I went to JNU. So Maharashtra is my Punya Bhumi, though I come from the state of Tamil Nadu. And Gopal Krishna Gokhale, one of the greatest freedom fighters and constitutionalists, and my father was very closely associated with the Servants of India Society in Chennai. So there was Mr. Venkatraman, who was a long member, and we had it. And here, my mother-in-law's elder sister taught at Gokhale Institute, Dr. Kumud Pore. So I have a very close, I thank you once again. And I think this has been more or less envisaged like the London School of Economics and Politics. So I'm happy that you have brought in some amount of reality into economics. Thank you so much. Thank you for inviting me to the National Conclave of Next Generation GST and the Road to Viksit Bharat 2047. I congratulate Gokhale Institute because it's very important that thinking should move out of Delhi-centric thinking. I think other parts of the country, ideas should come in, and I believe that diversity is better than a unified or uniformity. So that I congratulate you, and these ideas may be very different from what people in Delhi think. And this would greatly help people to do. In this conclave, I would rather try to look at tax reform as a pillar of India's economic transformation, especially India's long-term national goal of Viksit Bharat scenario, the transition from a developing economy into high-income, globally competitive economic power. Sustaining this trajectory requires high economic growth over multiple decades, deeper industrial capacity, and stronger institutions and governance frameworks. Economic reforms in India have historically moved in stages. I remember the 1991 liberalization that opened up the economy, and then digital governance reforms, which rightly Shri Vivek Johri, who set the pace before me and made my job much easier. And also the GST in 2017 unified the national market, though I come from a state which always opposes any unification, that is Tamil Nadu. We don't like anything that is one. We like pluralism. So we always dissent on everything. And dissent is good in a democracy. It makes it much more healthier. The emergence of next generation GST 2.0 reflects the maturation of these reforms. Rather than being seen as a tax instrument, GST is now within a broader reform ecosystem, shaping the domestic markets, manufacturing competitiveness, digital governance, cooperative federalism, and also, in a sense, it represents a key institutional pillar in India's journey towards economic ambitions in 2047. So I think another reason you called me is the finance minister is my senior. Nirmala Sitharaman is from JNU. So, and the external affairs minister as well. So I think maybe you thought that I would bring in the practical, Sir would bring in the practical, how the IAS officers and they would implement it. But I can tell you the political implications of how politicians will look at economics. We don't go into all your number churning and other things. We just want to see how the impact is, it at least for public perception, which rightly Professor Johri says, is not very positive because of the increase of burden on the few. The development challenge is basically economic history shows that many countries achieve rapid growth but later stagnate before reaching high income status. This phenomenon is often referred to as the middle income trap. India's long-term development strategy is shaped by the need to avoid such stagnation. Key structural priorities the reform agenda has is expanding manufacturing capacity essential for employment generation, strengthening domestic demand, improving productivity across subsectors, formalizing economic activity, and broader economic transformation also requires sectoral rebalancing. And then agriculture still employs a large portion of the workforce. Industry and services contribute a greater share to GDP, and long-term development therefore involves movement of labor towards higher productivity sectors, stronger linkages between manufacturing and services, expansions of industrial ecosystems. Within this structural transformation, tax reform plays a stabilizing role, shaping incentives across the economy. And if you see the simplification and rationalization of GST 2.0, One of the defining features of the newer GST framework has been rate rationalization. Earlier GST structure, 4 primary tax slabs and numerous classification disputes, as rightly said by Shri Vivek Johri. The reform effort has enforced on greater clarity and predictability. I would ask you economists, did you predict the war? You didn't. I think we would have predicted it better than you, because we could predict Trump and Netanyahu. And we are yet to stop that. And this war has had huge economic implications. So whatever you predicted when you did not take this into contention will not work for us again. So we have not only domestic challenges, but we also have international challenges. So because of the world is extremely connected, and also greater clarity and predictability. Broader changes, consolidation of tax slabs, clearer characterization of goods and services, reduction of grey areas in classification. This simplification aligns with wider economic goals, reducing friction with supply chains, improving business predictability, enhancing India's investment climate. The other issue that I want to raise before most of you who are economists here is that the emphasis on clarity reflects a wider philosophy within economic reforms. Stable and predictable creates confidence for investment and enterprise. We also have a lot of structural bottlenecks in production. Industrial growth requires efficient supply chains and smooth financial flows. One structural problem identified with an earlier GST implementation was the inverted duty structure. The nature of the problem, some industries faced higher tax rates on raw materials than on final goods. This created accumulation of input tax credits. And this created a lot of, issues that came in, and I hope you economists will deal with it. The GST reform within key economic sectors, mainly the areas that we would have to look into, as rightly said, was infrastructure and construction, mobility and industrial production. And on the issue of healthcare and social welfare, as a political scientist, our implications are, what are your reforms doing to society? Like we say, the path to hell is also paved with good intentions. You might want to do something good, but the end result may not work so good as it does. So GST reform has also intersected with social policy priorities. Healthcare affordability and financial production are central elements of India's development goals. Policy orientation in this area should include expanding access to health insurance, strengthening pharmaceutical manufacturing capacity, improving affordability of essential medicines. India's pharmaceutical sector already plays a major global role, and policy support continues to strengthen its domestic and export capabilities. Digital governance and the evolution of tax administration. This is very good, but the problem, sir, with digital and AI systems infrastructure has GST itself was built upon nationwide digital platform. The digital state capacity is visible in initiatives across finance, welfare delivery, and public administration. But the questions are also that, is there going to create haves and have-nots, digital haves and have-nots? Because we do have a bridge. Certain states have done well and certain states have not done so well. During COVID, let me tell you, sir, when we were doing online teaching, even a city like Pune, students about 10 or 20 kilometers away, they couldn't even get the signal. They had to sit on top of trees or something. I told them, please forget the lecture, you come down from the tree. I don't want you to fall off. So the question is, how are we going to access all this? It's very well when you do it on paper sitting in air-conditioned rooms and we decide. I think going down to the grassroots is extraordinarily important, but at the same time, I'm not running down digital governance. Let me tell you, with many people, the idea of AI and increased technology is the violation of privacy. So the question is, where are we as a democracy going to draw that line? Because India is a democracy, whether you like it or not. We cannot impose things like China or anybody else. So we will have, where are we going to intrude into these spaces and economically say that it's going to benefit. And finally, sir, I just want to end on saying that as a middle class Indian citizen, I always feel that the middle class faces all the burden, and especially the salaried class. Because in March, I have the income tax fellow telling me you are less by 1 lakh, by 20, and we are so scared of it, we pay it also without even questioning, because we don't want any headache. So, whereas you have large sectors like agriculture, which is not at all taxed. So many times I feel I should give up my job, or either become a beggar in Bombay, or become an agriculturalist, because my income doesn't come under your vigilance. So this is something I think you will have to convince the middle class when you do your economic reforms. And also in the budget, I think this time the middle class got just nothing. And please remember, we are the thinking class, we are the chattering class, and we are also the class that determines India's narrative architecture. Thank you once again for giving me this opportunity. And I would finally say that I'm happy that Gokhale Institute also has moved from pure economics and number crunching and statistics to realism and to implementation and to the problems of political policy making, decision making, as well as social complexities in a very diverse country like India. Once again, I am for diversity. Somehow, sir, I don't like one tax, one nation, one language, one nation, one religion, one nation, one race, one nation. I believe in diversity. The more the colors, the more beautiful we are. And I think Hinduism stands for diversity. I will end with the Upanishadic saying, Ekam Sat Vipraha Bahuda Vadanti. There may be several paths to truth, and all are equally good. So thank you once again. Jai Hind, Vande Mataram.
Thank you very much, ma'am, for a thought-provoking address. Moving forward, it is our privilege to introduce Dr. Nitin Kareer sir, former Chief Secretary of Government of Maharashtra, currently serving as the Chairman of Maharashtra State Finance Commission. A distinguished administrator with decades of public service, sir has played a pivotal role in shaping governance and public finance in the state. May I request sir to share his views on reimagining GST pathways to development in India. Please, sir.
Good morning. It's great to be here. I normally don't do two things. I don't do PowerPoint presentations, and I don't do keynote addresses. Primarily because on a point of principle, I believe in participation, and keynote addresses are completely an antithesis to a participatory discussion on any subject, as also PowerPoint presentations. So these two things I normally avoid. I also avoid jackets, blazers, and stuff like that, but that's not a matter of principle, and I think I will need to rethink about those, because the air conditioning systems in all halls have started becoming much better than what they used to be. It's distinctly cold. Back to back to why I accepted then, if I feel so strongly about keynote addresses, it's, growing up in Pune, growing up being a college student in Pune, of course on a STEM side, not on the more esoteric politics, economics, political economy type of thing, but being from the STEM side, moving around the city, one used to look very starry-eyed at Gokhale Institute, and bearded men, some of whom have lost their beard, of course, but bearded men doing research on subjects that we had no idea about. So, and then if you get invited from Gokhale Institute, you don't say no, you don't think, you keep aside your issues and say that, okay, of course I'll come because this is a great opportunity. It's difficult for me to talk to you about GST and the path to development because all of you know so much about, and all of you, of course, and the first line there, know so much about GST, so that I really don't know what I am going to speak about. Everybody here knows quite a bit about it, but I'm going to dumb it down to my level because LCMs are important. STEM students have this whole big fixation on mathematics and mathematics equations and mathematic numbers and mathematics theories. So LCM is a great one. I will come from the context of having some experience on all three forms of taxation. So I am of those fortunate few who have worked in all three forms of taxation. I worked in the early 90s in the erstwhile sales tax system, which we thought at that point of time had several problems. We said the sales tax system needs to be revamped, the sales tax system has these problems, and the way forward would be so and so. And then 10 years down the line, I came back to the tax department to help with the implementation of a VAT system. That for some reason got delayed and all that, but ultimately the VAT system was implemented in various states, including Maharashtra. And then I moved back, did other stuff. And 10 years after that, coincidentally, these are all 10-year, decadal gaps really. I came back into the tax system to work on the implementation of GST. Those were the early years of GST deliberations, 2013, 2014, 2015, when the rules, when the law itself, when the procedures, all those were being set by teams of officers across the country. So that's really the type of exposure that I am going to be speaking on the basis of. The hypothesis that I want to present before you is that a good tax system is important for the nation's development. That's really it's a no-brainer possibly, but that's the hypothesis that I want to present before you. To begin with, we must know that taxes are important. I mean, we don't like taxes. We hate taxes. Sometimes we dislike taxes, but taxes are important. Taxes are important because they are a revenue of the government. The government needs those revenues for doing welfare schemes, for doing infrastructure, for doing whatever. And we can go back to, how taxes are permanent like love, maybe. John Donne, John Donne is the priest poet who spoke about how tax is like love. I don't know where he got the correlation from, and I'm not going to quote John Donne, but John Donne otherwise is the person who wrote about No Man is an Island. So that's the guy that I'm talking about. So it's important. Tax once levied is very difficult to remove from the system because it gets entrenched. Tax changes behavior of the people who are involved in the economic activities. So tax is important. The form of tax is important. The way it is levied is important. The rate of tax is important. All these things have bearing on the economic activities. Taxes alter prices, therefore they affect our lives. Taxes alter the resource allocation. Taxes determine the incentives to work or not to work, or to save or not to save, or to invest or not to invest. Everything really or largely depends on taxes. And therefore, though no one really likes to pay tax or likes to talk about tax, tax is a dry subject, but tax is important. So that's the first issue that I want to highlight, is that tax is important for our day-to-day lives, like political economy is important to understand war more than anything else. Like that, tax is important. The importance of tax is to be understood because it affects each aspect of our lives. Direct, indirect. Direct is not our purview. I wish it were, because that's something that all of us would have a lot to talk about, because it affects us the most. But we are here to talk about indirect tax, the reform, the biggest reform of indirect tax was GST, a standard invoice credit destination based VAT on goods and services. That's how I would define it. Simple definition, 80% of the countries in the world have VAT, GST, whatever nomenclature that one would like to have. The most notable country not to have VAT is, of course, the United States of America, which has a single point, last stage single point tax. We used to have, 25 years back, we used to have a single stage, but the first point tax on the indirect taxation. The important GST normally, or VAT normally, is a federal tax, except the big exceptions that you talk about, Canada, Brazil, maybe, but mostly it's a federal tax. And the prime objective of GST across the countries has been to increase revenue. That's a big distinguishing factor from the introduction of GST in India from the GST introduction in the rest of the world. GST in India was not primarily introduced to enhance the revenues of the government. That was not the primary objective. The fact that it would was something that people knew, or at least thought it would increase, but the prime objective, the tax rate was decided on something called a revenue neutral rate, which means that whatever was the original tax gain would be protected, not enhanced. Enhancement of revenue was not the objective. So what was the objective? The big objective in India was to unify the multiple indirect trade taxes that were in existence in the country, to reduce the distortions and to harmonize the collections between the state and the center. Just to give an idea, just to give a flavor, 12 taxes were subsumed. And that's a minimum number. About 5 taxes of the center and about 7 taxes of the states, and maybe some more smaller taxes were all subsumed into the GST. So that, I think, is a fundamental great objective that was sought to be achieved and was actually achieved by the implementation of GST. Was not an easy path. Took 17 years of deliberations and consultations to build the consensus. The first report on GST, or the necessity of GST, the report by Govinda Rao, came in 2001. The next one by our own Dr. Vijay Kelkar was 2003. And GST implementation actually happened in 2015-16. So that's the whole journey. That's that much time it took to build consensus, to talk to states, states which opposed, Tamil Nadu, Gujarat, Haryana. These were states which opposed vehemently, and which had because they felt that the sovereignty of the states, the freedom, the fiscal freedom of the states would get affected. Maybe rightly so. I mean, there was merit, obvious merit in what they were asking for, and but the larger interests of the nation finally prevailed. Everybody was brought. Consensus building took time. It took the extreme statesmanship of two finance ministers of different regimes to bring all these disparate thoughts, disparate states, disparate interests together and on one platform so that issues could be discussed, resolved, ironed out, and we move to the next step. Each next step was not really even one step. It was often half a step or quarter step. And eventually we reached a point where GST could be implemented. We have it's a very complex system that has evolved because of these deliberations. We have the SGST, the state GST, we have the central GST, we have the IGST, we have the GST network, we have the GST council, we have the HSN classification which came from the central excise being adopted by everybody, and all this resting on three big pillars of architecture, engineering, and management. The architecture is the design, engineering is the systems, and management is the actual implementation. So that's how the GST systems evolved over time. And GST is now stabilized. We have gone through these two phases. We have understood that it's a system that has obvious merits and benefits to the nation building. However, that's a question that Mr. Johri raised, that is this the best possible tax that we have? And to understand that question, we need to ask ourselves, what are the attributes of a good tax system? Those attributes are actually very simple, and those are not really technical attributes. The tax has to be a simple tax. Essentially, what does a simple tax mean? It means that there has to be a single rate. Ideally, that would be the best. It has to be transparent. Everybody knows. All the players in the system know what the tax rate is. It has to be predictable. All of us know how much tax is to be paid. When is it to be paid? How is it to be paid? So this predictability of the system needs to be built in. The tax system needs to be efficient, which means that the cost of collection needs to be as low as possible. Whether 1%, 2%, 5%, I mean, I'm not going into those numbers. I'm just saying that the cost of collection needs to be as minimum as possible. Obviously, there has to be no cascading. There has to be no cascading means no tax on tax, which was the big problem that we had in the earlier system, that there was a central excise being charged and there was a sales tax being charged on the central excise component as well. And so there was a whole lot of cascading. So a good tax system should not have cascading. There has to be a minimum compliance burden in terms of cost, time, effort. It has to be broad-based, which means there have to be no exemptions. I mean, if you have exemptions, then your base is getting eroded. ITC claims need to be covered in time, because the whole basis, the foundation of a good tax is that refunds have to happen in time. The tax itself should not lead to economic distortions, which means my decision to set up an industry or a warehouse is not based on the tax structure. It is based on some other considerations which make that decision much more effective and efficient. But it has got nothing to do with the tax structure. So if the tax structure allows me that flexibility, then it's a good tax structure. And obviously the tax structure has to be fair. The equity principle is a big principle. So really these are the parameters which determine what is a good tax system. And therefore we ask ourselves, is GST then a good tax system? You said the jury is out, sir.
No, I said what are the gaps?
No, you did say the jury is out also. So we don't know. But that's the thing that we need to examine. Is it a good tax system? And I am going to be a little more provocative here, though I come from the inside and I have been part of this of the tax system, and I understand the nuances of the tax system, and I have also understand the constraints under which the tax system has evolved. So is it a simple tax? I think that's the first question that we have to ask. So obviously it is not a simple tax. It had 5 rates minimum. Now we are down to 3 rates minimum. And 3 is not actually 3 because there are some extra things here and there, something on gold, something on something else, something somewhere else. So there are those other issues. It's not simple. Is there certainty there? I think reasonable certainty. It's still a work in progress. It's still reform in progress. There's still a whole lot of work being done there, but I believe very strongly that it's going in the right direction. Is it convenient? Is it a convenient tax? I think largely for big businesses, for big entities, it's been a great game changer. It's a very, very convenient tax. It has helped smooth out their operations, but for the smaller players, the compliance burdens have been huge, and they are a big irritant in this whole tax ecosystem that we are trying to create. And therefore, on the convenience side, for the smaller taxpayers, I think a lot of work needs to happen. Is there cascading? The tax itself does not lead to cascading. I think so. That's a great achievement. Whatever is included in the tax ensures that there is no cascading further. However, there are all those items which have been left out of GST, which were mentioned earlier. We have essentially petroleum products. We also have real estate, and the cascading. A recent study done by somebody says that the effect of cascading of these other taxes is to the tune of 35 to 40%. And I'm not so sure of the numbers there, but which means because petroleum products are out of the GST system, and therefore there is no value added tax happening there, and there is no input tax credit that you can claim, the total cascading effect is to the tune of 35 to 40%. The number could be lesser, could be more, I don't know. But the fact that there is so much cascading is an issue of concern for all of us. Does it lead to economic distortions? Does the tax lead to economic distortions? I would say very strongly that it does not. The tax in its current system, and especially after GST 2.0, by itself does not lead to any economic distortions. No economic decisions are based on the tax structure. I decide where to set up my industry or my warehouse or my investment based on completely different parameters. And we may have beef about those parameters because states compete between themselves sometimes on a zero-sum game to bring in more investment. But that's not really something that we are discussing today. What we are discussing today is the GST itself, and GST itself does not lead to these economic distortions. So I think on that count, we have really achieved a major breakthrough. Is it an efficient tax? I would say it is an efficient tax. The cost of collection is reasonably low. I don't know the number, sir. Would you know the number? 1%?
Less than
0.6, 0.7. So maybe 0.6 is a good number to take. I don't know why, but 0.6 is a good number to take, and I am sure we are around there. Or anything less than 1% really is a great number to have, because you are spending only 0.6 of what you collect on the collection. I mean, the cost of collection is only that much. So it's a great tax system that has been created. Is there a cost burden? And that's something that I am worried about. The cost burden in terms of delays in refunds or ITC mismatches somehow is a grave area of concern that keeps on coming up in all discussions, leading to a very, very high cost burden that is being placed on the taxpayers. We have moved to a great system. The GST network is a wonderful system set up in the early years of GST. A very dear colleague, good friend of mine, came to head the first network, came from the same background, and he and I coincidentally attended the first training program on VAT at NIPFP in 1995. So that's that's how we all started learning about VAT in those days when sales tax was still being implemented. So Prakash Kumar, who set up the GST network, and it's a great system. However, the ITC mismatches somehow are an issue that we have not been able to resolve completely. We are trying to fix it. I mean, the government is trying to fix it by saying, we will try and give you refunds earlier. We'll try to expedite the refunds. But that may not be the ideal solution going forward, because it leads to, the unscrupulous element getting away with the fake ITC credits being passed on. So the cost burden because of the ITC mismatch is an area that we need to really talk about. What is the way forward then? I mean, if we say that GST is a great system, however, there are these issues that need to be looked at, and unless those issues are looked at, GST itself, the tax system itself, will not be an ideal pathway for the development of the nation. So if that's really the thing, then we need to talk about what is the way forward for GST, which would essentially be GST 3.0. We already have a paper by the Pune International Center, authored by Dr. Vijay Kelkar. And obviously there are other suggestions, and some of the suggestions that also were presented in the inaugural address itself. So that's really the GST 3.0, which is the way forward. And if we are able to go that distance, then that possibly would be an ideal tax structure. And there are about 5 or 6 attributes of this that I can see, and I borrow heavily from the Pune International Center paper here. First and foremost is the unified tax structure, which is a single tax rate. 9%, 12%, 15%, 14%, I don't know. I mean, that's... I love you, ma'am. Below 5%. And if we could take a consensus here, maybe I think that's the number that we could come up, except these 4 people who would have, and maybe you, would have a little different. I would say something around 12% would be a good number to at least start working on, and then try and see how we can bring it closer to 5. But 5 is aspirational, and but then Viksit Bharat is also aspirational. So it's a thing that I just want to digress a bit on this issue, and 5% would be great if the GDP grows phenomenally. I mean, if the GDP growth is like amazing, like a gallop there, then 5% is something that we could possibly definitely look at. But that's that sometimes we need to remember that our tax to GDP ratio has remained more or less stagnant on the indirect taxes. I don't think, and I don't have the current numbers here with me, but GST to GDP is about 7%, which means it was at about 6% and it has gone up to 7%. So I think that's a great insight, because what it means is that the revenues have actually grown, though revenue growth was not the stated objective of GST, but revenues have actually grown much more as compared to the much more than the growth of the GDP, so to say. I think that's a great thing. But if we want to have a lower tax rate, then maybe and to maintain the ratio there, to maintain the revenues there, the GDP will have to grow much faster. The second bit here on the way forward would be no exemptions. No exemptions at all. Therefore, there will be no issues about ITC. Those inverted tax structures, ITC is not available because the final product does not have any tax on it. It is an exempted good. Exempted services, it is so complicated. If the municipal corporation gives out work of municipal solid waste treatment, for example, there is no tax on it. There is no tax on it. But if the contractor gives it to a further subcontractor, then there is tax on it. Now, how does one reconcile these things? I mean, so these problems like these come in because of the exemptions that are given. We try to figure out a revenue neutral rate. If we try to figure out a budget neutral rate, maybe we may be able to do away with these exemptions, is what I feel. The third bit here is about the sectoral expansion, which has already been mentioned. Alcohol for human consumption needs to come in. Petroleum products need to come in. There is dual taxation. There is the central government taxing the petroleum products, state governments taxing petroleum products, and this needs to go. This needs to come into a single system. But why does it not happen? It does not happen because states are not yet in a position to trust the system. I think that trust needs to be built over time. And we may say that the GST Council is a great structure. It is indeed. But the voting patterns in the GST Council, the voting strengths in the GST Council somehow mean that really the states would not be able to go forward on what they want. So there is a little trust deficit that I feel that needs to be worked on. And if that is worked on, if that feeling comes into the states that, okay, we will give this up, center is giving this up, but net result is that all of us will gain, that little philosophy. And I think that's something that was a big part of the exercise that was being done in 2013, 14, 15, 16, those years. I think somehow in the intervening years, that dialogue, that effort seems to have waned. Maybe because the tax had already come in, maybe the constitutional amendments had come into place, maybe implementation had started, so there was no no felt need to continue discussions and deliberations and dialogue on those grounds. And I think that's something that needs to be brought into focus. Without that, the sectoral expansion is not going to happen. The fourth issue here would be the simplification of returns. Are we able to look at annual returns, for example? Without compromising on the ITC credits being available on a monthly basis, are we in a position to look at annual returns only. Now that's something that could make life easier for 80% of the taxpayers. Out of that 1.5 crores, 1.3 crores possibly would be small people. And small people meaning less than 50 crore turnover people. That's where we are looking at small as a definition. So it would make life so much easier for them if they were able to do annual returns, but still continue to get benefit of the ITC on a monthly or whatever, or why monthly? Maybe real-time basis. Going forward, I mean, obviously it's aspirational, but that's what we are all looking for. So if that happens, then maybe. So, and then the use of AI for compliance, pre-filled returns, ITC lock-in, the moment somebody pays his tax or claims his credit, the passing on of the credit, all those things can happen automatically at the time of the transaction itself. And that's the direction in which we may need to go. We also have integration with the digital platforms. So we have an entire digital economy outside and an entire GST tax system here, but the two do not really talk to each other, and they have started talking to each other of late, but the result has been detrimental detrimental to the digital economy, because based on the e-commerce or the digital commerce platforms, the GST systems have started issuing notices to people, especially in Karnataka, also in Maharashtra, and therefore people who were heavily invested in, not monetarily, but as business practices, heavily invested into digital commerce, have started taking a step back. And I think that's a cause for concern. So how do we reconcile these two things? How do we use digital economy to increase the tax base, but at the same time simplify compliance, detect fraud, expedite refunds, and improve audit? So that's really how we can use AI, machine learning, data analytics. So that's really the way forward. The last bit here is on the MSMEs, and I think that's the big part that is still missing in the jigsaw puzzle that GST is all about. They are the larger number. Not only are they the larger number, they are the ones who actually give local level employments and local level entrepreneurship, and therefore they are the ones who are able to drive the economy at the smaller centers. They are of great importance to the nation building as an objective that we are looking at, and therefore we need to figure out ways of dealing with MSMEs, simpler compliance. We spoke about annual returns, better composition scheme. I mean, why is composition scheme so complicated? Why do people not want to go into a composition scheme? Because they are not able to pass on credit. Why not we move towards a composition scheme which is able to give some form of input tax credit to the next person in the chain? People today unnecessarily want to come into the GST system because they need the ability to give credit. The big guys want the ITC credit. Without that, they do not want to deal with anybody. And therefore, these smaller people are unnecessarily forced into the system. They are clogging the system. Singapore, I am told, has an equivalent of 5 crores threshold? 5 crores. Equivalent of, in their currency, of course. And we are looking at 20 lakh threshold. There is something missing in this whole picture. Why are people coming here? And those people are not even paying the tax really. 0.6%, I'm coming back to that number, sorry. 0.6% of of the taxpayers pay 45 to 50% of the tax. That's a number. That's a real number. No. I am telling you, you are awesome. But that's for the direct tax. But on the indirect tax, 0.6% of the taxpayers are paying about close to 45% of the tax. So why are these 80 lakh dealers clogging the system? Why does the tax administration have to run after them for compliances? They are the ones who are not able to file their returns because they do not have the technical wherewithal to do it. They are heavily dependent on some chartered accountant sitting somewhere who is going to file returns for them. So we need to figure out a better composition scheme for them, maybe lower penalties. I mean, a lot of them are not able to pay taxes because they are not paid by the big guys. I mean, they are smaller units supplying to the big players. The big players, on an average, are looking at giving them payments not before 60 days. Whatever the law may say. I think there is a law which says 30 days? 1 month? 45 days. But I don't see anybody giving payment before 60 days. Now, what is this man supposed to do? A small entrepreneur who is actually supplying to a big guy, the big guy is going to give him money only after 60 days or 90 days. But he has to pay to the government because payment to government is based on the invoice. It's a great system. I mean, I have no problem with the system itself because it has to be invoice based. But what happens to this person whose working capital is getting locked up? He's not going to be able to charge extra from the other person there because the market is controlled by that big guy. I mean, just to give an example, the erstwhile telco, now Tata Motors, would control the destiny of about 2,000 small entities all over the district. They are completely, I mean, what choice do they have? They will accept money after 90 days or what? They will have nobody to supply to. So they have no choice. There is no choice here. And therefore, we need to figure out something to do, maybe lesser, maybe reduce the penalties. Much faster ITC refunds for at least the smaller people. Some system of auto return filing. So if all these things are done, and I think that's really the way forward. Do we have somebody, some other country that we can look up to? Can we say that this is the best in class? Unfortunately, in our class, I don't really see anybody better than us in class. Now, that's a problem because of the complexities that we have as a nation. So, in our generation, and that's no longer true now for the younger people here, in our generation, we had every class had 2 divisions. Okay, so the A division and the B division. And so if you say best in class in A division was a 90% guy, and best in class in the B division would be maybe around 60, 65, 70% type of person. So there is no real benefit for us to look at best in class for us, because we need to look at somebody who is the best. And what is that best? Classically, the literature talks about New Zealand as having the best GST systems, classically. It's very difficult for us to look at New Zealand. It's a small little country there, a small little island there. So completely everything is sort of controlled. The other good tax system is Singapore. Both are almost identical nations there. So it's very difficult for us to reach there. But can we then set standards that can be emulated by the other countries? I mean, Canada has been trying for a foolproof GST implementation on a federal structure for 25 years now. And I believe they think it's still work in progress. Brazil is going through a whole lot of problems on their own GST system. So for us then, the aspiration is to create a best-in-class that everybody else can then aspire to. And before I come to the last bit of my hypothesis, I want to raise a few other issues. And those are not really critiques of the GST system, because that part I have already done. But I just want to raise some issues for as food for thought. So, is single point tax such a bad idea? I'm just leaving the thought with you. We moved to GST, we moved to VAT because we thought that the problems of a single point tax would all be removed when we went to a value added tax system. We said that the tax base would expand. We said that a value addition in the entire system would be taxed. But I somehow see that maybe that has not really happened. If less than 20% of the taxpayers are today paying 90% of the tax, then maybe there is something that has not been done right there. And I think that's therefore some more thought on why did we move away from the single point tax. What has that movement been, and what has it achieved? What has it not achieved is something that we need to look at. The second bit here is about octroi for cities. So octroi for cities was subsumed in GST, and it has horribly crippled the cities across the country. Urban development, urban management, urban administration, urban affairs has been terribly affected because of the introduction of GST. A state like Maharashtra figured out a way forward. I mean, it's not the ideal way forward. It doesn't say that this percentage of tax will go to the cities. That's where we should. It says that, okay, this much money out of the total GST collection we will provide to the cities based on a certain formula. I think it's a reasonably okay system. It's not the best, but then best is the enemy of better, as we all know. At least in Maharashtra, we could do that because we had a chief minister then who himself had been a mayor of a city, who understood the issues of urban administration and who believed that the cities should get their share. But most other states have not been able to do this. And therefore, it's a huge problem that we have moved towards one nation, one tax, uniformities, all those things. And maybe there have been advantages, but cities have suffered tremendously. And we need to figure out a solution for that. There is and this unfortunately one of those times that I cannot name, but rather one of the biggest industrialists of this country, dealing with a myriad of products, was in conversation with me about 3-4 months back, and he said we should have. He said that the GST system is bad, and he said that we should have differential tax structure based on the type of goods or the cost or the price of goods. Now, which is an issue about equity. You briefly touched about it because of we have a 0 and we have a 5. We are still able to do a little more. We are a little more just about progressive as a tax rather than being regressive. But this is definitely another issue that is coming up. That are we fair? Are we equitable? Is this tax really, or do the poor who buy the less expensive products, do they have to pay more as a percentage of their income than the richer people? So that's a thought that is, and I tried to explain to him that it would be impossible for us to have this differential tax structure because people would fudge, people would create problems, and all our energies of the tax administration would get into trying to solve these problems. But he wasn't really convinced, and he felt that that's something that he would like to take up at the appropriate forum. The other bit is about not learning from history, which is all of us tried to implement VAT. And in the early years of VAT, what we did was we said implementation is more important. So let's not go into, checking compliance. Let's not go into, because when that new tax system is being introduced, automatically, because the tax base had gone up a bit and more people were paying, the revenues were pretty strong. For example, the second year of VAT implementation gave a 25% increase in revenue. That's huge across the states that came in. As a result, the tax administrations in the state became very complacent, and for about 3-4 years, there was almost no enforcement checking done. As a result of that, what happened was these fraudulent ITC, the credits being passed, people who were non-existent people coming and giving tax bills. So all those things came up quite a lot. Ideally, when we went to GST, this should have been an experience that we should have learned from, but we did not. And therefore, the first 3-4 years of GST implementation also saw the same thing. And now, after 5 years, that's up maybe around 2022-23, all those cases are coming to the fore. And now we have the wherewithal to deal with it. We have the state machinery to deal with it, and we do deal with it. But it's really a problem, because what do we deal with? We say that if somebody who has shown credit but has not paid the money, the tax would be recovered from the other guy, from the guy who has shown, who has taken that credit. Now, is that a fair system? Is that person really responsible for it? In some cases, obviously, he could be, but is that a fair presumption? Is that where we want to go? Or do we want to go towards building trust? Do we need to start believing? Does the government, who takes the first step in trust building? Do people take the first step in trusting the government, or the government takes the first step in trusting people? I believe very strongly that the first steps have to be taken by the government, and therefore this trust building exercise needs to start, and government systems need to start believing that if somebody is claiming credit, that's a rightful credit. Figure out, IT systems are great. We have enormous IT talent in our country. We need to figure out ways of dealing with it, but begin by trust. I think that's really, if we start by this, then we could definitely look at a good GST as a pathway for development, because of 3 big reasons. One is that a simple, single, unified structure without cascading, without distortions, will lead to the most effective and the most efficient economic decisions. So investment decisions will be better, they will be effective, they will be efficient, and therefore they would lead to a larger economic growth. And that's what all of us really want. The second bit is the focus on the MSMEs, because MSMEs are the ones where actual manufacturing is going to happen, manufacturing by people. So employment is going to happen, innovation is going to happen, and a fairer spread of returns is going to happen. So if a good tax system is able to take care of the MSMEs, their problems, their issues, then I'm sure that it will lead to immense economic development. And third bit is obviously on the large players. If people who want to do larger investments, if people who are looking at economies of scale, the big players, they want to bring in the money, the big money to set up big structures, then obviously that's also going to lead to economic development. So a good GST itself, a good tax structure itself is going to kickstart, or is going to be able to kickstart the economy. It's obviously not the only way to do it. The kickstart of the economy requires maybe about 10 things to be done by the government and by the people. But of those 10, the one most important and the one most doable thing is to bring in a tax system which ticks all the boxes for a good tax. And if we are able to do that in the next transition to GST 3.0, I am sure that we will be able to achieve huge economic returns out of it. We will be able to march towards the Viksit Bharat 2047. We will be able to have a much higher growth of GDP, thereby possibly looking at a much lower rate of tax. Thank you.
Thank you so much, sir, for sharing your valuable insights. Your thoughts have given us a lot to think about and explore further. We now move to our next session titled The Consumer First GST, Balancing Sustainable Revenue with Economic Growth. To decode the consumer first approach of India's tax landscape, we are pleased to welcome Dr. Ramesh Salyan sir from Center for Economic Studies and Planning at Jawaharlal Nehru University and a leading expert in macroeconomic policy to discuss next-gen GST. May I request Professor Salyan to kindly take the stage.
Most respected Honorable Vice Chancellor of Gokhale Institute of Politics and Economics, Professor Umakant Das ji, Inaugural Speaker Shri Vivek Johri, former Chairman, Central Board of Taxes and Customs, Government of India, our Vice Chancellor, my Vice Chancellor, Professor Santishree D. Pandit. She is only from the subject political science. From last 20 years, 24 years, the institutional economists, they unanimously agreed the economic institutions are always under the political institutions. So, political institutions, they're dominating the economic institutions, and her presence makes us, we're all economists, she's the political scientist. And Nitin ji, Chairman, Maharashtra State Finance Commission, and my senior academician, Professor Mallaya sir. I think in economics, law of diminishing marginal utility, from last morning 10 to now, we are speaking about GST. Just I deviate a little bit. I'm very much optimistic about GST. And I say that it is too early to evaluate GST in Indian context. It's a large country, it's a very big country. Just take the example of MSMEs. More than 7.84 crore MSMEs. Out of 7.78 crores only micro enterprises. Just imagine. To streamline this is very difficult, is one thing. And adoption is not easy in India. And for example, take the financial inclusion. Started from nationalizing the Reserve Bank of India in 1949, January 1st. Renaming the Imperial Bank of India as State Bank of India in 1955 and nationalization of commercial banks in 1969 and 1984. Today, after 2014, due to JAM, Jandan, Aadhaar and mobile revolution, today in India we are having approximately more than 200 crore bank accounts. 200 crore bank accounts today, but it started in 1949 by nationalizing Reserve Bank of India and 1955 State Bank of India and commercial banks. It will take time. 89% of individuals are having bank accounts in India. Take the example of Green Revolution. 1965 we started. That time population was just 39-40 crore. But we failed to produce and distribute food to the people. We failed. But today, just imagine, we were producing only 55 million tons of food grains.
Today we are producing 230 million tons of food grain and we are able to provide free food to the people. It's not easy to provide free food to the people, 140 crore people, but the government of India, credit goes to the institutions and the people. What about digital revolution? 18 million monthly transactions. Nobody expected. India is the king in digital revolution, digital adoption, digital transactions. Take the example of in 1991, when the government of India introduced the new economic policy in July 24th, the GDP growth was 0.3%, but in just 5 years, it came to 5.3%. See all these changes. I am very optimistic. Another 10 years, another 50 years, GST is the major source of income in India. I believe, as Nitin has said, that people, they don't love to pay the tax. People try to evade the tax. It's obvious mindset. The chalta hai attitude. Other day I was reading a news. In a scooty, a two-wheeler, the cost of that is, if you sell that, it is only 10,000 rupees. The challan is having 46,000 rupees in Bangalore. Because people take these kind of tax-related issues, payment issues very lightly. We'll see later. This is the mindset of the people. So, routing of taxes is never easy because most people, as Nitin said, question the idea of giving part of their hard-earned money in the form of tax. But one thing, taxes are the cost we pay for civilized society, great economist said. But earlier tax system, what we had, just one report by Washington DC based think tank, Global Financial Integrity, estimated that India had lost 13 billion US dollar in potential tax revenue under the VAT system in 2016, equivalent to a staggering 5.5% of the global total government revenue collection back then due to simple trade misinvoicing. Is one thing. People try to cheat. People try to evade their taxes. And one more important, after GST implemented in India, the Central Board of Indirect Taxes and Customs, CBIC, the central government has detected GST evasion of about 20,000 crores. This is one example I have given. Out of that, 10,000 crore is recovered. And after the very interesting, along with trade invoicing, the merchants, the businessmen, they try to avoid taxes in various ways. Suppression of sales, misclassification of goods, undervaluation of goods, overclaiming of input tax credit, very important one, are some of the major modes of tax evasion under GST that are hitting the economy badly. These modes of tax evasion are mainly seen in the traditionally evasion-prone commodities like iron and steel, oil, seeds and edible oil, plywood, etc. that are systematically created multi-layered trade networks which made it impossible for the administration to verify the truth of their claims of exemption of ITC manually. So far from last 8 years, if you GST after 10 years of discussions, GST implemented, Nitin said almost 17 years. Now it is 8 years over. I think you'll get a report. This report is available. Please Google it. You will get the report of 8 years of GST years of 8-year commitment. So this is available in CBIC and Ministry website. It's a beautiful report. You'll get only data, simple data about all these tax-related, GST-related returns, mainly registrations, okay, and active taxpayers, number of active taxpayers, GSTIR returns. All this data is available in this report. Please download this, particularly students and scholars. It is useful to you. Then, when it comes to silver line of GST, so we are happy that rising registration and active tax base. So as per this report, I just have the gist of this one. India has 1.53 crore active GST taxpayers is one thing, and including 1.34 crore regular taxpayers and nearly 14.8 lakh composition taxpayers. Maharashtra leads with the over 18.6 lakh active taxpayers, followed by Uttar Pradesh, Gujarat, Tamil Nadu and Karnataka. Okay, so this is the report notes consistent upward in new tax registration. Then GST collection. In the financial year 24-25, the GST collection touched an all-time high of 22.08 lakh crore, up from 20.18 lakh crore in financial year 23-24. So then taxpayer composition and contribution. This is also awesome. And here interestingly, while proprietorship from 80% of total GST registrants, their contribution to tax collection remains modest at 13.27%. In contrast, private limited and public limited companies constituting only 6.8% taxpayers, contributing over 63% of total GST revenue. This is one thing. So this is the silver line. There are many IT revolution, information and communication technology revolution is taking place, GSTN, and some technological revolution has taken place here. One is GST rate finder, very easy say smartphone app, GST rate finder. So GST rate finder smartphone application is available. This utility gives the correct GST chargeable against any commodity in market. So here the requirement is we have to train the merchants, we have to train the people, we have to train the businessmen about the use of this software. Then important second one, these people, particularly people in India, we don't read bills, invoice. We don't have the habit of reading invoice. And many people, we find difficult to differentiate MRP and GST. Maximum retail price and GST. This is the second observation. And many even shopkeepers also say they don't know what rate they should sell at all. So changing the mindset is the one important thing. So for Viksit Bharat 2047, the expected GST collection may be 227 lakh crore. If we reach that, at least the GDP growth should be 7 to 10%. Maybe our per capita income should goes to 15,000 US dollar to 18,000 US dollar. I think it will be achievable, sure, to make India a 30 to 40 trillion economy by 2047 is possible. And I want to, for the benefit of scholars and students, I want to connect one book. I reviewed a book for the purpose of understanding the role of institutions in economic development. So from last, when 2000, Douglas North, institutional economist, he was discussing why some countries are rich, why some countries are poor. So obviously, in 2024, when this Nobel laureate, Darren Acemoglu, Johnson and Robinson, they spoke about the role of institutions. I think many of you students and scholars familiar with the book Why Nations Fail. I think you might have. Please read that book. It's available. Very simple book. So just I will read out my review on that book. Just I will take 5 minutes to read out that, not more than that. I want to connect that to this tax system. Okay, so this Darren Acemoglu's book and what we call AJR effect. Acemoglu, Johnson and Robinson, AJR effect. And please go through that. AJR, we'll get one separate article about AJR effect. World Bank review, World Bank working paper is there one about. Please read that, particularly scholars. Okay, so that book is analyzing the role of institutions. Okay, so this book the why nations fail, and the Nobel Prize Committee, they awarded this Nobel Prize for their study on inequality. Study on inequality. Why some countries are rich, why some countries are poor. Because they gave the credit to the institutions, good institutions and bad institutions, virtuous cycle and vicious cycle. They give many examples. For example, North Korea and South Korea, both divided after the Korean War divided these two nations. You just see the miracle of Asia, that is South Korea, and see the North Korea. How South Korean products are dominating entire world. Samsung, LG, even your music, pop music, BTS, and Kia, Hyundai. How many products? Just see the inflow of revenue into the South Korea. So same culture, same geographical region, same culture, same geographical region, only mindset is changed, economic system is changed. So that they're quoting here. There are many examples. Just in 5 minutes, I will review this one. One of the most important question widely discussed in economic is why some countries prosper while other remains in poverty for a long period. It has been observed that there are significant difference in income levels, living standards, and available opportunities across different countries of the world. Some countries have strong economies, technological advancements, and stable governments, while others face poverty, poor governance, and low economic growth. This has led to the most fundamental question for economists and researchers: the reasons behind the success or failure of countries. In their book, Darren Acemoglu, Johnson, Why Nations Fail, The Origins of Power, Prosperity and Poverty, seek to answer the fundamental question of economists: why some countries succeed and others fail. The author challenged common economic views about the reasons for a country's development in first 2 chapters of the book. According to the authors of the book, the most significant factor determining country's level of development is its institutions. So we have to think about our institutions after 1947, our institutions during colonial period, our institutions pre-colonial period. So most of our literature speaks about colonial period and post-colonial period, not pre-colonial period. So in JNU, I started to teach, there was one paper, Evolution of Indian Economy. So I decided not to teach colonial period. I decided not to teach post-colonial period. I am teaching only pre-colonial period. When I started to teach pre-colonial period, then I got beautiful literature on Vijayanagara Kingdom. Many USA universities, they're teaching about Vijayanagara Kingdom, Rajaraja Chola. And one paper you will find, Markets and Farmers in Pre-Colonial Deccan of Candish region in Maharashtra. Beautiful article, you can Google it. I think Neeraj Hatekar is the author. There are plenty of articles available. Institutions allow a wide section of society to engage in economic activities and enjoy opportunities for economic growth. Such institutions safeguard property rights, uphold laws, and provide opportunities for people to engage in investments and innovations to enhance their economic situations. When people are assured that they stand to gain from their efforts, they are encouraged to take risk and make innovations, which in turn contributes to economic growth. Here comes 2 institutions, inclusive. Inclusive institutions and extractive inclusions. Extractive institutions, on the other hand, are characterized by the small elite class that owns all the power and wealth in society. The extractive institutions' economic rules are designed in favor of those in power, even if it means oppressing majority of society. Here, 2 examples they are quoting, Darren Acemoglu. One is about Thomas Edison, an American, and Carlos Slim, a Mexican. Innovation, wealth, and institutions, to understand how institutions shape economic success. How institutions shape economic success. Acemoglu and Robinson used a comparison between Thomas Edison, an American, and Carlos Slim, a Mexican. This example proves that institutions not only shape economic growth but also shape how economic growth is achieved. Acemoglu and Robinson found that inclusive institutions foster innovation and competition, while extractive institutions enable economic growth through monopoly and political advantages. Thomas Edison is an example of innovation under inclusive institutions. In 19th century America, investors were given opportunity to come up with new ideas and receive financial assistance. Investors were also protected by patent laws, which allowed them to enjoy the benefits of their creations. So this fostered that Acemoglu and Robinson termed it is a creative destruction. This creative destruction helped economic growth in that country. A situation where new technology replaces old technology, leading to economic growth. Edison's work not only made him successful but also contributed to technological growth, benefiting society as a whole. Carlos Slim's wealth, on the other hand, was achieved under a different institutional framework. Carlos Slim made his fortune by purchasing a telecommunication company known as Telemex during Mexico's privatization period. The telecommunication industries faced limited competition, enabling the company to dominate the market. The comparison highlights a key lesson on the book. Inclusive institutions reward innovation that creates broad social gains, while extractive institutions often protect monopolists and restrict opportunities. Sustainable prosperity, therefore, depends on systems that encourage competition, innovation, and equal access to economic participation. So same here I highlighted. So India's tax reform to the idea of book, Why Nations Fail by Darren Acemoglu and James Robinson. Their theory about inclusive and extractive institutions provides a powerful framework to explain why tax systems fail and why reforms like GST were necessary. So I just compared. Students can work on this. So this GST, what I conclude here is that by Acemoglu's strong statement I can give. According to Acemoglu and Robinson, nations fail when institutions become extractive, complex systems that concentrate power and discourage economic participation. India's pre-GST tax regime exhibited many such features, not entirely, many such features. Cascading taxes, fragmented authority, and barriers to formalization. GST represents an institutional reform aimed at making India's tax system more inclusive, transparent, and growth-oriented. Thank you.
Thank you very much, sir, for the insightful session. We now turn to a theme that directly connects taxation with grassroots level development. We are honored to have with us Professor L.C. Malaya, sir, from the School of Economics, University of Hyderabad, an eminent scholar known for his contribution to fiscal policy and economic development. We kindly request sir to share his perspective on GST, impact of rural inclusion and agricultural growth. Sir, please.
Now, this is a very tough time for me. Respected Vice Chancellor of this institute and respected Vice Chancellor of JNU, and then our dignitaries sitting on the dais, of the dais, my dear scholars and friends. I am the last but not the least. Because of my topic nature is like that. Because it is agriculture. So now I want to give some insights on agriculture, impact on GST on agriculture. Because you know that agriculture, from that, of course, there are so many theoretical issues, theoretical frameworks supporting the agriculture. Since 1952 till now, if you see the growth of agriculture, 1950 it was only 53 million tons of the production. Now you see that there are 337 million tons of the production. That we see the growth of the agriculture, and still 45% people are depending on agriculture. And of course, the two-sector model and the growth models of Rhoda and NACSEP, all the people are supporting the agriculture. Agriculture is growing and it is feeding. Now 1.45 billion people are getting the food from the agriculture because it is major sector. But now many people are thinking that to escape from the tax, agriculture is the best place. But madam, I can say that agriculture is not exempted from the tax. So because when you talk about the tax on agriculture, there is a need to remember the Ambedkar. Ambedkar has contributed, studied about the land revenue tax, agriculture income tax, and 1817, during that period only he has studied and gave the conclusion that there was a proportional tax system, but he recommended the progressive tax system that was going on. But over a period of time when we got the independence, now we have gone for tax culture, and then agriculture was completely exempted. Agriculture income was exempted, but agriculture is not just only agriculture. Agriculture depends upon several factors. And since then, we have been seeing the farming structures, peasant farming, and slowly we are traveling toward the capitalistic farming, and then we are in the period of contract farming and capitalist farming. And now, if you see the evaluation of the agricultural farming system, whatever the Arthur Lewis said, that same theory is proving in agriculture structure. So we are traveling, our agricultural sector is traveling toward the type of industries. Of course, the governments are also encouraging the farmers producers organization to each and every, of course, there are targets, and of course going on, they are achieving the targets and promoting the farmers producer organization under the Company Act. These all farmers producer organizations are under Company Act. It means now thus whatever the farmers or agricultural activities going on, that they are also coming under the tax purview. Maybe except the direct tax. For example, now the farmers after harvesting, if the direct product is being sold, then it may be exempted. Once the product is processed, then any agricultural product is under process or packaged, then it will come under the tax purview. So now there is no exemption from tax. But as our keynote speaker said, sir, I love your lecture, sir. I agree with you also. So since I am confined to only agriculture, I want to give some inputs on agriculture. Where the conflict is coming in agriculture, particularly it is a link to the agriculture sector, business sector. the business sector is realized that they are going for backward integration of strategy. When the industry sector is going for backward integration strategy, so automatically, right, they are ignoring the product of the farmers. That means they themselves are producing their own raw material. So when they are producing their own raw material, the industries are magnets, industrial, or whoever may be that, Uncle Chips, Tata Chips, all, they are producing their own raw material. Earlier days, previous days, they used to purchase from the farmers. Since with the backward integration, they are producing themselves all the raw material. That means they are showing it as a part of agriculture. So that means now they are showing their income, not agriculture income plus industrial income, both. And showing that income is from agriculture. Of course, they are taking the 100 acres, 200 acres, 300, 1,000 acres. One business magnate, I don't want to name it, is 5,000 acres has taken by farming and doing the farming, corporate farming, and then they are showing that income and that both income mixed under the only one category, agriculture income. When you say the agriculture income, tax is exempted. This is the strategy of the backward integration of the business. Sir, I think you may be knowing that how the agriculture is being a shelter for many people. So it means now when they themselves are producing the raw material, so they are showing that income that is exempted from the tax. But whereas they are very intelligent or smart people, of course, all business people are smart people. When I want to bring to you notice that too, one thing that one business person is reading the Das Kapital Karl Marx, another academician also reading the same book. Then academician asked business person, why you are studying this Das Kapital, Karl Marx Das Kapital, why you are studying? Then he asked the academician, why you are studying? I am studying this capital to stop the exploitation of the labor. I want to give the recommendation, suggestion to exploit the labor. But the academician asked that businessman, why you are studying? I can learn many things. How many ways I can exploit the labor? Book is same. The perception is different. GST is same. People's perception are different. So my dear friends, what I want to say here, if you talk about the agriculture sector and tax, so that evaluation of the agriculture sector slowly going towards that. And also one side we are encouraging the capitalist farming and cooperative farming, contract farming, capitalist farming, there is no cooperative farming. And we are encouraging this, that means now small and marginal farmers are working, land is going to larger scale operations and in the hands of business people and they are operating, they are getting there and then, but here, when the earlier tax, GST was very hard on agriculture. When the GST 2.0 came, then agriculture sector got the very relaxed and relief. That means they are so generous on agriculture. Because agriculture requires a lot of inputs. For example, tractor, equipments, mechanizations, fertilizers, pesticides. These are all things are being produced by industries. But are being used for the purpose of agriculture. But now the question is that they should be taxed or exempted. Manufactured by the industrialist, used by the agriculturist. And also there are so many agricultural products under the tax purview. If you see the difference of the tax system compared to earlier tax system, now tax system, what is the relief we got, agriculture got. So I want to bring some important dynamics of structure here. For example, tractor, which is being used for the agriculture purpose. Earlier it was a 12% tax, GST only. Under the now present tax structure, that is the 2.0, it is only 5%. So it means now agriculture sector is getting the boost from this latest tax system. And of course, there are so many equipments. For example, tractor components, for example, tire. Tire is tire for all vehicles. The which tire is to be exempted? The tube. Tube also is a product. Tube is meant for all the vehicles. So here, there is a need of classification of the goods for the purpose of the tax. Of course, there is a classification. They have done the classification. As for their classification, there are 3 categories. One category is essential products for 5% tax. And another is standard products, 12% tax. Another category is sin products. Sin products means luxuries beyond that. But here that is a broader classification of the goods. But here my point is, we need to go for further classification of product for imposition of the tax on particularly certain products which are not under the consideration of this tax. That is my point. So another is there are some products, farm mechanization, fertilizers, biopesticides, food processing, dairy products, curd. But first looking at us all, people say that what is the tax on curd also? Of course, dairy sector also being transforming. The each and every sector is going into hands of the only capitalist. So that is everything is commercialized. That's why tax. For example, now recently I organized one international conference on agricultural marketing. I approached some people, donors. Generously, the donor donated 5 lakhs. And I got the sanction letter that 5 lakhs you got the, like that information, one letter, sanction letter I got. Then I planned accordingly, 5 lakhs I got it, okay, I can spend on delegates. Then when I released, after deducting the GST, 18%. Okay, fine. So GST was deducted, 18%. It came into my finance officer. And finance officer released me after deducting 18% again. Finally, it came around 3.2. I got a sanction letter 5 lakhs. But the net amount I got only 3.2 lakhs. And the university asking me, you got the 5 lakhs, where is the amount? As per the sanction order, I got the 5 lakhs. That is fine. Very good. Excellent. And audit officer asking the 5 lakhs you got. Where is the accountability for 5 lakhs? So I was shocked then. So when my lovely speaker was explaining, that was true also. That is good that. And then my auditor asked me, sir, there is a provision for tax credit input. You can take back your money by applying the tax credit input. Oh, this is a good idea. Then wherever I paid to the vendor, I paid 18% tax. Actual cost plus 18% tax. Then total amount, as per suggestion of my auditor, I applied for input tax, credit tax, input credit tax. Then he said, sir, if you are eligible to take the input credit tax, when the vendor submit the tax to the government. Then I asked the vendor, did you submit the tax to the government? No, sir, not required. If it does not submit the government tax, I am not eligible to take the input credit. So till now, I am hoping for the tax. It will never come. The vendor will not apply, will not submit. He will say different way of escaping. So this is the way we are experiencing. This is the conference. This is not commercial. Conference is not commercial. We are discussing learning. Learning purpose, I approach some donors. Donor generously donated. Then that donation has gone for attack of GST. So this is we are facing this problem. We need to find some solution for this. That means totally, if you see, I paid 3 times tax. Donor has taken, university has taken, vendor has taken. That means 3 times. So it is what I want to say here. Tax system is only the tax system, the GST. I appreciate, I am optimistic for the tax GST structure. But even not only this other sector, but also the agricultural sector, yes, there are so many avenues. Still there are so many problems. We need to plug these problems. And we need to understand this comprehensive structure. And then we, of course, now we are 2.0. Of course, next generation Gen Z comes, it may go up to 5.0. So this system, the process will go on. Wherever the problems comes, we need to plug the problems and go ahead. There is no. Before completion of the 100 years of independence, 2047, I think to achieve the targets of the 2047 Viksit Bharat, we need to strengthen this GST. Of course, council was there. Structure is very important, very good structure. Of course, collection of the tax also less than 1%, that is also fantastic. But here my concern is that is the agriculture, particularly small and marginal farmers. My concern is only for small and marginal farmers. Of course, corporate farmers, contract farmers, producer organization, there is no issue. But the concern is here in India because small and marginal farmers, nearly 75% people are under still small and marginal farmers. That is the major concern of Government of India, State Government of India when talk about the GST. With this, I thank you very much for Gokhale Institute of Economics and Politics for inviting me, giving me a chance to share my views on this auspicious day. Thank you, sir. Thank you very much. Thank you, one and all.
Thank you very much, sir, for your valuable insights. Now, we would like to welcome on stage former IRS and GST consultant, Mr. Prashant Mohanty, sir, to give his remarks on our first session of the conclave. Sir, please come.
Thank you so much, respected dignitaries and my friends sitting here. I thank you very much for giving me an opportunity. Basically, at the age of 70, I am also a student. I love students and so many people are here and so many things have been spoken about GST. I thought I should also share my remarks on the speakers. Great philosopher, statesman Benjamin Franklin said, in this world, nothing can be said to be certain except two things: death and taxes. Death and taxes. So we are talking about GST. Mr. Johri spoke about bringing petroleum products under GST. Then he talked about tariff inversion. Mr. Nitin spoke a lot of things about compliance burden, spoke about MSMEs, he spoke about rate and three rates, how to come back to the one rate. And Mr. Salian, I think he spoke about tax evasion. Then my colleague, just now he spoke about agriculture sector. Do you know that all problems, 60 to 70% of problems lies in the tax itself. If you set right your GST tax structure, then all your 60-70% problems will be over. You may be knowing that GST Council devotes in every meeting 30 finance minister, union finance minister, 70 to 80% of the times only on the tax, because the problem lies in the tax itself. Mr. Nitin talked about whether we can reach a level of 12%. It's a very good idea. For all your information, even right now when I am speaking to you, our GST rate, weighted average GST rate is less than 10%. And it compares well with other countries. If you see the international comparison, I will start from lowest to the highest. Countries like your Chinese Taipei, Bahrain, Kuwait, UAE, VAT rate is only 5%. Then you come to Thailand and Singapore, VAT rate is 7%. Switzerland, it is 7.7%. Japan and Vietnam, it is 8%. Then your Korea, Australia, Indonesia, it is 10%. Philippines 12%, Nepal 13%, China 13%, New Zealand, Bangladesh and South Africa 15%, Sri Lanka 17%. Then come to the developed countries, UK, France, Austria, Russia, VAT rate is 20%. Germany it is 19%. Netherlands, Spain it is 21%. Scandinavian countries, like Norway, Sweden, it is 25%. Hungary, it is 27%. So if you see in the whole world perspective, our rate compares very well. Yeah. Right now, I am at less than 10%. But more than the rate, the real problem lies, all problems what you talked about, tariff inversion, then the review of exemptions, then how to come to the one rate structure. I will just give you one examples to illustrate the problems just now discussed. Mr. Nitin spoke about the review of exemptions. It's a good idea. Particularly, I feel that there is a case for the relook at the exemptions given in the manufactured sector. Let me give you an example, very recent example. On 22nd September, government exempted 4 items children, you will understand better. What are the items? Your exercise books. Because mind you, if you want to understand the tariff, devil is in the details, not contemplating on the sidelines. It is in the details. Let me give you what are the 4 books. Laboratory notebooks, exercise books and graph books exempted. All these goods are classifiable under tariff heading. You must understand the heading 4820. Okay, exempted. Not only that, the paper supplied for manufacturing these 4 items are also exempted. Now look at what is the problem in the ground. I am a paper manufacturer, paper mill. So I generally what I do, I supply paper to the traders, who in turn supply paper to the small scale manufacturers, those are manufacturing 4 items. So as a paper mill, there is no reliable way to find out, ascertain whether the paper supplied is actually used in the manufacture of these 4 items. So it is a implementational burden. So as a result, what is happening? The paper mills, they are reluctant to supply at exempted rate, resulting what is increasing the financial input working capital requirement being increased by nearly 15 to 20%. So what is the objective? Then look at the point of view of, I gave you the perspective of the manufacturers. Now let me give you the perspective of the secondary manufacturer, those who are making these things. You will find that a manufacturer, all are in MSME. They not only manufacture these 4 items, they also manufacture account books, they also manufacture diaries, they also manufacture notebooks, they also manufacture registers. So as a small scale manufacturer, then I have to maintain separate accounts. Because in the first account, because I cannot avail of your input tax credit. So I have to maintain separate accounts. So it is a burden on the MSME. Let us see what is the point of view of the consumers. The consumers, because I saw the press note, government stated the items are exempted with a view to making these products more affordable to the students and reducing financial burden on the families. But what has happened, if you see, ask anybody in the market, the prices have gone up by 3 to 5% for the notebooks and 6% for the printed books. So who has benefited then? But mind you, what is the bigger picture? Now, once you exempt the 4 products I mentioned, that means the domestic manufacturers, they are at a distinct disadvantage as compared to the foreign suppliers. Because here the inputs ITC chain is broken, so my cost increases. Whereas the foreign supplier, he doesn't have that handicap. So that means my tax policy, I am putting my manufacturer at a distinct disadvantage as compared to your foreign suppliers. Okay, now coming to tariff inversion, what has happened? Because I am giving you the examples, because problem lies in details, not in the telling the you make it 2 rate, 1 rate, what is it? How to go about it. Now inversion, what has happened? Same example I am giving you, the paper example. Now what has happened? Earlier rate of duty on paper was GST 12%. 12 has become 18%. The carton and boxes, the packing boxes, earlier it was 12%, now it has become 10%. So it is a real case of tariff inversion. Of course, government has stated that, okay, we will provide, as Vivek said, that we will provide faster refunds. But MSMEs, they cannot afford blockage of capital even for a few days. So this is a problem. Government has done a really human service by removing the tariff inversion in the textile sector. Earlier, man-made fiber rate was 12%, then 18%. Yarn rate was 12%, but fabric rate was 5%. Now they have reduced it to 5% to the math duty on finished products. Same thing in the fertilizer sector. Earlier, ammonia, nitric acid, and the sulfuric acid rate was 18%. Finished product fertilizer duty was 5%. It was a great deep tariff inversion. Now this problem has been settled. But it has added in other sectors, like the one I told you. In fact, I would have, because of lack of time, I would have given you some beautiful examples in the afternoon. I hope I will give another example to clarify this issue so that you understand better. Now, coming to one rate or two rate or one rate, there I think there is a case for bringing. Now there are three rates. There is a okay. Since my time is up, I will reserve this thing because you will like it. Because how to go about? Because it is easier to say that how I will go for a one rate or two rate. In the afternoon, I will tell you how it is possible to come back to a. I will give you some examples, and in the process, I will tell you what are the implementation of problems, so that you can come to the one or two rates. Thank you very much for giving me chance.
Thank you very much, sir, for your valuable insights. We encourage our students to actively participate in the discussion. Please feel free to ask the questions. We have one. Mike.
Good afternoon, panel. First of all, thank you for giving us this opportunity to sit here and listen to all the enlightening thoughts. My name is Nupur Singh. I am student of Gokhale Institute only, pursuing my master's in economics, specialization in geopolitics and geoeconomics. So my question is to the panel itself. Given in the backdrop of like how India has taken efforts and given the, how would I point it, a tax holiday for foreign clouds and AI engineers to work in the Indian data centers to promote the Viksit 2047, like the timeline is until 2047. And we listen the debates that goes on for the global tax system or the global minimum taxation that should take place, and in the OECDs the frameworks are coming up. So with this backdrop, does GST, next in GST we are talking about, GST can evolve into a strategic position where we can use it apart from a domestic consumption taxation to something that will give India an upper hand in the geoeconomic digital landscape of the payment sector or taxation sector in particular if we are talking about GST. So that is the question.
Look, like Mr. Mohanty explained, GST, you're talking about, the OECD initiative and all on double taxation or minimum taxation in the context of direct taxes, right? So, yes, there is a big initiative to do away with tax havens and to ensure that all businesses pay tax at least somewhere in the world, and they're talking about a minimum tax in that context. And the problem has arisen because, multinational corporations are able to shift profits from one jurisdiction to another. Now, that kind of misuse, or let me put it the other way around. I mean, if you're looking for GST to provide incentives to sort of, attract investments, I think the best way for it to do it is to remove any disparity which may arise, and GST can only operate through goods and services transactions. So the best way is to ensure that it remains neutral. I'm not sure whether, giving, as long as your tax structure for indirect taxes is neutral and it does not sort of discriminate in favor of particular kinds of investments, that is what can ensure that investments come into the country. And of course, the other related things are ease of doing business under GST. Is it easy to file returns? How difficult is the regime? Other than that, I don't see GST playing any direct role in attracting investments into GCCs and data centers.
Apart from that, is it worth giving any incentive to data centers? Is a question that all of us must ask. Energy guzzling, water guzzling, non-employment providing data centers. are they really, I mean, what's the value addition to the economy? That's the thing. That's a larger question that I'm just posing.
The real reasons are quite easy to see. One, of course, is the loss of sovereignty that states feel they'll give up. As it is in pooling sovereignty on GST, there were misgivings about giving up their right to tax and to determine the rate of tax. So, I mean, they kept petroleum aside on the understanding that at least that will remain, that base will remain with them. Actually, there is a solution possible without compromising states' revenues, which is that you can have a vatable element on petroleum products and some kind of sanctuary taxation on top of that in the form of an excise tax or a sales tax, which many countries in the world follow. But even with that, the states are, I think, mainly uncertain about what will happen to their revenues, and that is what is holding it back. I don't think there's any other reason.
Ishan Dave this side. I am a student of MSc Economics at GIPE. My question is more operational in nature. It is a situation, two parts of it. There are a lot of businesses that try to manipulate the prices or the categorization of the product to evade or rather bypass GST rates, higher GST rates. Is such manipulation, are the policymakers planning on solving such a problem, or is it more conducive for the business to continue with such manipulation? And how do we plan on solving it if we want? Example, for clothes it is 5% and 18% if I'm not wrong, and that's the limit is above 3,000 it's 18%, below 2,500 it's 5%. So the people who sell their product at 3,000 plus, they would manipulate their prices to less than that and do under invoicing, over invoicing and other things to cover up their revenues or anything. How do we solve that?
So that kind of a tax structure is distortionary, and I think Nitin talked about it when he was mentioning about his conversation with some industrialist, I think, who was advocating the idea that you should have differential rates of tax depending on whether the same product, whether it's low cost and low price or high price. It always leads to distortions. We've burnt our fingers many times on this kind of a structure. We had it for footwear, we had it for ready-made garments. Earlier under the excise regime, I think we had it for a couple of other products also. But like Madam Pandit said, this is a political economy. These are not decisions that are taken purely on economic considerations. It's an inefficient way, but it's something that sells politically, because the impression you convey is that cheaper products are being taxed at a lower rate vis-a-vis more expensive products. But it's certainly distortionary. One of the ways in which it has been addressed in GST 2.0 and even earlier is to equalize the rates on products that are similar. Take the case of food processing. There were many disputes. What is a baked product? What is a roasted or solan product? Namkeen versus bhujia versus chana chapena. I mean, all kinds of examples. Rotis versus parathas versus bread rolls, dinner rolls. All are described differently in the tariff. Some of them attracting different rates. Do they go under miscellaneous category? Take the case of cosmetics. Is coconut oil packed in small packages a cosmetic, or is it an edible oil? So, the solution to that eventually, and I believe strictly in that, regardless of our compulsions, you cannot address all economic problems and macroeconomic objectives through the tax system. I think it's best, in my view, to have a very neutral tax structure. Single rate would be my personal preference, and then deal with equity and other things through the expenditure side of the budget or through other means. That's the ideal. But a lot of it has been addressed in GST 2.2. So, yeah, the possibility of it has come down.
Hello sir, hello ma'am, I'm CMA Mridula Risbur. So my question is from little bit a consultancy point of view. Many a times we have seen main issue is about the awareness and literacy about the tax regimes and all.
So this time in budget also, Honorable Finance Minister talks about a corporate mitra. So Nitin sir, specifically I would like to ask you that how professional institutions can change their perspective from being mere professional consultant towards the being a corporate mitra.
I think that's a work in progress. But I just saw here, which I was not aware of, and thanks to you, I have here the GST system itself, which has a help desk now, which has a interactive technical assistant called Geeta, yeah. So there seems to be already a lot of stuff happening from the government side on trying to simplify or trying to spread information. There's some YouTube channels also that I see. Not being a GST taxpayer, I had no idea that such a thing existed. However, obviously there is something. But the other bit that you want to talk about is, do professional organizations or do professionals who are supposed to be assisting the taxpayer in the payment of tax. How do they approach the problem? Do they approach it professionally? Like, how shall we say? And please pardon me if I use the word, but do they approach it commercially as synonymous with professionally, or more with little more sensitivity that professionalism would entail? Not only commercialism, but a little more sensitivity, little more ability to explain the situation, because finally the professional is an intermediary in the system between the government and the taxpayer. Ideally, we would all love to have a tax system where intermediaries are not required. That's ideal. But I'm sure most of us do not file our own income tax returns, though they are supposed to be fairly easy. They call the form saral, but obviously it's not as saral, and we need internet. So till such time as the tax system becomes so simple that you don't need intermediaries, the intermediaries will need to take a more proactive, more sensitive, and more professional approach. Professionalism to be a much more comprehensive term.
Thank you, sir. Yeah.
First of all, thank you very much, this eminent panel, because this is one grey area for all of us who are economic students. I am a PhD student at Gokhale Institute and a professional also. This might sound like a basic question, but let me ask it. Like Nitin sir said, that we don't want to compare our GST with some other country and what are the standards, but we always ask the question why. So the question here is, the threshold limit in India is 40 lakh, whereas in Singapore it might be 5 crore. So what is the rationale of this 40 lakh, and going forward in future next gen GST, is there a thought given to changing this threshold, or that's what I wanted to know. Curiosity.
Others should get a chance. Look, again, there's no scientific formula by which you determine these thresholds. As I said, these are political economy questions which are answered, in that way. Normally, these thresholds are revised from time to time. And I'm not sure whether, it makes sense to really compare thresholds across countries. Because then you should also see about what is the size of business. Then you should be comparing what is the size of largest business in that country vis-a-vis the threshold, and how does that proportion hold in your country. So I think those are the kind of comparisons that are more meaningful. Just picking up a monetary limit from another context and saying that is what India should adopt, maybe that's not a good idea. The other big reason, and that's quite obvious, is that as it is, your taxpayer base is low, right? So in income tax, you have a very large number of taxpayers, but how many of them are actually filing returns? How many of them are actually paying tax? It's the same story in GST, and I think Nitin touched upon it. The same booklet which my colleague was brandishing. I mean, it contains a lot of information. Please have a look at it. It's quite stark in terms of what is the distribution of tax payments vis-a-vis, the business income or, turnover. So you'll find that a very large proportion of your tax is coming from very, very few business entities. So it's very disproportionate. So as it is, you're living with a problem where small businesses are virtually not paying taxes. If you go on raising the threshold, you also have to raise, and you want to raise the same kind of resources, you have to raise the rate of tax, which creates further problems of evasion and, arbitrage. So that is the trade-off. And I think every country has to determine what is best for it. And it's not as if these thresholds are fixed in, set in stone. They're revised from time to time. Very often linked to inflation, very often linked to...
And in those early years, I remember from the states, because states earlier on the tax, on the sales tax had very, very low limits and, like 2.5 lakh type of limit. And the excise department had higher limits. And in those early discussions, Mr. Mohanty used to say, make it 40 lakhs. And from the states, we would say, no, make it 5 lakhs. And, that's how that compromise of 20 lakhs came in those discussions that all of us were party to. So, and then that 20 became 40 subsequently. Not yet revised for services, but it's a process. It takes time because everybody has to agree. Thankfully.
Yeah, so 3 short questions. One is about...
we do not take questions from experts.
Okay, I asked him, but Nitin's question, I want just 3 things. One is, why is there, I personally think RNR is a wrong-headed way to go about it. Nitinji talked about budget neutrality, but even that is not required because, after all, if you're going in for tax reform, it is like investing in infrastructure. In due course, you are going to, because of the buoyancy, make up. Everybody is going to do that. So probably, I'd like your thoughts on that. The second question is, I've never understood this numbers being used in compensation principles. We made a horrendous mistake, I think, of assuming X% increase for the states to be compensated. It should have been linked to something related to business cycles or something else. And we had one instance where we had a problem with that, which was the COVID thing. And the third question is, which is something that it's a hobby horse of mine, and Nitinji again touched upon it, the disempowerment of third tier, especially urban local bodies. Is there a scope, and we have been arguing for that say 2% of the GST should be shared with the local bodies. And we are working on that. We'll need a consolidated fund at the local level and one at least constitutional amendment. But is that worth it at all? Thank you.
Look, I think in my presentation I did talk about the obsession that everybody had, particularly the states, about loss of revenue if GST were introduced. And that's why this whole narrative about revenue neutrality came about. And that's why the quest for a revenue neutral rate, there were many studies done, because nobody wanted to be in a situation where you launch GST and you find that, you've actually lost revenue. So that was the imperative which was driving it. Whether it was good or bad, no. I think there was an opportunity to lower the burden, the rate of tax overall, and make up the revenue loss through buoyancy. I agree with you entirely. And there were many, not many, but at least there were some studies that very clearly brought that out. And the contrast was quite sharp. I do recall a study which was done which was suggesting, and I think Dr. Kelkar again was one of the authors of that, or one of the driving forces, which actually suggested a single rate of GST as low as 5%, provided it's a comprehensive GST. It takes, the entire tax base into account. So petroleum, land, property, alcohol, everything included, electricity. If you bring everything into the tax net, it was their calculation that you could actually make do with the rate as low as 5%. But, obviously that was not something people were willing to take the risk with. So I think it was basically aversion to risk, because you were getting into something that was, not so well known, and states were apprehensive about what will happen to their revenue. Sorry, your second question was about the compensation principle of 14% was a deal maker, and it was way above the GDP rate of growth at that time. If I remember right, I think the GDP nominal rate of growth at that time was about 10 to 11. But in order to sweeten the deal and get the states on board, that is what was offered to the states. And I may be letting out a secret, and Mr. Mohanty will bear me out. I don't think 14 was anywhere, under discussion. It was just a last-minute thing which was put on the table to get the states to agree. Sorry. Yeah, it's political economy. Because there were many states, who had not agreed to this.
Even Maharashtra didn't take it. Maharashtra wanted vote because of the octroi governments.
Yeah, Maharashtra.
There's also two language formula.
No, but I'll tell you, there were other states. Punjab had a problem with purchase tax. Maharashtra had a problem with the octroi. There were many states which had entry taxes, so they wanted special compensation. And that's why 14%, at that time the political leadership thought would be one rate which nobody could resist. The last point about urban, governance, it's a coincidence that I'm also working on urban development now, side by side on a project. I think where we missed the bus, and Nitin is more authorized to speak on that, is the state finance commissions. I think the whole purpose of having state finance commissions was to suggest ways and means of raising resources for urban, agglomerations and urban development. Unfortunately, many states have not appointed them on time, or if they've been appointed, their recommendations, unlike the Central Finance Commission, have not been accepted or implemented. So I think that is the problem. The problem is not so much with the tax structure. If you look around the world, maybe you could earmark, some part of the GST revenue for urban development. There's nothing wrong with that. But that is something then that will have to come in the form of a cess. I don't know how acceptable that's going to be. Of course, on the budget side, the states can do it perhaps, and they're doing it also, like Nitin pointed out. But if you look around the world, my understanding is that most urban governments depend on local taxes for raising resources. And they don't necessarily rely on devolution from the center, at least. I mean, state governments, yes, but center, I'm not sure whether there are too many models which, talk about devolution from the federal government to the city level governments. So I think that is where the solution lies, and we're all shying away from that. I'm sorry to say that.
Just on the last issue, a lot of countries actually do have a percentage of the tax as the local tax, the federal tax as a local tax. So that's a possibility. However, that is never the main source of revenue. Main source of revenue is land-based local tax, which is what it should be. Eventually, going forward, if we do get to that stage of a single rate tax, at which point of time, and if the destination-based principle is taken to the cities as well, and I don't know how good that will be, because then some cities would be left behind and some cities would prosper, but it's a distinct possibility we could think about that. Let's say the rate of 10% could actually mean 5, 5 and 2. Thank you.
So, with these enriching discussions, we bring the session to a close. On behalf of the organizing team, I thank our respected dignitaries and participants for their thoughtful engagement.
Welcome back after the break. We hope you all enjoyed the power-packed lunch and had a chance to recharge for the sessions ahead. I am Jigyasha.
And I'm Sia.
We will be your host as we move forward with the next and the most engaging segment of today's conclave. After a morning filled with insightful conversations, we are now moving to the main reason we are all gathered here today, the panel discussions. This session brings together an exceptional group of experts who will share their perspectives, experiences, and insights on the evolving landscape of GST. Without further delay, let us begin with the panel discussion.
We now move on to the first panel of today's conclave. The title is Next Gen GST, Sectoral Impacts and its Socio-Economic Implications. Nearly a decade has been passed since the introduction of GST in India. And the conversation is now moving forward to its next phase. How the system is evolving, how different sectors are adapting, and most importantly, what are the broader socio-economic implications that can be. For this discussion, we're so honored to have a distinguished panel with us today. Our moderator for this session is Professor Pradeep Apte sir. May I have Ms. Saili Jog ma'am to come on the stage and felicitate him? Our first panelist is Professor M. Suresh Babu. Can I have Dr. K.S. Reddy sir to come on the stage and felicitate sir? The second panelist is Mr. Dharnidhar Tripathi sir. Can I have Etre Chakraborty ma'am to come on the stage and felicitate him? And lastly, we have Dr. Vidhu Shekhar sir. May I ask Dr. Kedar Nayak to come forward and felicitate him? So ladies and gentlemen, please join us in giving them a warm round of applause as they take their seats.
To guide this insightful conversation, we are honored to have Professor Pradeep Apte as the moderator of this session. Professor Apte is a distinguished professor at the Gokhale Institute of Politics and Economics, and he is also served as the member of the 13th Finance Commission of India and is currently a council member of the Indian Council of Social Science Research. Sir, we are delighted to have you. Our first speaker for the session is Professor M. Suresh Babu, Director of Madras Institute of Development Studies. His research in applied macroeconomics, trade, and industrial economics that provides valuable insights into productivity, structural transformation in the Indian economy. Our next speaker is Mr. Dharnidhar Tripathi sir. Sir is the Managing Director and the CEO of Business Correspondent Resource Council with 3 decades of experience in banking, including senior leadership roles at State Bank of India. His work focuses on financial inclusion, research, and strengthening the business correspondent ecosystem. We are delighted to have you with us, sir, today.
And our last panelist for this session is Dr. Vidhu Shekhar. Sir holds a PhD in Financial Economics from IIM Calcutta and currently teaches at SP Jain Institute of Management and Research. His research focuses on financial economics, fintech, and behavioral finance. He's also the co-founder of a fintech company with AI. So now the stage is all yours, panelists.
Friends, we are going to have a session which is going to be very interesting for a variety of reasons. Doing research on taxation is a very difficult kind of a process. It is usually said that there are only two certain things in the life, namely death and taxes. But when you start researching for the tax, it is even more difficult than death. Partly because the nature of entire taxation process has many layers, and most importantly, the most difficult barrier to break and handle for the researchers is the kind of data that they would be looking forward, but that scarcely comes by. I remember long back, must be probably 73, 74, this institute was interested with a problem of nature of taxation on textiles. And no less than a towering statistician in those times than Professor V.M. Dandekar was supposed to study it. And when I discussed with him privately, he told me all kinds of stories which really scare you to put your hands in doing research in tax-related data and tax-related judgments. This is partly because economists look at the entire process of taxation from a kind of a lens which probably is not so readily compulsory for the government to look at, because the language itself can be considered as too intangible. That apart, there are also certain kinds of what is often called a legal barrier. Notwithstanding having Indian Statistics Act 1955, there are many kinds of coding and non-disclosure clauses that one has to run, without which you cannot get the data. Without quoting the names of the institutions involved, let me give you my own experience. The institution which is very closely affiliated to Ministry of Finance, they wanted to make a research on the nature of what we call cost of compliance. This was regarding income tax. The relevant authority, of course, CBDT, was aware of it. CBDT, in fact, also promised that institution that they would share the data. Not only that data didn't come by, but all that we had at that time, something that was launched with a great fanfare, was the PAN numbers issued to the income tax payers. And we had a very ambitious project of doing something like survey of at least 2,000, this is not company income tax, this is only individual income tax, 2,000 minimum coverage of the taxpayers, and also the interviews and interaction with the chartered accountants, who in fact mostly are the other unseen hand of tax collectors. Finally, all that we could do was case study, 78 case studies, because first and foremost, the data did not come by. More importantly, large number of PAN numbers that from which we were supposed to have this sample drawn, very large number of them in Delhi itself were fraudulent. This is just to give you one kind of an example. There are many other problems either, because the basis of taxation is often not so naturally coincident with what often economic professors, academic researchers are inclined to or are used to. I wonder whether the problem persists even now. Probably yes. But there is a hope, very strong ray of hope. Fortunately, GSTN, which happens to be in many respects the implementation agency for this big tax reform that we have accomplished, and we are fairly successfully working with this. But like all taxation procedures, like all taxation experiences and institutional arrangements, there are always certain kinds of complaints that you cannot wish away. Like Nitin Kareer rightly mentioned, there is a very serious problem about the ITC when it comes to medium or very small enterprises. But there is also a hope that the nature of administrative machinery also has a machinery in a literary sense. Apart from the people who are manned, there is also a computer at your disposal, and this has changed quite a few things. Like, for example, income tax itself has changed its own method of vigilance, its own method of investigations, checking for the validity, etc. Similar things can have been happening, should have been happening in GSTN. But the problem here is little more difficult than income tax, because the taxation authorities are obviously interested in the kind of things and the processes and the values that they would be interested in taxing. The base of that taxation is rarely reflected as crystal clearly as HSN code would typically have. So making relation to whatever that we collect as consumption expenditure data or production data, in case of production data, situation is little better, because at least as far as the organized segments are concerned, we have the ASI data, which could be in some sense matched with it. But still, there are some problems, because the CSO employs a national industry classification and we follow something which is somewhat divergent from national industry classification. For example, processes of agricultural products are clubbed in agricultural product chapter when it comes to indirect taxes. Whereas in production data that CSO compiles, this is not the case, because they are in fact very strictly compartmentalized and allocated to food and food beverages sector in national industry classification. But for these kinds of problems apart, the nature of detail with which the data are now likely to be available are far more than what kind of a data that is really collectible for CSO from whichever kinds of sources and institutions from which they compile this data. Therefore, relating it to what very casually economists would talk about as a tax base, it's something which is pretty elusive in many respects. In addition to this, there are certain features which we should realize are there with GSTN, which probably do not naturally flow. Long time back, almost in end of the 60s or beginning of 70s, Gokhale Institute was interested with constructing something what was called regional input-output tables, which required state-wise compilation of inter-industry flows for at least 30 sectors within manufacturing, distinguished, compatible with whatever that was available from ASI. Doing that on the basis of very thin, very divergent, very difficult to collect kind of a database, for example, the CST, the sales tax which was on the interstate commerce that was levied, we collected all kinds of data, yet it was such a great pain to allocate how much was consumed in a state, which was a originating state, stage-wise, etc., etc. I think in a way there is a paradise for the economist now, because the GSTN, the way in which it is defined, the way in which it is administered, has a whole lot of data which is naturally generated, for which this kind of efforts seem almost unnecessary and futile. The kind of inter-industry flows that they occur, the kind of regional flows as they occur, and the nature of that kind of a profile industry-wise, either as the consuming industry or as or using industry as against the delivering industry. I think there is a gold mine which is being generated in GSTN network. Only thing is that now this needs to be looked at in a variety of ways. For that matter, if one makes some kind of a rough approximation on the basis of value added that is assessed, it might be possible to have something like a real-time measure of maybe not the whole economy, but a segment of the economy. We can have a real-time, what can be called as a quick estimate, always subject to revision, for the GDP originating in those sectors. So there are a variety of ways in which we should be able to now leverage this GSTN generated data network and the databases, so that we would be able to more truthfully and more meaningfully make sense of kind of economy that we have and the kind of interdependencies that these economies are actually functioning with. Again, there is a problem, as it is a problem with our national income data. If you look at the manufacturing data, there is something what is called registered sector, unregistered sector. The parallel mirror of that would be something like MSME, which are on the borderline of being payer of GST or not paying GST. So all these kinds of definitional conceptual difficulties will linger. They can be somehow, at least on a sample basis, tackled. But this is something which is going to prove a gold mine for both policymakers and economic advisors if they are to be interested in this. And it is on this basis it should be actually possible to talk about the subject which is supposed to be the subject of this session, namely intersectoral impacts. Other aspects like what are the social consequences, something which is of, I won't say ill-defined, but pretty comprehensive and therefore in that sense nebulous kind of problems are open to judgments. For example, are poor paying more or less? You require quite a fine-tuned kind of a database for making such kind of a judgment. So, nonetheless, academicians will not so easily yield and they will persist with whatever data that they have. They would like to make some kind of a judgment of their own from their own perspective and within their own capacities and limits. And that's what we should be looking forward to. So, thank you, the panelists, all of them who are present here. And I think we will go by the same sequence in which they are sitting now. So I request my panelists to express their views and analysis here. Thank you.
Okay, good afternoon. First of all, I thank the organizers for this opportunity to be here today. And for me, it's particularly very important because, I started my career from Gokhale Institute 25 years back. So again, to come back to Gokhale, I think it's a very, very nice feeling to be back. Second, when Professor Umakant extends an invitation, it is very difficult to evade from that. So thank you very much for this opportunity, and thank you, Professor Pradeep Apte, for chairing this session. What I shall do is, as I was talking to Shri Mohanty sir, that I will not talk the specificities. I will talk about a lot of things in the air, not the specificities which he has been pointing out. But my attempt is to try and provoke thoughts among my young students in terms of some of the issues around GST and what are the changes and how we could actually understand and comprehend some of these changes. So I have a 4 set of issues which I would like to flag in this context. I will start with a brief background of why or what was the kind of an imperative for this GST 2 and perhaps GST 3 that might come and things of that sort. Second, I will talk about some issues in terms of the sectoral impacts. And third, some pending issues. And finally, some issues that requires some research, especially from my younger student colleagues. Okay. Now, let me talk about the context in which we are talking about this GST 2. One, I'm just throwing some data onto you. One, and very important, private final consumption expenditure in India is 61.4% of our GDP. And you know, my students of macroeconomics know that ultimately output is a combination of consumption, investment, yeah, X minus M and G, right? And what we find is that it is this C that has been driving Indian economy for some time. And that is very important. Investments, yes, steady, but not really growing. And we are yet to witness what we would ideally call as an investment-led growth. Yeah, I'm sure my students would be aware of this. We used to talk about export-led growth. Yeah, and this is not a global environment in which we can actually pursue an export-led growth at the moment. I'll come to that in a minute. So perhaps the driver of economic growth in India at the moment and for some time in the medium term would also be consumption and private consumption. So any kind of a policy initiative that would actually give a flip to consumption might be a driver of growth. And I think that is something which we need to keep in mind when we talk of the reforms. Yeah, there are other operational issues of GST which has to be simplified and things of that sort. But at the moment, from a macroeconomic point of view, it is imperative that we really look at in how to really enhance consumption. One. Second, so investments, I talked about that, not really growing or accelerating at a pace that we would really imagine. And there are other factors that could lead to. But when we look at the other component, X minus M, in this whole identity, the global environment is not very conducive for that. You know, we have a situation where one day you can hear that, you know, we will have to face 25% tariff. Next day we will hear that it is 50%. And after 1 week we will hear that it is 18%. So what is the actual tariff? We don't know. What is the geopolitical situation that is coming out from this kind of conflicts that we see? We don't know. So that component of the economy, that is producers who actually look at global markets, are also looking for some kind of a relief now. And whatever may be the kind of procedural bottlenecks that are persisting now, and if we can reduce that by a small margin, I think that will be of immense help because of the kind of uncertainties that are prevailing as far as exports are concerned. The third thing that I need to keep in mind, I want you to keep in mind, especially my students, is that when we look at these GST reforms, we also need to read other perhaps 3 documents. Then you will have an idea, more holistic picture. Well, we talked about these reforms in September, October time. And that time the 16th Finance Commission's recommendations were not ready. Yeah, October we got the first cut of recommendations, and then in February it was placed. So there were some concerns in terms of how the state finances are going to look up and what is the kind of issues that could emerge was not very clear at that point in time. Along with the State Finance Commission's report, if you recollect, there are 3 documents that came, very important documents that came on 1st of February. Yeah, the economic survey, just before that, the budget documents, and the 16 Finance Commission reports. Now, all these together, when we see, there is also a need to address some of these concerns in terms of states looking for more resources, precisely because morning we had a question as to what was the rationale for this compensation and fixing at a particular level and things of that sort. But in a federal setup, we all know that states have their share of concerns, and if there is a particular way in which we could address some of these concerns, I think that will also be useful. So that's a broader context in which I would like to see this reforms which has been rolled out under this banner of GST 2.0. But I would come back to my first point that the larger focus of such reforms is in terms of enhancing private final consumption. Second, perhaps, priority would be to make life a little more easier in terms of businesses, of which we were listening in the morning how difficult it was, especially when you go to micro details of that. Okay. Now, given this context, well, I'm not going to go to the details of this whole, changes. I'm sure there would have been very elaborate discussions of that in the morning. But what are the key positives that one could really take away? And one important thing, as we all know, is basically the reduction of slabs, right? Remember when we talked about GST, that time, Arvind Subramaniam, the chief economic advisor, used to say that GST is a good, simple tax. Yeah, but it was not good, it was not simple, and it had many complications when it rolled out, right? Many slabs, so much of confusion in terms of what would go there. Again, we listened to that in the morning, and we had this classic example of popcorns. Popcorns, when it is packed, it had one rate. Popcorns, when it is loose, it had one rate. Popcorns, when it were flavored, it was one rate, and depending on the flavor, the rates also changed, kind of a thing. So the good simple tax was not as simple as we thought. So one of the important changes or the reform was in terms of a simplified structure, where we find that there has been reduction in slabs from 4 to 2 main ones, and that would make the compliance much easier, which would reduce the tax disputes. I'll come to that towards the end of my talk, and also that would lower the burden on the taxpayers. So very, very important. Second important thing, that is from the consumer's point of view that I was talking about. Second important thing is in terms of the lowered logistics and business costs. Again, morning we had a question about whether the GCCs should be given so much of concessions or not. Well, when we look at the reforms in GST now, we find that sectors and very important drivers of the economy, for example, commercial vehicles, they were literally the sales of commercial vehicles, passenger cars in India was not growing after a point. So the reduction in GST, especially for vehicles and commercial vehicles, raw materials and cement especially, a major input for construction, and we all know that construction sector employs maximum number of workers after perhaps agriculture and textiles in the manufacturing. So cement and iron is an important thing in terms of boosting economic activity, and that would help in terms of decreasing the supply chain costs as well as boosting manufacturing and construction in one shot. Now this is very important because in an era when global supply chains are getting disrupted frequently, there are a lot of uncertainties that are prevailing in terms of global supply. I think we have to look at domestic supply chains, and for domestic supply chains to really boost their kind of activity, we wanted to have some lowered logistics as well as business costs, and these kind of reductions, especially in terms of cement and iron, are very important as far as these sectors are concerned. Third important thing is, well, the lower rates for FMCG, and I'll tell 2 examples, and we can of course talk about that. Soaps and biscuits, perhaps what the common man uses. We find that the lower rates for FMCG has done a very, very good job, because now we find that consumers have the benefit of these lowered rates. Electronics, some kind of services, and the idea here is that these lower rates would actually increase the disposable incomes, and that would stimulate demand. And remember, the timing is also very important of this GST 2.0, before the festive season kicked in or during the festive season. So the idea was to boost overall consumption expenditure, and the economy could actually maintain a rate of growth which was very difficult for many other economies, big economies, to maintain. And we'll see that when we look at the economic survey and the budget. That's what I started off by saying, that when we look at GST reforms, please also see it in line with the economic survey and the budget. Okay. Well, there is also an important component, that is it provides a big support for the real estate sector. Real estate sector in India has been clamoring for a lot of concessions in recent times. And there is also a good kind of an attempt in terms of rationalizing structures for affordable housings, which is a housing sector which is very important as far as the economy is concerned. So on the whole, we find that there is a kind of a flip to consumption expenditure, and more importantly, the reduced tax rates for farm-related items and essential goods benefits farmers as well as it supports rural infrastructure. So the logic of these reforms, in a sense, would be to create what we would call as a virtuous cycle of higher consumption, increased investment, and stronger economic growth. Okay. Now, having said that, there are a couple of issues that we need to keep in mind. And what are that? One, first, rough calculations show that there will be a shortfall or a revenue loss of around 48,000 crores. Now, that is something which we need to keep in mind in terms of our subsequent discussions about the Finance Commission and the state's concerns, etc. This could actually cause a lot of fiscal pressure for both the center as well as the state. Now, here we also need to keep something else in mind. If you look at the last year's budget's assumption of the nominal rate of growth of the economy, well, we were assuming that it would grow more than 10%. And the actual nominal rate of growth of the economy, which is 8.9, that assumption itself gives us a kind of a shortfall in terms of expected revenues. Yeah, because your tax calculations are a function of your expected nominal rate of growth of the economy. Now, over and top of that, when we have a loss of around 48,000 crores, from a macroeconomic fiscal point of view, it raises some kind of a concerns. And those concerns are also echoed in some of the concerns which the states actually put up when they talk about these reforms of GST. Second kind of an issue of which we also had discussions to some extent in the morning is this inverted duty structures. Yeah, and that provides a kind of a difficulty, especially when you have taxes on inputs that are higher than that of outputs. Yeah, we have tried to address it to some extent, but not to a full extent. Perhaps if we want to have a comprehensive addressal of this kind of an anomaly, then we will have to have also large-scale reforms in our tariff structure also. And that is something which is being flagged in the budget, most recent budget, which to some extent there is a kind of an acknowledgement of this problem. Now here also there is a problem because there are a lot of transitional difficulties that we find. For example, this old inventories, how to really treat that, because and their old MRPs, what is the way in which we are going to really treat that. And once when this transitioning process is not smooth, it could create some kind of a working capital strain for businesses, and that gets complicated once when you have refunds for accumulated ITCs or input tax credits, which gets delayed. So that's a second kind of a concern which we need to keep in mind. Third is again this whole debate about this 40% sin, 40% tax on sin commodities or what. Yeah. Now this is a very straightforward kind of a thing, but there are disputes on that. For example, luxury and harmful, tobacco, high-end cars, gaming, online gaming, all that is fine. But the kind of a definition of what is sin perhaps changes over a period of time. How do we really reconcile with that? So classification and rate anomalies to some extent still persist, especially at the upper end, but not at the lower end. Finally, we talked about that in the morning also. There is a lot of compliance burden that we see. Yeah. For example, there is a continued need for either monthly or daily online e-filing, and that there is a process of ITC reconciliation, and that places a lot of administrative burden, especially on small businesses, which means that the kind of difficulties that the small businesses are going through, to some extent it again persists. Okay, so we find that there is a tilt in terms of boosting consumption, cheaper electronics, yes, white goods, FMCG, farm products, yes, a kind of high rates of taxation, 40% on luxury items, tobacco, aerated drinks, yes, that is also fine with our notions of welfare plus whatever concerns that we have. But the challenge is in terms of the delayed passing of these benefits to consumers and the transition hurdles. Okay, so that's a broad kind of a sectoral issue that I wanted to flag. Now I want to raise two more issues and I'll stop here. The third important thing that I want to raise was the whole question about the disputes that are coming. When we look at the kind of disputes that are arising and the time that is taken, rough data shows that as of late 2025, there are around 14,000 GST related cases of higher values that are pending. Another source of data cites that close to 40,000 disputes are still to be settled. Now, this 14,000 GST related cases involve around 6.85 lakh crores of rupees. So now I leave it to you. If there is a kind of a tax reform which can address to solve this kind of or reduce this kind of number of disputes, then I think that is the best for ease of doing business. In my institution, I still get sometimes this kind of letters from the GST that in 2022 when you had filed and our calculation shows that you have to still pay around 1,843 rupees. Then I have to really go back again, look at the calculations and refile and things of that sort. But that's fine because I don't have a working capital management problem there. But once when a kind of a tax system is raising so much of disputes, and once the disputes are getting delayed, and please mind this number, 6.85 lakh crores of rupees are in dispute, then we really need to think of another major reform that could come perhaps in GST 3.0 or in future. Now, my final point is the concern of states. Now, we know that the 16th Finance Commission award has come. We also heard in the morning that the third tier has been not rewarded appropriately. When we talk about the third tier, we always say that cities are the engine of our growth and cities are driving growth. But do our cities get enough is a question that really comes. The livability of cities in India is another major question. Not only physical infrastructure, but also the other kind of soft infrastructure which are very much needed for improving livability in cities. With the 16th Finance Commission award and with the present GST structure, what is that our states as well as the third tier can expect becomes a big problem. And some states have already raised this as an important issue because they think that with the 48,000 crore reduction in incomes, there is a possibility that the resources that are available to states and the fiscal space that is available to the states might actually reduce over time. Finally, this is a question which again Professor Pradeep Apte also flagged in his remarks. Well, we and I would also urge my young researchers to look into it. We would also be interested to see what is the kind of a distributional consequences of these changes, rate structures. And that is an area where we don't have much of studies now. The kind of consequences in terms of distribution. For example, one of the best works that I have seen was by Sachidananda Mukherjee of NIPFP, where he uses or he examines the distributional impact in terms of assessing it from the NSS data, 22-23 on household consumption, and examines the GST's progressivity across rural and urban, by a kind of a fractile classes of monthly per capita incomes, and 4 measures of inequalities are tested. That is the progressive vertical measure, the Kakwani, the Reynolds measure, as well as the Musgrave's measure. And he shows that GST is progressive, and in rural areas he finds that 50%, the bottom 50% and the middle 30% actually bear 31% of the burden, while the top 20% bears 37% of the burden. In urban areas, the shares are 29, 30 and 41%. So GST modestly reduces the post-tax consumption inequality, but that is perhaps an area where we need much more research, and with the kind of data that is available now and also with the consumption surveys that is available now, perhaps we could have much more insights and we can have more informed discussions in terms of the sectoral as well as the kind of a social impacts. So I would stop here, and if there are any other comments, we'll be very happy. Thank you very much.
At the outset, I must convey my thanks regards to Professor Das and his team for inviting me to this August gathering, where all the luminaries in the indirect tax structure in India, they have already thrown light in the morning sessions, and our panel also, they have a lot of problems and a lot of issues, and whatever the state of affairs as on today, next generation tax 2.0, there are a lot of issues have been discussed. I will not cover because if I will go otherwise, same thing, it will be repetition and overlapping. But some of the perspective which has not been discussed as a banker, as a finance expert, so I will throw here for your information, because what it has been told earlier, aftermath this GST or the 2.0, lot of research yet to be done. But in that light, whatever thing I have done some calculation here and there, a lot of press report or a lot of reports. So I will throw my some ideas. You must have gone after this unveiling of this new structure last year. Deloitte has come out with a report 6.0. Mostly they have the respondent, they have given a very positive experience. 85% the industry sector, they have given a very positive experience on the total in the last 8 years. Because in if you'll see in 25 it was 85%, 24 it was 84%, and 23 it was 72%, 22 it was 59%. That means it shows certainly our experience is gaining more happiness, or we are becoming more inclined or addressing or accepting the different structure of GST, or a lot of initiative taken by government and GST Council. But still some of the areas I will be throwing to you, because if you see in 2020-21, our GST collection was 11.37 lakhs crore, whereas in 24-25 it has 22.08 crore. So nearly it has doubled. Within 5 years it has doubled. And the growth has been nearly 9% or 9 to 15% growth has been there in the GST collection. But if you'll see the real thing, up to 6 years, the pre-GST collection or pre-GST revenue was up to 6 years, it was more than the GST revenue. So that means whatever collection is there, nearly the input credit refund or other thing is more than 10%. Last year 24-25, out of 22.08 lakhs crore collection, refund is around 2.52 lakh crore. That means more than 10% refund is happening. That means total revenue, nearly 90% collection revenue coming to the government kitty. So up to 6 years there was pre-GST collection revenue was higher than that. So that is why a lot of there was initial 6-year period, there was a lot of despondency. But when it was analyzed, because due to COVID period, slashing of the rate, and the importer given the improved credit, I'll just give you an example. Because suppose I am an exporter they are having zero graded GST. So they are not paying any GST. But for import, for when they produce the goods, they are importing the capital goods or the raw materials. So production of the product which will be exported, for them there is improved credit is available to them. So automatic, even if they are not giving any GST, so good amount they are getting through this input credit. Even if you see the last 2 year figure, I will not go to earlier figure. Out of this 2.52 crore refund, around 1.2 lakh crore refund due to the import that input credit. And as compared to the previous year, there has been 25% growth in the input credit. Whereas in domestic front, it is only the increase in 10%, but input credit is available it is 25% increase. That means 1.2 lakh crore. So, and my predecessor, what you are telling also, you see 6 lakhs, things are pending. So, when we will have our 47 goal is there, Viksit Bharat, and if you will see the increase in our collection, it is hovering around between 6 to 7%. Okay, but if you will see the revenue portion, there has been 0.6 to 0.7% reduction is there. So that means 5.8% to 5.9% revenue is coming to government kitty. So these gaps also, I don't know, because their refund data is not available. They are giving the data. Sector-wise it is not available. That is the question. But the question is, how we will reach if our growth rate, GDP, it is 6 to 7%, if it will increase to reach as a number 1 economy or number 2 economy or number 3 economy, whether this much GST percentage 6 to 7% of the GDP will hold good, and this much revenue 10%, 90% is coming collection. So certainly there is we have to revisit the issue, because the policy maker or the researcher, they have to find out why this much, whether this import credit, I am not questioning anybody whether it is correct or wrong, or somebody is falsely submitting, I am not telling that. I am telling this is a point of concern, because every year it is increasing, and our revenue to government kitty is coming down, increasing to not that extent, by less than the GDP, to that 5 to 6%. So this is one area everybody has to see, or the policymaker has to see. Another area, because we have discussed about the manufacturing and other sector also, certainly there is because in the Deloitte report they have clearly mentioned, because there has been a lot of improvement in the processes, in the structures, also the credit flow due to this 8th year, it has been becoming better, it has been smoother, because all the data, GST data they are having, the unit, their information they are having, that's fine. Also the digital architecture or the digital infrastructure has been strengthened. These are the three major points they have mentioned, Deloitte has mentioned in their report. But I am just giving one example, because it is nothing when you analyze the structure also, because when 2012 in service sector I am telling, because we are working in a sector, it is a financial sector. In financial inclusion place, we are working. In the country around 15 lakhs to 20 lakhs. The banking points, it is customer service point or bank mitra, they are working all over India in difficult center, hilly region, LW district, like that. So any transaction done with these people, these banking agents, banking correspondent agent, it was no service tax was there, 2012. But suddenly when the GST came into being, in 2017, what they did, they told, okay, the transaction done in the account in the rural branches, the transaction done in the rural branches of banks, if that will be, it is no, there will be no GST. So it is exempted. Suppose I am having an account in a village in Orissa, I am having an account, if I will do a transaction in any point in Pune, so there is no GST on that component. But also suppose one migrant laborer, here he is having account in his village or in Pune, but if he will go to Bihar or Orissa or Bengal, he will do a transaction there. So that means his account is not rural branch. His account is a suppose industry area, his account is in that place. So that is not a rural center. So when he do a transaction in Bihar, so he has to pay 18%. Still that is there. This anomaly is still there. So certainly, I am not telling a lot of things they have improved, but this has to be a rationalization, because earlier it was not there. In same points, in rural points is there, and somebody is doing the transaction there, how it will be not tax free? So we are telling, okay, don't make tax free, GST free, but you make it 5%, still that 18% is there. Another thing I am telling in the service sector, our lot of business correspondent working, 50 lakh, 40 lakhs to 50 lakh people are working in this sector, financial inclusion space, they are working. So there is already, because any membership is commission, they have to pay 18% GST, 18%. And they have to give the commission, whatever bank is giving, they are sharing with the agents in the villages. They are sharing that. And 2% TDS is there. What is happening here, there is no more input credit available to them. So that means 18% because they are not a manufacturing sector. So even if it is there, it is 10%, it is nothing. So such sector, what the GST provision has made for those people. Okay, manufacturing. These people also 40, 50 lakhs people you cannot avoid in India. They will be there. They have opened the account, 55 crore account in the country. Every day there is 1 crore transaction. They have kept 2 lakh crore deposit in the country for those people. So there is still that 18% slab is there. But when the input credit structure came, that's fine. But these service sector people who don't have any input credit, what we have to do for them? Because they have given an employment number of people. One BC having 1,000 people working, 2,000 people working, 3,000 people are working. They are not an industry. So that has to be seen also. And when we see the GST registration, people, it is 1.51 crore. Whereas in India, 9 crore people has already income tax registered, but 3 crore people are paying the tax. So certainly I am not telling, or it has to be enlarged. That is why the awareness should be created for the other people also, because that's still service sector. It has for other sector 40 lakhs, but still service sector is now 20 lakhs rupees. That means from the beginning there has been very little. I'm not criticizing anybody, but still this, if we tell it bias, that has to be removed, because we don't have, we are not a bigger body, or these people don't have a voice to ventilate. So that still remain this 18% GST for this type of commission, still it is there. And I told you that rural account, if it is there earlier, it was not there. I don't understand the logic also here. I don't know, because rural account, rural branch, but transaction is done elsewhere, in Bombay, Delhi, anywhere. So it is exempted. But in rural place, if I have account migrant labor here, account here, he will do there. It is not there, 18% GST. So this has some of the anomaly it is there. As we are saying SME, we are having 7 crore units in the country. SME, the defined, they are having registration. Still, we have to see whether those people are reaching. Maybe even if 50% people less, they are within, they have not reached that 40 lakh slab. Okay, but still there is a this awareness is needed in the budget. It has come also, and lot of data integration awareness GST I told you, and some of the suggestion, it may be some different type of suggestion I am giving here, because technology always will be backbone, because use of artificial intelligence, data centers, or the blockchain, this has to be used. And there should be the invoicing also, invoicing and the payment also, there should be a link. It should be automated, because in the morning somebody was telling, so he was paying tax, and that other person, they are not giving the tax. He is telling I have not to pay, because when I am paid, he has to give a certificate. He was not paying. Whether what is the framework, what is the monitoring system for that? There should be a system for monitoring of such transactions. And as I was telling you, the intelligence tax network and fully digital compliance should be there, seamless business ecosystem. And for inclusive economic growth, these are all the sector has to be, because service sector, they are giving a lot of employment potential there, that has to be revisited. If there is maybe the next generation GST 3 or 4, whatever may be, all these issues should be, because these are minute issues, it may not be, never care anybody. So this thing has to be studied also, because these anomaly, these are also because a lot of people are suffering for that. So that has to be there. And technology at the backbone, it has been already discussed. Inclusive economic growth, already we told you, because all equity, because in the morning session also equity came. So I give you example how it can be also addressed. So policy stability and growth, and that revenue, how it will be increased, so that our GST collection, it will be more, so that the Viksit Bharat concept what we have already framework, so that will be reached there. So this is my, because a lot of issues, whatever I mind also, a lot of things are there, because a lot of speaker already covered that. So I think it will be only duplicate. So few issues I just bring to your notice. Thank you.
Honorable Vice Chancellor, Associate Deans, esteemed panelists and esteemed guests. It's a pleasure to speak today at the GST Conclave. Professor Santishree in the morning talked about how many economists predicted about the war that is going on and the impact of that. I believe that's a wrong question to ask to economists, The right question to ask to the economists is, when have they predicted anything correct, Forget the war. I myself am training by training I am an economist, though I teach finance these days, but I am slightly different economist. I am a heterodox, so to say heterodox economics. So and try and do things where we can do better predictions and better analysis per se. And I think our Gokhale ji was also a visionary, because you can see in the name of the institute itself, politics comes before economics. So he was smarter in that sense. Having said that, we have had a long discussions on GST today, and we'll keep on having that in the next two panels as well. Good chunk of the time we have highlighted the issues. I mean, they are known issues. ITC issues there, the slab issues there, the number of taxation points that should be there. But I believe GST is not appreciated for all the benefits that it has brought properly. And I'll go into the sectoral impact as well, but I think there is I should spend some time in recollecting a few extremely good impact that GST produced, which is still underestimated. All right. First of them is COVIDflation. Right. We all lived through COVID. We all know that globally there was incidence of inflation throughout the world. Right. And that was known as COVID inflation. Why did this happen? This happened because the supply chains broke. And since supply chains broke, the cost of taking goods through that same supply chain increased, right? In fact, it's not just inflation that it resulted into the breaking of the supply chain, it actually resulted into the lack of the availability of the goods themselves. So a lot of the players, more than inflation, the goods themselves are not, that's infinite inflation, right? However, if you'll notice, India kind of scraped through in terms of COVID inflation. There was no COVID inflation, or there was very low COVID inflation during the time of COVID itself. In fact, it was one of those periods where the inflation of India was lower than US, a kind of a rarity in that sense. Why did that happen? Right? One of the key, there are various factors. The fiscal deficit control was extremely good, but one of the key factors was actually GST. Imagine GST not being there. Unfortunately, GST came in enough that by the time COVID came, GST was fairly stabilized as well. So imagine GST not being there, which means what? At each state border, you would have checkpost, right? Without COVID, only prior to GST in these state borders, you would have 3 to 5 days of line. With COVID, you would have had 20 days of line. The goods would have been stuck over there. They would not have crossed. So this creating single market is actually an extremely large reform, much underestimated still currently, right? In fact, I remember in one of the sector which has not been liberalized is the farm sector, with the mandi system that is there, and we all know the great history that has gone behind it in recent times. Because there was a mandi system, and the mandi, the outside Maharashtra, I think it's Anandpur mandi, outside Mumbai mandi, caught COVID, the mandi was closed, and for 4 and 5 days, our vegetable thela wala was not coming. Sitting inside Andheri in Mumbai, I could see the impact of COVID in the mandi at some point. Why? Centralized market, supply chain issues, market is not well liberalized, market is not open, crisis come, you have a supply chain failure out there, right? And of course, we know what happened after that. There was an ordinance in which it was allowed for mandis to, the mandis regulations were relaxed, you could sell food products outside this, and the food still reached your plates after that. So that's the importance of the supply chain, and GST has done that. Not just that, this is one impact. So we were saved from COVID inflation and shortage of food because GST was there. Another impact, this probably comes in an orthogonally sector way on the logistics side. The logistics itself, same thing. When we clear the markets, when the state borders are clean, you can just go through. Logistics truck companies, they used to take 5 to 7 days of extra time prior to COVID, right? So this 30 to 40% reduction in the travel time of the trucks themselves. What did this lead to? A very lax logistic, a spare built up logistics sector, a relaxed logistics sector. The supply chain was very clear. Now, this didn't lead to them cutting down the prices, because they were saving on the fuel, they were saving on the oil, they were saving on the drivers. So still, they didn't pass on the money to the end consumer. That is true. But what it did do, it did not let them, or they did not increase the price as aggressively going ahead. So that benefit that accrued because of GST coming in over a period of time, that got devolved into the end consumer. What was the result outcome of that? Indian oil intensity is at all-time low today, right? So the impact of oil prices going up on the economy has significantly reduced. The logistic cost of India, the logistic intensity of India is significantly reduced. Prior to 2000, around 2013-14, estimates vary, but they say the logistic intensity used to be 10 to 14%, or logistic cost used to be 10 to 14%. Right now, in this economic survey itself, Chief Economic Advisor pointed out, it's at now 6 to 7%. Tremendous decrease of logistics cost. What does this do? See, logistics is an extremely important aspect, right? One of the reasons India have chronic food inflation is why, because the supply chain logistics is not very clear out there. What happens because of that? Because of that, there are two things. A, there is a friction at each stage of goods going through, and that results in some cost accruing. B, more importantly, the information flow is not smooth, right? So you'll find phases where there would be extremely high onion prices, and then a couple of days, a couple of weeks down the line, you'll have onions being thrown on the roads because it's too cheap. Why? The information flow is not smooth. If the farmers knew at what point of time they should do what kind of a crop and when they should take to the market, there will not be this phenomena of glut and then free market and glut and free market, which lead to this kind of this kind of issues. So the information flow creates a chronic inflation environment, which has been the case of India. So today, if we look back at the sector itself and we are at the inflation itself, and we see we are going through an all-time low inflation era. Some people will actually say that this is not low inflation era, this is data issues. I've got other explanation to that. I suspect that India, the inflation has been extremely low in recent times, but the wage growth has also not been that high. So low inflation is still feel a bit of a pinch. But the truth remains that India has completely switched away from an era of chronic inflation to an era where inflation is completely tamed. There are other reasons to it. I'm actually a genuine fan of the fiscal control that the government of the day has shown in last 10 years, and that has definitely contributed to it, no doubt about it, even in COVID itself. But the smoothness of the supply chain, the Indian supply chain, is decently big contributor to this low inflation as well that we are seeing today, right? So this is the kind of impact that reform like GST can produce. What else apart from logistics sectors and that subsequent impact on the macro itself? The ability to give ability to give consumption cuts. So we had at GST cuts, series of cuts directly transitioning into consumption cuts for everybody. See, finance minister could give a corporate tax cut. Why? Because there is one headline number, right? I know there is one taxation system. So I reduce the tax, that benefit directly passes to the consumer, or in this case corporates, and they are able to use that extra gain of the tax for capex and this and that and stuff like that, right? This was not entirely that possible in the prior to GST era. 7 to 10 tax, which tax you cut, which tax you don't cut, what is the impact, no clue. With GST, and there are slabs, there are too many slabs, one can argue on that, though I don't think so. One slab is a very, very good thing. Probably 3 slabs, zero tax, some mid tax and some very high tax kind of a scenario is a big thing. But still, this is one structure. So today, a centralized system can give you a tax cut which can have a direct impact on the economy. That's another big benefit of GST per se, right? So lot of benefits. We are moving to our GST 2. One of the ways in which we know as reform has been successful is when we have enough detractors, especially of the foreign kind, criticizing that reform, right? And that has been one case with the GST itself, right? So there was this famous Oxfam report which says that the most of the GST is paid by the bottom, or 63% of the GST is paid by the bottom 50%. And this report was released at the World Economic Forum at Davos. So it became a talking point, and it's 3 years ago, 4 years ago. And everywhere these numbers were cited that GST is really regressive. I mean, this is commonsensical knowledge that, it's a consumption-based tax. Those who consume less are bound to pay less. So how is this happening? But still, we are living into an era, we are living in a modern era, where once a thing is written, it becomes the truth. So लिख दिया है तो सच हो जाता है, kind of a scenario. But what struck me 2 years after that report came, that I was having an argument with my students on this, GST itself, and he said that GST is regressive. I, of course, scolded him a bit in a friendly manner. क्या यार इतने higher education में पहुँच के you think that GST is a consumption tax can be a regressive tax. Whether it's progressive or not is a secondary thing, but it really can't be that regressive, It can be flat at best. But that thing led me to actually dig down deeper into it, and I have Professor Suresh Babu did quote it a research, but that's the numbers are a bit off on that side. So what I did was I went down to the NSSO survey of the consumption expenditure and stuff like that. There are 400 items that are consumed by that it lists. This is an exhaustive list. I took on each of the items, it's a decile-wise consumption item that is there. I put up GST rates on that, and I came up with the total number. And I was extremely conservative into this, because we all know, open food items do not attract any GST. Closed food items, so branded items, so open rice would not have GST. But there in the consumption data, it's only rice, it's not open or closed kind of a thing. So we assumed it as a closed only, applied that on it. So while Oxfam was saying that the consumption-based GST, the bottom 50% of population pays 60+% of GST, when it did this analysis, it turns out that the bottom 50% pays only 9.6% of GST. So imagine 63% is what they were claiming, 9.6 is the actual number, right? Professor Ramesh has said about 28%, but that's a part of the consumption GST. So it's 28% of the consumption GST paid by the bottom 50%. Of the total GST, it's only 10%, right? So the remaining GST comes from the capital good expenditure and the businesses and stuff like that, right? And the top 20% actually ends up paying around 15%. So fairly progressive taxation on the incidental tax rate. The bottom 50% pays, but last 10% actually pays somewhere around 6% of GST. Top 20% pays around 8% of GST to 2%. And this is under the assumption that everything is GST. So even open food items, I'm taking that as GST and stuff like that. So probably 3 to 4%, 2 to 3% difference would be in the top 10% of people paying it and bottom 20% of people paying it. Why I'm highlighting this is that in an indirect tax system, you've got a decently progressive taxation attached to it, and has given you a lever which has opened the overall market, integrated overall market into one, as well as gives a lever for you to time and again gives tax incentive as well. The GST benefit has been large and many, right? Why don't we know about them so much? Of course, the data issue is a big thing, right? So even getting any kind of tax data is always an issue, right? But that is something that we must do in GST2. So what is GST2? There are many definitions that have floated around. I don't know if there are concrete definitions to it. I was trying to look at it. But the way I see it, GST1 was about integrating the market into one. I feel GST2 should be about the economic infrastructure of the GST. The kind of and the wealth of data it can be produced in terms of targeting, in terms of working through, in terms of providing the right incentives is tremendous. Right amount of tagging and live tagging possibly can lead to a situation where at any point of time you can actually map where in the logistics system any goods is, where is that truck moving currently, between which state it is moving currently, and so on and so forth. So live data of the overall supply chain of the country can actually be visible from the GST, and that's just the tip of the iceberg. You can use that data for a tremendous amount of welfare into it. Where else? So let me also do some blue ocean charting on where we can go. This is of course a digital era, and AI talks and blockchain talks have been many. But the most interesting phenomena that we are currently seeing, which is kind of underappreciated today, is the era of programmable money. So we all know about central bank digital currency, e-rupee, right? And there is a good chunk debate also, how is e-rupee different from rupee. So there are economic explanation to it. It's a RBI liability, not a bank liability, so on and so forth. But the most interesting difference that an e-rupee can produce is its programmability. So it can actually be programmed. It can be programmed to expire as well. It can be programmed for automated settlement, right? It can be programmed for automated deduction of taxes at the point of the sale to the respective accounts. It can, so essentially, if the settlement is a single point, you essentially at the time of purchase itself, the GST is not just compiled with, GST claims are not just filed with, ITC are not just dealt with, but even the credit to the states happen almost instantaneously, right? So this programmable settlement system, as and when it can be integrated with the GST, it can even be done through DPI possibly, because there are currently finance firms which provide loans and then cut their EMIs from each transaction that they undertake, right? So small amount of transactions, you cut the EMI from there itself. Same with the tax. At each point of transaction itself, if you can cut the tax, that will make a system so smooth that you wouldn't even realize the tax is being cut, And again, coming to Professor Shanti's point, when she said that 20,000 and the CA said, and I just gave it because who cares? People are pretty scared about it. Madam, there can be an era whether you wouldn't even know and the tax will be cut from you, and that is a possibility that can happen with the programmable money. And we might end up in an era of Chanakya, who says that the tax collector should be such like a honeybee who extracts the honey from the flower without even disturbing it. So the technology is there of making this happen. Can it be integrated well? I suspect it can be, but it might just take time because there are enough procedural issues into that. Yeah, with that, I'll conclude my talk. Thanks a lot.
I thank all the panelists. We are already running out of time. I think there are many interesting issues. Particularly, I like your idea of having most of these problems are programmable. Of course, if each alarm can work, then probably many such kinds of things where identification is possible should work. But I think there are still many issues which academicians should look at. For example, I'm personally very happy about GSTs because it by and large slashed the burden that we had while teaching excise and customs, the two issues, namely classification as well as valuation. They have gone down very significantly. Only curiosity is that when it comes to disputes, the courts still interpret the issues on the basis of the old judgments, if I look at the judgments that have been given. But I think over the period, this will surely wither away. And one thing that I must say that this impact on poor, etc., is if we try to burden any one particular instrument with several objectives, it will always fail. It is always better. This is what is called often among economists as the Timbergen's law. If you have got two birds, then better have two stones for killing them rather than hoping to kill two birds in one stone. So it is better to have separate kinds of policies of targeting whichever section of society that you want to benefit. Don't hope that it should be done only by taxes. In fact, primary objective of taxes with all the principles that Smith has delineated, like simplicity, certainty, etc., let that revenue be forthcoming. The one problem which in fact I hoped that would have been discussed, it has been touched upon indirectly by the 16th Finance Commission. The real problem with the states is not the revenue sharing alone. The state's ability to spend meaningfully, state ability to raise necessary capital without much hassle coming from whichever approval that you require, typically from the RBI, because with the withering away of the earlier planned allocation on capital formation, state governments don't have any handle at the moment. So that's a separate kind of a financial issue, and I don't think that the GST should be or would be involved in addressing these kinds of issues. With this, I declare this session closed. Thank you for your patience, and thank you to the panelists.
It is our privilege to welcome you all to this session. We're so honored to have such a panel of esteemed intellectuals with us today. Our panelists bring together with rich experiences across tax governance, policy, digital transformation, and economic development. And their perspective will certainly provide a valuable insight into evolving GST landscape.
May I now call upon Dr. Saurav Mohanty sir to felicitate the moderator, Ms. Bhushna Karandikar ma'am. May I now call upon Mr. Ramayar sir on the stage. I will request Arjun sir to felicitate him. Please, sir. I would now like to call upon Ms. Nirupama Soundarajan ma'am on the stage. To felicitate her, I would like to call Dr. Amruta Suryavanshi ma'am for. Please, ma'am. We warmly welcome our esteemed panelist, Ms. Bhushna Karandikar, ma'am, the moderator for the session. I'd like to now call upon Ms. Sanjali Dias, ma'am. To felicitate her, I'd like to call Shri Patnaik, sir, to felicitate her. We warmly welcome our esteemed panelists. Ms. Bhushna Karandikar, ma'am, has completed her post-graduation from Gokhale Institute, Pune, and began her career in Maharashtra State Civil Services. She has also played a role in designing and implementing the value-added tax in Maharashtra, including automation of sales tax department. Since 2008, she has worked as an independent researcher on food safety, nutrition, collaborating with International Food Policy Research Institute and Harvest Plus. We now welcome our first panelist for the session, Shri Ram Iyer-ji. Sir is the founder and the CEO of Vayana Network, a trade finance platform that works with corporates and financial institutions across multiple industries in India and United States. He also co-founded Conclave, a financial technology firm focused on innovative digital solutions.
Our third panelist is Ms. Sanjali Dias, a distinguished civil servant with over 26 years of experience in taxation, public finance, and the digital transformation of governance. Ms. Sanjali Dias has played a pivotal role in India's indirect tax reform, contributing significantly to the transition from sales tax and value-added tax to the implementation of goods and services tax. As a senior vice president at Goods and Services Tax Network, she led the development of the GST's portal digital architecture, enabling a seamless and an efficient service for the taxpayers across the country. And our last panelist is Ms. Nirupama Soundarajan, who is a distinguished economist and a policy leader, currently serving as the CEO and co-founder of a policy consensus center in New Delhi. With an initial experience at Federation of Indian Chambers of Commerce and Industry, Bank of India, and Indian Council for Research on International Economic Relations. She has developed a strong expertise in financial sector policy, MSMEs, tourism, and ease of doing businesses. Through her work, she has made a valuable contribution to the evidence-based policymaking and economic research in India. Now I request our esteemed moderator, Ms. Bhushna Karandikar ma'am, to take over.
Very good afternoon to all of you, and thanks to Gokhale Institute, it's my alma mater, so for inviting me for this particular session. We are going to differ a little bit from earlier session. What we have decided is that we are going to talk topic by topic, that is subtopic rather, and then we will discuss. So it will be in a discussion format, so please bear with us with this. Our panel's main focus is on MSMEs, and all of you know that there are two definitions. One is by the MSME department, and one is in the GST, embedded basically to define the tax network. For any taxation, where the tax starts, where is the starting point, who should be registered, is what defines the tax base or the network of the dealers, registered persons. So in GST, it is 40 lakhs and 20 lakhs, all of you know. And for MSME, they have some different definitions, but of course it also starts with 20 lakhs and so on. So to that extent, they merge with each other. They are similar. And all of us know also as a student of economics that MSMEs play a very important role in Indian economy. It contributes 30% of GDP, 35% of manufacturing sector, 40% of exports and whatnot. So naturally, it is that much relevant for the GST as well. So what I want my panelists to comment on is, from their rich experiences, that what is exactly this MSME nano sector? What are their observations? Because you see, this is not a homogeneous sector. It is, you cannot club everyone below 5 crores as per the MSME definition, or 40 lakhs and above just by the turnover limits and all in one go. There are many nuances to it. There is heterogeneity. There is sector-wise, like for the all corporate or larger company sector, there is B2B, B2C. So may I request Nirupama ma'am to tell us more about how much is this so-called MSME nano sector exactly? Maybe sector-wise composition, how small are they, how many women are there, whatever your comments, ma'am.
There. Thank you. So this is actually a very, very important sector in India. If you look at numbers that we have, the Udyam registration, you have about 7.83 registered MSMEs as far as the Udyam registration is concerned. The government of India also actually releases this very good data called the ASUS, the Annual Survey of Unincorporated Enterprises. I think this is the 3rd year running that we've got the data there, and it gives you data of the smaller unincorporated enterprises as well. So the last count in terms of how many SMEs there were was 6.33, which was 2011 labor survey data. After that, now with Udyam registration, we've come to 7.8, your 83 crores. I think that's how long it's been since we've done any kind of baseline assessment to see the numbers. But notwithstanding all of that, you will see that in your entire MSME sector, which is your, take it as 7.83 or 6.33, at least 90%, a minimum of 90% of what are known typically as own account enterprises or your micro sector, which is, so part of the micro is also own account. So when I say micro, you have the definition as given by Ministry of, MSMEs, where you have what a micro is, what is small, and what is medium, as per investments and as per turnover. But among the micro sector, you have what is basically known as own account enterprises, which is basically a single man, single woman show that is running. And for these people is where then things like GST become a huge compliance burden, because it's that one person who is running it, and therefore that's where it is. And I think when we talk GST, largely it is this section that we need to keep in touch with.
Thank you so much. My next question is to Sanjali. So out of 7 crores, 90% are the smaller one, nano. So can you tell us more about how exactly, what was the idea behind this 40 lakhs turnover? What is, how these all enterprises are represented in GSTN, because we saw in minutes of meeting, many a times there are quite a lot of deliberations, at least in 40-second meeting and all, lot of SMEs and nano sector is mentioned. So can you please tell us about how this definition is arrived and what it means to GSTN? How many of the GSTN dealers are these people? What exactly do they do?
Bhushana ma'am, this is a very, very fundamental question, how this 40 lakhs for the goods and 20 lakhs for the services is the threshold limit for registration. But before that, let's discuss with the statistics of GSTN. And as Nirupama ma'am has said that on Udyam there is 7+ crore. I see suppose only micros are there, 7+. I mean micro, small and medium, if it mixed all together, it goes more than 8 crore. So, and before that, I would like to discuss a definition of MSME from the 1st April 2025. The small businesses having the turnover limit is 10 crore for micro, sorry. For small is 100 crore and for medium is 500 crore. That is the threshold limit. So investment at present we will not discuss because it is not relevant here. And now coming to our GSTN registration structure, if you see, we have at present around 1.6 crore. We can say 16 million of taxpayers registered. Now, in this entire ecosystem of 1.6 crore, if you segregate it, I think everyone knows, but let's be more precise. The taxpayers who are having a turnover of 5 crore are 92% in entire ecosystem. So, out of 100%, the 92% is the taxpayers whose turnover is less than 5 crore. So whatever, now I'm looking through the other point, like whatever policies we are making. So policies are making for all 100% taxpayers, but more the impact are getting to this 92%. So ma'am, your concern. So coming now 92%, how much they are paying? Just before coming here, I was seeing the fresh statistics on GST. So this 92% are paying the taxes to the total in the revenue are say around 13%, maybe a little lesser. So, and all this 8%, which are private limited, which are public sectors, the partnership, they are paying 8%, 92, 100 minus 13. So 87% they are paying the taxes. Means whatever we are listening from our PIB reports and from the government that this year we got a revenue of 20 lakh crore. Last year say 24-25 net revenue. So this revenue, say 90% has been paid by this 6 to 7% of the constitution who are having private limited and public limited. And not precise, but roughly 30%. Public sectors 30% and private limited 30%. So, and again, the constitutions, as per constitution, if you see the registration, 77% registrations are from proprietary. So what is the bottom line in this is this, whatever the policies we are making, maybe of registrations, maybe of the returns, compliances or refund, these are more impacting to this 92% of chunk, and somewhere we have to really go back and see where we should focus on policies, because the policy is that we need to cover the major community, and that policy will be then effective. So now coming back to ma'am, your original 40 lakhs and 20 lakhs. What is the source of that? I really don't know. But in Maharashtra value added tax, we had, we have, as you also were there, so you must be remembering, earlier it was 5 lakhs, then it has reached to 10 lakhs. So we also started with 5 lakhs, 10 lakhs, somewhere around 2000 this. Now, when I see the registration figures, so start with the Value Added Tax Act, we had around 2010 on our VAT portal, Maharashtra VAT portal, there were 10 lakhs taxpayers when our slab was 10 lakhs crore, 10 lakhs turnover threshold limit. Okay, so somewhere we have to take this call of the administration cost. How many taxpayers we can take care of? That is the biggest issue, and it's a trade-off again. So when there is, the threshold limit goes down, probably the number of taxpayers will increase and the administrative cost will be more. And again, as I told you, how it impacts the revenue, to what extent. So this is like a win-win situation, and probably that might be the reason for this threshold limit. Thank you, ma'am.
Thank you, Sanjali, very much. Yes, all tax administrators go through this dilemma of expanding tax network and administrative cost of it. So maybe that's the threshold limit that we talked about. My next question is to you, Ram. I always feel that MSME and such a large and dominant economic significance of this tech sector, is this a unique Indian story? I have a question. You all, I work in agriculture now, not in tax, but the white revolution is a very unique Indian story. Everywhere it increased the herd size, 10,000 cows, this and that. But we became successful. I mean, we of course imported milk powder, but still our herd size remained 2 and 3 cows only. And still we became the largest milk producer. Are we, Ram, is this MSME unique to India? Do we have to write a unique story again?
So, actually, the figures that were quoted, I think if you actually look at the numbers on Udyam, 99% are micro and nano enterprises. So actually it's a very significant amount. I don't think in absolute numbers or in percentages, this is common across the world, especially developed countries. But if you take Philippines, for example, or you take Indonesia, for example, you will find roughly the similar kind of numbers. In India, it's becoming easier to quantify because we have now, or we very rapidly, embraced digital, and therefore we have a lot of data. But a lot of these countries' data is not so precise, so therefore, but roughly you can assume, and even if you visit the countries, you will realize that it's pretty much, even if you go to Hong Kong, for example, you will find there's a lot of MSMEs there as opposed to large enterprises. I think in the OECD and developed countries, obviously the percentages are different, but the impact of small businesses continues to be very, very large. I mean, if you look at with the geopolitical situation today, and especially in the US, the biggest force that everybody is afraid of is small business. How are they going to react to tariffs, the war, the gasoline prices, and everything else? Because they represent a very significant proportion of the community. So I think MSMEs, will not lose their significance. Unfortunately, they do not have the clout with respect to the numbers. The problem is that they are not a voting community in the sense of being seen as a voting community. So therefore, an MSME in general, while he lobbies, I don't think the lobbying force is so strong for the MSME side. Somebody, I think you were telling me that MSME is becoming very popular now and everybody is talking about it. I'm very happy. But I'm reminded 3 years back in the world I come from, which is fintech, everybody only talked about Kirana stores for some reason, and it was my fervent desire to be reborn as a Kirana store because everybody was making apps and everybody was talking about how Kirana stores have to be improved. And I think similarly, I hope that this MSME fervor that is amongst all of us now does not reduce. Having said that, this is my, over the last 3 years, my 15th or 16th such discussion. What I find surprising, and today at least I can claim there is an MSME representative today because it's my company. We are an MSME by the 500 crore definition that has come in now. But I think you have to have representatives from them in these panels to understand what really that they go through. Because I think very often in the story of statistics, in the story of numbers, I think one of the fundamental problems MSMEs have is, people complain about are they digital enough? Do they have strength? Do they have financial strength? A lot of them have the biggest bandwidth issue is time. That is the fundamental issue in the MSME level. The one person there is doing job of 10, 15, 20 people. He is the one deciding what to purchase, what to sell, how to stock, how to, so you just go and visit your neighborhood Kirana store, you will find that one person, then help his family, 2 or 3 people are the ones who are running that whole place, and he's up from 7 in the morning to 9 at night or 10 at night. That is something that we all miss out when we are doing policy. We have to realize that what we think is simple and what we think is technologically so much easier and seamless, the digital friction, as I call it, is actually exceptionally high. One, you can educate people on digital. That's not the problem. You say, look, this guy has got a geophone and is watching YouTube or TikTok or whatever, XYZ, and therefore now you should be able to file his GST R1. I think you should sit next to that person and figure out what goes through him. To the extent that what we have figured out is that for most micro nano enterprises, they don't really care. Because this is beyond their ability to contemplate. So, I come from the credit world and I know that they will just sign any document you give in front of them. They will give you the OTP, they will give you everything that you want because they don't really understand the significance or don't want to understand the significance because it cuts away their time. And therefore, I think one of the things that we have to think about when we are doing public policy or we are talking about governance or compliance is that we have to take that persona of this small, 1-2 man shop and figure out how much time does he really have to do this that we are expecting him to do. I think that is the key. And I think a lot of the GST stuff, if you compare it to value-added tax and service tax, is a huge improvement. The one nation, one tax, or many taxes, one tax, many tax slabs maybe. But the fact of the matter is that it's a far great improvement over anything that existed before. And I think kudos to everybody who was participating in the design to kind of get it there. It was also politically appropriate at that point in time to continue architecture that was reflecting our central state, federation kind of a mechanism. So we have this CGST, IGST. The number of vectors of GST is unbelievable actually. You have this whole geographical vector, you have this rate vector, you have a product vector, you have many compliance vectors, so you have many vectors actually. And what people don't realize in the design is that all these vectors unfortunately come up in GSTR 9, that once a year. So, I was asking my accounts department today before coming here, saying how many people are there. They said 10. I said, how many people are fully involved in GST? He said 2, and during GSTR 9, 4. In addition to some separate auditor, some separate, somebody to audit. So I think the key thing we have to really think about this is that, yes, MSMEs are important, they're very significant, but we really have to understand their problems before we design anything for them.
Thank you so much. This is so very true. It's the bandwidth of the small and nano enterprises, the single proprietor doing all the things together, and how he will handle whatever simple GST it is. So I'm coming back to start with, as in the GST design, the composition scheme, which Johri sir also mentioned in the morning, was meant for, it was a flagship program for small businesses. But over the years, if you see, even in actual numbers, and mind you, the number GST registered small enterprises, as Sanjali has mentioned already, are quite huge, 90%. But the composition scheme members are decreasing even in absolute numbers. That means there is something, we need to change that scheme. It's not that popular. In the percentage terms, of course, it has gone below 9% even. But even in absolute terms, it is going down. So are there any thoughts? Do you think there is any changes possible in the composition schemes, or do we have to structure GST without diluting its central pillar, mainly tax input credit? How do you see the policy or the schemes for GST for small enterprises? Also, please help us in understanding what are other schemes like help desk and all such schemes meant for SMEs, and has there been any monitoring, evaluation, or of such programs?
Madam, as you asked me about the composition, I started recollecting the figures of composition taxpayers. So out of, say, 1.6 crore, there are around 14 lakhs plus composition taxpayers. And let's see how much they are paying in the revenue. So quarterly, they are paying around 700 crore. Like quarterly, they have to file the return. And the threshold limit for their turnover is 1.5. So 700 crore quarterly, it means altogether in India, for yearly, they pay 2,800, 3,000 crore like. So yes, my understanding, when I had conducted survey for my own PhD, that time I had asked to the at least 500 taxpayers that what should be the turnover for this composition. So I got an answer that 1.5 is not sufficient, it should be 5 crore. So many of them will participate into that. That is one thing. And second thing, what I realized that those who are on that, there are many taxpayers they are considering, those who are 1.5 around, they are considering, or they are nudged by to take a registration number. So to increase their business practices, because the composition is necessary for B2C. So suppose in any case in the future they get some B2B kind of transactions. And again, shifting from composition to usual businesses or usual business to businesses. Again, these are the, there are like, layers of procedures. So probably that might be the challenge in the mindset of this nano and small taxpayers.
I fully agree that they do contribute very less. But do we have to go always by ABC analysis, how much they contribute? If they are shifting from, don't you think that we have to design something better than what is offered to them? Yes, they are shifting to normal GST, but then their compliance cost increases, isn't it? Ram?
Well, I'm going to get in trouble here. Look, I mean, at the end of the day, GST, if you look at it, fundamental construct is two people dancing, right? There's a buyer and a seller, and both your records have to match, and you have to, and buyers and sellers. So it's actually a complicated dance that everybody has to match their figures and make sure they're taking the maximum input tax credit. Fundamental construct of and benefit of a GST is the input tax credit. So one person having a different chronology of filing his GST returns to another person who is buying from him who has to file a different returns. I think we can debate about the amount, and I think you're right that it's not the question of the amount, it's just the question of the process. Yeah. So for all large companies, they want everybody to file monthly because they file monthly and therefore they want to make sure everything is tallied, right? So the whole idea of composition, I'm surprised there are 14 lakh parties. I would think that's a... And, yeah, so probably it will keep...
But over the years it has declined. When we started in 2017, it was much more, 20 lakhs almost. Yeah.
No, so I think and I would not be surprised if it goes down. Having said that, I think one of the things to look at all of this analysis on GST is to look at who the buyer and seller categories are. So when you talk about GST and you talk about a buyer and a seller, you have large buyers, small sellers, medium buyers, small sellers, small buyers, small sellers. So the SME to SME traffic or the MSME to MSME traffic, that's really where you can think composition will work because both sides are probably using composition and quarterly matching can be easier. But that's a very insignificant portion of the overall trade, even in terms of numbers as well as in terms of value. So therefore, I would suspect composition does not really work for most people from a just competitive perspective. And I think whether you do monthly or composition, I think the requirements on the audit side, requirements on the compliance side, if at all you're concerned about it, and if you really meet a lot of the micro guys, I don't think they really are concerned about it. But if they were concerned about it, they would not find a much difference in terms of the effort. I think, unfortunately, we will have to go back to the fundamental design of GST to figure out how to simplify it. I don't think we can simplify it by tinkering at the edges. One nation, one tax, one GSTN. I think Professor Kelkar wrote an article a couple of years back. I don't know whether we can, I'm reminded of this Chak De movie, right? When Shah Rukh Khan comes in and asks, "Tum kaun se team se ho?" and everybody keeps states. And then he says, "No, aap log sab ek," whoever defines India, then that's what this is. GSTN is a state. Every state you are in, you have to have a GSTN number. Until we have that, and because it's, one more example I have is Tata Neu. So if you remember, it was a super app. I don't know, it's still there now. And one of the sarky comments that was made about Tata Neu was it solves the organizational design of Tata's problem, not the customer's problem. I think a lot of times GSTN also, to me, solves the government and the state and all of those aspects problem rather than the actual problem of the taxpayer. So you really have to go back to design, and I don't know whether it's possible, not possible. I think a lot more, important people have been talking about it for many years. But if it does get simplified, then and also tax rate gets simplified, that you don't have to now worry about this HSN composition so much, because I think, in India we have this tendency to overthink in details and execute in macro. We love to find every single unhappy path and figure out that we have closed everything. But when we execute in, the macro, we don't think of all the options. I think this HSN classification is brilliant. 2-digit, 4-digit, 8-digit, 12-digit, 16-digit. So I think so you really have to look at it. So I think if you, the question really is that, if you want to sustain revenue and you want to make sure everybody who has to pay revenue is paying revenue, then you will come up with the current GST system. If you are focused around the fact that everybody should want to pay revenue and are interested in paying revenue and it's easy to figure out how to do the computations, post the revenue, divide it, then you will come up with a different system. So you really, it all depends, as lawyers like to say, the fruit of a poison tree is poisoned. The design that comes out of a system also depends on the original goals. So I think that's really where we are.
No, thank you so much. But one most important point that we shouldn't miss in what Ram is talking about is that all said and done, there is a problem, everyone accepts and all that. But still, MSME, nano enterprises also perceive GST some benefits, definitely, because their participation is increasing over the years. So, ma'am, what is the reason for that? My small, I work with NGOs and SHGs, so my small observation, very small sample I would call it, is that those women get very excited that on the Insta reel, their rotis and their pickles got famous, and that's why they want to approach Amazon and things like that. And with more and more digital spread, we see all such stories coming. But I'm sure there must be many more reasons that why this small and nano, in spite of all this trouble, go to GST registration voluntarily. That is not the scheme, but normal GST. So please tell us more about your observations.
See, actually, to be honest, I think once they see, GST is a way of almost, it's almost like registration in the sense of having their documents in place. Quite frankly, I'll tell you something very simple. Aaj ki date mein, in most cases, and this is prop, so I'm also MSME with an MSME certificate. So when we're registered as an LLP, today, after incorporating, establishing, when I want to go open a bank account, they're refusing to open a bank account without a GST number. It's as basic as that. To answer your question, why are people getting GST numbers? They're probably getting it because the banks are making it mandatory. We went to at least 2 or 3 banks, and while they say, as a public policy person, I can still sit there and ask them, but I don't need a GST number to open a bank account. No, you don't, but we want it. Now, what do you do at that level? So, which is also why most of them end up registering. So you have that. Now, whether they really use it, don't use it, then becomes an issue. But having said, that's one reason, I think, which is why a lot of them get into it, whether there is a need or not. But the other argument also is there are, of course, advantages to getting a GST number. Apart from if you're able to work through it, the advantages of your input tax credit work. But more interestingly, you are now getting access to finance because you have, where you're not able to maintain books properly, your GST becomes a proxy for looking at credit assessment, and it becomes that tool, which also helps, I think, for a lot of them. Especially in cases like what Ram was saying, where there is a single person, and I think this is becoming more and more an important aspect of public policy, is looking at the time spent. So when we say ease of doing business, it's not just about, when you say cost of compliance, it's not just the money term, but it's also the effort term, the time and effort. And in that sense, I think for many of them, something like GST, where whatever is there in terms of record, becomes an automatic way upon which, banks can do credit assessment, see what they're worth, what kind of businesses come in. So I think that's the upside of it. But I do agree with Ram when he says we need to look at it fundamentally in terms of how we want to operate. Now, personally, I know today most of the day our discussion has been around a single rate, possibly whether it's going to happen or not. I personally don't see that happening ever. I think in India, at the most, we will have, if you take 0 or no rate as even a slab, I still think we will end up with at least 3 slabs. You will have as a structure like this before we move to anything else, which is basically a whole set of things which will have 0. Then you will have 1 rate somewhere in between, and then you will have your sin tax, which is your 48 or 50 or whatever else you want. Because in India, we still use taxation as a tool for public policy. So you want to discourage consumption of certain goods, you're going to put it there. And I don't think there's anything wrong with that. I think that's perfectly fine. Now, that's not the same as saying 2,000 rupees and 2,500 rupees ka yahan pe 5%, wahan pe 48%, that's not it. But if you suddenly want to push EV, then to say everything, no GST on EV at all, I'll slash it to 0, is something very much well within the right to push for. So I think this is how it will work. But I also think in terms of products, and I think Mr. Mohanty gave a fantastic example of, in terms of printing of notebooks that you classify. That's also because we look at it in a very somewhere where we need to go into micro level detail, we don't go. Where it's not needed, we don't. If you say printing of any and every book at one rate, then it doesn't matter whether you're printing cooking books, you're printing accounting books, you're printing rent receipt, whatever it is. And I think that's where somewhere we get caught and it complicates matters. So the next set of reforms in GST, I believe, has a lot more to do only with process simplification than actually tax rates. Tax rate, abhi jo karna hai, I think we've managed. The next will be that. And part of that is also to ensure that as far as MSMEs are concerned, and I'm sure that's the next topic we should talk about, is delayed payments, which is their biggest problem. But I'll leave that.
Yeah, sure.
Bring up.
What benefits to the person?
Yeah, after registration, I look at it in a very positive perspective. If you, last 10 years we have been hearing the India's DPI story, digital public infrastructure, and as we all know, the features of DPI, that the real-time payment, the account aggregator, and the which should be the first, like unique identification Aadhaar. So the third, one of them is the account aggregator. That is the entire USP of GST registration, I will say, the digital collateral. I would like to give my experience. When I was in GST, we were doing PTPFC project with RBI. Now it is called as ULI, Unified Lending Interface. And ma'am, you yourself will tell how much benefits the MSMEs are getting by every sale or purchase bill, by their consent. If they declare their information, they are getting loans. So as you had earlier said, that the payment cycle should be delayed so that we will get the working capital, but we'll say that should not be, the GST payment cycle should not get disturbed. That is not for the working capital, but yes, this digital collateral certainly is available for the MSMEs, and I think you should look forward through this DPI perspective and account aggregator, this data interoperable, so that like through Aadhaar we are getting to know the many, getting to the correct information of the MSMEs, and so banks can give them very confidently loan.
Great. So one thing is for sure, though MSMEs, there are pinpoints. I think GST is more and more used as a formalizing tool, right? So the access to credit and digital access is increased. So basically it also translates to access to market, better market. So in that sense, GST is beneficial to MSME. But again, I'm coming back to the main elephant in the room, so to say. Everyone wants to speak on that. Typically, for any tax, there is a life cycle. There is registration, then returns, then assessment, and the appeals if they don't accept with the assessment. The pinpoints that MSMEs are finding, as first explained by Sanjali, is definitely, and Nirupama as well, definitely registration, documents. But thanks to Aadhaar, now at least all of us have some starting point. So registration is taken care of, but the major problem is that of returns filing and hence access to the credit, as both of my panelists are talking about. And just sorry to preempt, I feel one tax rate is the solution for everything of this, but it might not come so easily. So to you, Nirupama, and then to Ram, about this MSME getting stuck payments or delayed payments and how it is affecting and how it has been, it's really the most important issue for MSME.
I think it really is. See, having actually spoken to at least many MSMEs, and contrary to what Ram you were saying, they are quite a strong lobby when it comes to with certain associations and their interaction. They do actually manage to get the point made. But I think the delayed payments is probably one of the biggest problems that MSMEs face. And it's sad because it's really not anything they can solve for. It's not their fault. When large companies or whomever it is, sometimes government, sometimes anybody, don't clear invoices on time, despite your entire 45 days, 15 days limit that's given. And how is that they just don't accept the invoice? Then, you get in, and therefore then in terms of your credit which goes in, it has to be reversed. There is a huge problem in terms of, because when the invoice is generated, they pay the GST. And if they don't accept the invoice and therefore don't make the payment, then that's that entire bulk of GST that is caught up. And then if they don't make the payment, then me as the MSME will have to go through an entire process of getting it reversed, doing all of that. So not only is my money caught up somewhere, I'm now having to go through an additional problem of having to get things reversed to do all of that. So it's a huge issue. So because, it's really funny because when the MSME Act came out and you get a certificate under MSMEs, half the MSMEs who I spoke to at that point, even though I've got my MSME registration, actually said they don't want to get it. Because the moment they got an MSME registration, they said most of the large guys will not make payments properly. They will just keep you handing because they're probably easier to deal with when you don't have that regulatory danda that's on your head. Without that, they're saying that it's faster and they managed to do it. I don't know if that's changed over the last 5 years, but when it first came, that was an issue. So notwithstanding things such as TREDS, where large companies are supposed to put their invoices, there is still problem. Forget, from private sector, I know for a fact that delays are happening from public sector enterprises. So as Government of India, you need to at least signal to make that as tight and seamless as possible. I mean, you've managed to do that with the government e-marketplace, that fantastic initiative, I think one of the best that has revolutionized government procurement. So when you've done that, there's no reason why the payments also can't go on time without delays, all of it. And I think that delay is the biggest, as you said, elephant in the room. And it's sad, not because of anything else, because it's completely out of control of the MSME. And that rests with everybody else in terms of doing their job properly. Which is why, as you were saying, the conversation of if you've left at the mercy of somebody else, then how does policy approach it? So is there a way to either then, because to Ms. Sanchali's point, I get what she's saying, that you can't really alter maybe GST filing to deal with this in terms of timelines so that it runs coterminous with your payment schedule of MSME. I get why that's not possible. But clearly this is something somewhere one needs to apply your brain technology and see how to rationalize so that you don't leave them at the receiving end of certain players who choose not to make payments on time. And I think this will become a very important component that requires solution. And if you're able to solve for this, I think a big chunk of trouble will actually go away for MSMEs.
So India is in a very unique position, I think, across the world. We talked about MSMEs, is India in a unique position, but I think just in terms of digitization, I think we are in a very unique position. We have, and we were talking during the pre-panel discussion also, we have this unique thing in India that we have a central payments ledger that NPCI actually can create. Every party to every party, you know what the payment is happening because RTGS, NEFT, UPI, IMPS, whatever is the mode of payment, other than pure cash, there is a single central ledger that one could think about of creating out of NPCI. You have one single trade ledger, this is GSTN. In fact, I would actually argue that we should not have this artificial 20 lakhs, 40 lakhs or whatever it is. We should have everybody e-invoice, everybody do GST because I think then it levels up the playing field. Now the question only is how do you design it in such a way that the time issue that I talked about earlier does not happen, but I think there are design constructs for that. But if you think about GSTN and NPCI combining their ledgers, the trade ledger to the payment ledger, a lot of the points that we talked about as to when is tax due, what is the tax due, what is the payment due, when is the payment happening, I think automatically can get resolved algorithmically or digitally. The earlier lecture talked about programmable money. You can actually program the old taxation issue. So one doesn't really have to calculate, compute and do all of that stuff. So I think there are answers there. The problem statement really is that what is the objective you're trying to fulfill? If the objective you're trying to fulfill is that people should find it very easy to compute, calculate, reconcile, and pay taxes, and that is an effect of India's overall tax coverage ratio increasing and all of that stuff, then you will have a very different construct. If your taxation is to really have a single revenue neutral policy or some other policy that you have, which is really with respect to government finances or state government finances, you will come up with a different structure. Now, if we say, look, we can't have tax solving many problems. I heard that also in the previous one. You can have only one thing solving one problem. Then you have to assume that you have to decide which problem you want to solve at tax. If the whole idea of tax is to make sure that the monies are going into the for public works, then you will solve it in a particular way. Ms. Sanjali talked about 13%, 82% giving 13% taxes or something. I heard the number. Then I would say let's worry about the big guys and then figure out that if they can contribute of the 20 lakh crores, 18 lakh crores or 16 lakh crores, I will just focus on it, get all their money and make it and forget the remaining or whatever it is. So I think there are many constructs possible. I think the question really we have to decide is for whom are we trying to solve the problem. One thing I do think is that taxation on its own absolute sense is inviolate, in the sense that you tax so that you can get money for distributing or for social works or whatever it is. But taxation has many second order effects. It builds its own set of incentives, it builds its own sets of workarounds, it builds its own set of issues. If you don't take into account all of that, then you are defining a taxation system is whatever objective you have, not worrying really about second and third order effects. You are going to get into all these issues. So we have chosen this particular taxation mechanism of indirect taxes. I think we just have to live with it and believe that 99% of the population are going to have trouble filing taxes.
Okay, so this is it. Change the goalpost and then you can have better than single tax rate probably. Yeah, but I have one more question. Is that GST that is compounding this problem, or was it generic to the SMEs? Non-payment from the bigger players, is it common? Is it irrespective of GST?
This has been a problem for a very long time. I think the genesis of a system like TREDS comes out and MSME Samadhan later to address some of these issues. All of that came because of delayed payments. I think that's constantly been a problem. It's just that GST is just an additional component that aggravates it even more in terms of requirement, because earlier it was still problems in terms of delayed payments, but now you're working with delayed payments with timelines and time deadlines, so it makes it worse. Penalties also, so it's a whole set of other issues that open up.
Yes. If you... no, it's okay. Please go ahead. So, but my question to Sanjali that in addition to GST, I know that after 180 days there is automatic input tax credit is done, but there is also that 45 days payment. There are some efforts, right, that are made to address for this delayed payments. And I will come to Ram's digital payment infrastructure question later on, but just now about delayed payment. So what are the measures that we are taking?
Little comprehensively, I would like to answer this question. As you asked that, ma'am, this is a GST issue or this is a chronic issue like since beginning. So I remember when I joined the department in 1998, and I was, as you know, you were my senior, so I was appointed in Bhusri MIDC, and I was looking after all the vendors of big automobile company. Almost 2,000 vendors were there in my jurisdiction. And every payment due date, I was asked to go on the field and collect the checks for the revenue and that time every work was manual. So we used to collect the check and deposit in the bank. So whenever I go to the vendors, the small suppliers, they'll say, "Paisa hi aaya nahi." Big industry. I don't want to mention the names of the industries, but everyone know who is there in Bhusri, Pimpri, Chinchwad. And the big industry and the small vendors were the lifeline of the entire revenue structure of Pune automobile. And that time also the problem was the same. And I remember then I and my staff used to tell them, go to the banks, that bill discounting, and then all those kind of solutions were there. Now, why the problem looks prominent today? Because GST is born, the act is born after digitalization. Means first the digital architect was ready, and the altogether beauty of this act is it is a transaction trail, like it's a supply chain. And now I will answer to Ram also. You cannot say that we will look into 8%, those who are the big fish, and will leave the small fish, because see, everything is interweaved together, and so you cannot isolate the chunk. And again, there is again a policy issue that one size fit all is again a very big problem. So it's not so easy for the policymaker point of view also to how to achieve the win-win position. That is one thing. And second, in MSME Act, what last time also we had discussed that the 45 days, this is there. But of course, again, Act is on the paper and this is not followed by the big, large taxpayers. So now there are few solutions which I observed that recently in 2024 also, as the expenses, like the payment, unless it is not paid, then those are not deducted as expenses through income tax point of view, that particular. But I understand rather from the MSME also, only this particular, for this reform, the opposition came later on. Am I right? Huh. And now coming back to ma'am, your 180 days, which is written in our section 16. So when this last we had a discussion, and when I was thinking about this problem, then I myself was thinking what could be the solution. So this, can we reduce this 180 days wala window to some lesser, like come to the MSME window, so that once both the things come together, the warriors from the GST also and warriors from MSME also, like they can nudge to the big taxpayers, like large taxpayers, to pay their payment to these small vendors. That is one thing. So the intent I was thinking about, and now how this intent has to go to the digitalization. That what Ram is saying, that I was connecting it. So now at present, there are two big features of the policymakers. The government wants it should be the real time. Everything should be the real time, and another is the perfection. So these are the two, what I observed all this last 4-5 years of digitization. These are the two basic features, real time and perfection, perfect matching. Now what Ram said, unless and until this, the payment is being connected. So what we are doing at present real time is tax reporting, the transaction reporting. But at present we are not doing the tax payment reporting. So unless and until that get connected, so then these things will get improved. And where I observed in NPCI through Bharat Connect, they have started this, but it will take time again. But yes, I feel there are hopes for MSMEs and we can do it. And of course, I suppose GST will also take it in due course of time.
Wow, this is a real hope. So as Ram was saying, basically GST and the current GST tracks down the commodity transactions, tax transactions, and we can juxtapose it, am I right, with the digital payment structure, so that this 50 days, 180 days by various entities, GST and plus SMEs, can be reduced in such a way that SMEs will be facilitated and there won't be a big crunch, the big problem of delayed payment. That's what it looks like. Am I right? So I think that will be our policy pointer for SMEs and GST. Yeah, correct. Coming together. So that will be definitely our policy pointer for the of this particular panel. Next, of course, it's comparative. Again, coming back, for any tax to execute, if it has a parallel digital, as we thanks to our digital payment infrastructure system, the entire ecosystem, if we can integrate, this problem can be minimized. Are there any studies or any such pilot programs that we know of? Integrating the digital and the and the tax transactions. No, if I pay by GPay, automatically it turns into invoice. It doesn't.
Look, I mean, I think all of those aspects will happen automatically. I mean, today we already are reading, I don't know whether it's rumors or real, that, GST and people are able to figure out what your turnover is if a Pani Puri wala, and they're able to come and tell him, now you need to get GST registered, right? So there is some tracking of the transactions happening there, and then figuring out whether, because the UPI payments are reflecting how much payments are coming in, right? That's why you will find now multiple QR codes are being used by shopkeepers, So, in India, we have workaround for everything. I think if you look at all the fintechs, for example, and now, of course, RBIH, which is the innovation above RBI, is doing through ULI, is to be able to bring together these two data. They have actually taken GSTN data, they have taken the payments data, they have taken the collateral data, and they have taken the entire financial data that account aggregator provides, all packaged into one thing, and then allowed the lenders to then decide as to how to kind of apply their algorithms and their credit models to decide who can be given credit. So to that extent, there is already this merging of data. Having said that, business to business is a slightly tough proposition, because, one of the things I always say is that we are trying to take photos when there's video going on, when the video should be used in business to business, because business to business is not atomic transactions. Unlike when we go to a shop, we get a bill, we pay. We don't get a choice of saying we'll pay part and we'll pay part later. Of course, there is credit sometimes, but, the whole point is that it is not atomic. It's many to one, one to many kind of payments, and therefore reconciliation becomes, I think, an incredible problem in the B2B world. And therefore, when you design processes, you have to assume from beginning that all the many to many creates an entirely different architecture over one to one. And I think if you look at GST from 2016, we have been involved as a GSP, and we have only observed it from the sidelines, but I think both you and her have actually seen it close enough. I think it reflects that learning, that, and therefore the tinkering around a variety of, the reporting and the way things are going to be done is reflecting the B2B complexity. I actually agree with her completely that one size doesn't fit all, but one process also doesn't fit all. So we have to kind of think about, if we decide that one size doesn't fit all, we also have to then take the logical next step and say, we can't have one process for everybody. 10th filing, 20th paying, right? I mean, you can't have that. So you have to kind of think about, if you're ready to answer one question, you have to be ready to answer all the questions that come from that answer. So I think that's really the important thing when you think about it. And that's why I say in India, we often think in detail but execute in gross, because we really don't want to take the second, third, fourth, fifth answers. And I think if you want to really look at what you want, I think we should go now, is it? Okay. Yeah. Wrap up. Okay. Yeah, so we can keep arguing about that. To me, GSTN, the reason why it has become such an important thing for MSMEs is the same reason why news has got affected with social media. It is systemic, it's easy to spread. Sanjay talked about the fact that it is digitized, and therefore it's become far more systemic than value added and service tax were, simply because they had this forms, and now, no check collection. So now she used to know 2,000 vendors. I think whoever is responsible for GST in Pune doesn't even know who the people are paying, right? It's all coming electronically. So every effect is getting multiplied many times. So therefore, we are talking about GST. I mean, the fact of the matter is it's really simplified life. I mean, you can't take away from that. You have got input tax credit, you cannot take away from that. Now, dil mange more. Now we want to kind of think about what all it can do and become the single instrument for social welfare. So I don't think we want to kind of swing to the pendulum too far. I think my only suspicion is that right now we have this digitization process. Now someone needs to think together of converging payments, trade, information all together into one package and figuring out when you should be taxed, how much you should be taxed. And that will really solve the problem of this whole MSME payments part.
Yes. Thank you, audience. And let me summarize in one very famous Sanskrit shlok, Yatha Madhu Samadatte Pushpan Rakshati Shat Padaha. So I hope that it will be a very seamless GST 3 or 2.5 for the MSMEs, where rather than the tax rationalization, we will have a very simple processes. Like if I pay by GPay, GST invoice will be automatically created, and there will be less burden for everyone. Thank you so much. Looking forward.
Ma'am, actually, panelists, if it's okay, we can have few questions. If anyone in the audience have any questions, feel free to ask.
I'm Sawan. I'm running small organization. One just addition to the madam's, that is big vendor and small vendor. Definitely the small vendor is stretched or is dictated terms from the bigger vendors or his buyer. But another corner what we are missing is like the suppliers is getting some his raw material or some inputs from his subcontractor or sub vendors. He is timely paying to his subcontractor, but bigger fish is not paying on the time. So it is basically stretching from both sides, right? So when you are making the policies next time, or this corner also we have to think over. That is my suggestion. Thank you.
Well, thank you, panelists. We surely know more now when we walked in here.
We now begin with the third and the last panel for the day, which focuses on a very important theme, institutional reform and implementation efficiency. This discussion will explore how institutional frameworks and effective implementation can strengthen the GST ecosystem and make it more responsive and efficient. For this engaging discussion, we are delighted to have with us a distinguished set of experts from the fields of taxation and policy. May I request our esteemed panelists to kindly join us on stage.
Can we have CA Swapnil Manhoot sir on the stage, please? With us, we have CA Swapnil Manhoot sir. Can we have Dr. Etrai Sinha Chakraborty ma'am to come here and felicitate him? The first panelist for this panel, we have former IRS, Mr. Prashant Mohanty, sir. For him, can I have Dr. Saurav Mohanty, sir, on the stage to felicitate him? For the second panelist for this panel, we have former IRS Mr. Dhruv Sheshadri sir. Can I have Dr. Ranjit Patnaik sir to come on the stage and felicitate him? The next panelist we have with us today is CMA Sanjay Bhargave sir. And for him, can I have Dr. Arjun sir to come on the stage and felicitate him? And our last panelist for this session is CA Yogesh Dikshit sir. And for him, can I have Professor Sankalp sir on the stage to felicitate him?
We warmly welcome you all. Ladies and gentlemen, please join us in inviting them to take their seats with a round of applause.
Now to guide this discussion, we have with us CA Swapnil Munot sir, who will be moderating this session. CA Swapnil Munot sir is a respected chartered accountant, author, and a consultant specializing in the goods and services. He is the founder of SM Manhoot and Associates and serves as the National Faculty on GST, actively contributing to the professional training and knowledge sharing. Through his work, he regularly represents stakeholders before the GST Council and the Ministry of Finance. And with his extensive experience in the GST practice and policy dialogue, he has played a significant role in strengthening India's indirect tax system. The first panelist we have here is Mr. Prashant Mohanty. Sir is a distinguished former officer in the Indian Revenue Service and a respected expert in the field of GST. With years of experience in taxation and public finance, he has been closely associated with policy. I'll just begin again. We are also honored to have with us Mr. Prashant Mohanty. Sir is a distinguished former officer in the Indian Revenue Service and a respected expert in the field of GST. With years of experience in taxation and public finance, he has been closely associated with policy discussion and the implementation of GST in India. After his tenure in the government, he continued to contribute as the consultant and advisor on GST and indirect taxation.
Our next panelist for this session is Shri Sheshadari ji. He is a distinguished former officer of the Indian Revenue Service and a recognized expert in goods and services tax. With extensive experience in tax, administration, and policy, he has played an important role in shaping discussions around indirect taxation in India. After his tenure in public service, he has continued to contribute as a GST expert, sharing valuable insights on tax, policy, compliance, and reform. Our next speaker, Dr. Sanjay R. Bhargave, is an experienced consultant specializing in goods and service tax. He is widely recognized for his expertise in GST policy and particularly in area of anti-profiteering provisions under GST. Through his professional work, research, and advisory services, he has contributed significantly to strengthening GST compliance and understanding among businesses and professionals. Our next panelist, CA Yogesh Dikshit, sir, is a respected chartered accountant and consultant specializing in goods and service tax. With extensive professional experience in the GST advisory, compliance, and litigation, he assists businesses in navigating India's evolving indirect tax framework. Through his practice and professional engagements, he contributes to strengthening awareness and effective implementation of GST among industry and taxpayers. We are truly privileged to have such an experienced panel with us today. And now, without much time, I would like to hand over the session to our moderator, CA Swapnil Munot sir. The stage is all yours.
Good evening. Hello. Good evening. Yeah. Thank you, Gokhale Institute, a very renowned institute all over India for the economics, and all the beautiful audience. It's our last panel discussion. As we know in the T20, last 3 hours are very important, right? So I know you are there since morning and hearing this very simple subject of GST. So Since we are at this economic institute, we have talked a lot on GST since morning, and various experts have talked from the department, from industry, from professions, from professors. We need to understand what we have done in GST. What is since last 8 or 9 years of journey. When GST was introduced in 2017, first 9-month tax collection was 7 lakh crore. How much? आप सब लोग हो मेरे साथ? As I said, the last 3 hours are very important, and you will find this session very interesting. We have very expert person from the department, also from the fraternity, from the profession. So, 2017-18, the 9 months collection was around 7 lakh crore. And in the last year, we ended up with 22 lakh crore collection. When the GST introduced, the taxpayer base was 60 lakhs taxpayer around approximately. And with the strict compliance in GST law, the way law is designed, around now taxpayer are 1.60 crore taxpayer, almost 2.5 per times increase in the tax base. So many taxes abolished and we have one taxes. So many registrations were required under earlier laws, now only one registration. You must be knowing this ease of doing ranking. Are you aware? Yes? So, I am following this ease of doing ranking since my student days. Still I am a student of a GST, but when I was in the college, we were ranked at 145, 130, 135. In one of the year, I remember that Pakistan rank was better than our rank. But now I think this ranking now stopped, but last we have now moved to around 62 or 63 something in last 6, 7, 8 years. With this all improvement, what government did? We were saying that GST बहुत ज़्यादा tax लगता है, बहुत taxes है GST में. The beautiful announcement came on the 15th of August 2025, where Honorable Finance Minister, Prime Minister announced that we are coming with the next generation GST reform with a drastic reduction in the taxation. Friends, I think after 1947, the GST is no doubt biggest reform, but the real benefit of the GST we got last year. Huge reduction in taxes. अगर आप में से किसी ने vehicle ली होगी अभी recently, और आपके किसी दोस्त ने 1 साल पहले ली होगी, the cost will be difference be around 1 lakh. That much saving GST has given to us. Almost all the sector government had tried to reduce the taxes. Electronic sector, TV, air condition, food item, daily use item, cement 28 to 18, vehicle 28 to 18, almost insurance, health sector, pharma, almost all the sector government has given the benefit to the common people. This is a real benefit of GST we got in last September. And now, due to this benefit, government is expecting around 60-70,000 crore of deficit in the tax collection. This is as per the current CBIC chairman. We have our ex-CBIC chairman with us to guide, but current CBIC chairman said that, and now we are working how we can look to this. Now, is this only tax, benefiting the tax? No. Friends, transport plays a very big role in our all economic growth. Some of you are very senior, some of young people are there. May not understand the problem of the check post or Jakat Naka earlier used to happen. Everywhere, wherever truck was crossing from one city to another city, from one state to another state, it was required to hold for around 2 hours approximately. ये सब कुछ खत्म हो गया जीएसटी आने के बाद. So transportation cost, logistic time is reduced, transportation cost is also reduced. Around now trucks are able to move 100 km at least more than the earlier, before GST I will say. So when there is a benefit, there is a problem. As we see in the Pune, we were not having the metro, now we have a metro, now we have problems, we want more metro. Right? We want logistic support from our office or home till the metro station. So like that in GST there are a number of problems. So our expert panel will discuss on everything, on all these aspects, and I request all of you, I know it is very difficult to sit from the since morning, and I request all of you give round of applause to yourself. Please give a big round of to yourself. क्योंकि मॉर्निंग से शाम तक इतना ये टेक्निकल टॉपिक को सुनना डिफिकल्ट होता है. सो आई कंक्लूड माई इंट्रोडक्टरी स्टेटमेंट विथ चैट जीपीटी शायरी ऑन द जीएसटी. कर व्यवस्था बदलती है, देश की दिशा भी बदलती है. कर व्यवस्था बदलती है, देश की दिशा भी बदलती है. जीएसटी सिर्फ एक कानून नहीं, एक विश्वास की कहानी है. नए भारत की मजबूत आर्थिक नींव की ये निशानी है. Thank you. So, our panel is focusing on the reforms and implementation, reforms under GST and implementation challenges in GST. So now the first question is, what are the achievements, gains after introduction of GST in comparison with the earlier laws from point of view of a common man, Bhargave sir? I hope you heard the question. So what are the achievements, gains of GST in comparison with the old taxes from the common person?
Thank you, Swapnil. You started with the common man. And our constitution also starts, we the people. So GST benefits to the common man. At least we recognized that one of the important stakeholder is a common man. And there are a lot of gains or achievements for which the common man has got after introduction of GST. The first example I'll take with my own example. During the COVID period, I was on a ventilator for 18 days and certain medicines were required. Tocilizumab and remdesivir, which were not available in Pune. And we had to basically get it from Surat and Ahmedabad. Within the shortest possible time, we could get the medicines. And that was all because of GST only, because the basic hurdles, the NACAs, octroi, everything was abolished. So that is, I think, that is the biggest gain, that the quick delivery of goods, reduction in the prices is there. If you look at the tax structure in the erstwhile tax regime, in Maharashtra itself, 14.5% VAT, 14%, 12.5% central excise duty, 3% octroi, 2% entry tax. We were paying around 33 to 34% as a taxes on the goods. After GST also the highest slab is 28%. But most of the goods, they were classified in the rate 18%. So that is the big achievement of GST. The goods and services became cheaper for the common man. The third important achievement or gain to the common man, the double taxation. I'll take one example. Software. Software was treated as a service also. Because of the TCS decision, software was treated as a goods also. So VAT was also charged on the software. Service tax was also charged on the software. GST has removed all these anomalies. And now there is no dispute about the tax. Either it is a service or goods. So that also has basically given a lot of benefits to the common man. Another thing also, since it is a consumption-based tax, the regional growth is also channelized. and ultimately it is for the benefit of the common man. Of course, there are number of other benefits also to the common man, but just to quote few, because of the time, I would not like to go discuss in detail. But the gains are more. Of course, whether the entire benefits are passed on to the common man or not, that is a question I would like to discuss. Maybe after some time also I'll discuss that. You asked the question. But predominantly the benefits are passed on to the common man, and lot of benefits, lot of gain the common man has achieved because of the introduction of the GST. One more thing I would like to specifically mention, that the snowballing effect or the cascading effect of the taxes, which is removed. And that also has helped a lot in reducing the prices of the commodities and services also. So these are the few benefits, few gains which the common man has got because of introduction of GST.
Okay. So rightly said by Bhargave sir that the important benefit is the reduction in the prices. Although as a common man we cannot see this benefit, because in earlier whenever you used to buy the goods only VAT was there on the invoice. बाकी taxes दिखते नहीं थे but वो होते थे. Now in GST almost from 33 to 30% earlier taxes, now we have a 18% tax. So it certainly has reduced the price ultimately for the common man. So now my question is what are the achievements, again same question, gains after introduction of GST from government point of view to Dhruva sir?
Thanks very much for your question, Mr. Manoj. So from government point of view, I think the main advantages of GST as compared to the previous tax regimes which were there, indirect tax regimes, the main advantage boils down to one thing, which is digitization, and the fact that everything is reflected on the system. So from the point of view of improving the transparency, the accountability, the fact that the law, procedure and system-based interventions are all very, very closely coupled. So these have led to a lot of improvements in efficiency. Of course, there will always be teething troubles. Like for example, you had different software models adopted by different states. Some had what you call Model 2, some had Model 1, wherein they developed their own software. Even the CBIC was working on a different model from the GST and initially, so there had to be data exchange. So teething troubles would be there. But just the sheer fact that everything is digitized, there is a clear audit trail. So all your processes, starting from registration, acting on a registration application, then refunds, then your basic dispute resolution, return scrutiny, audit, all of these modules being system driven made it very easy for officers to monitor the work and to discharge their executive functions. Of course, I will add one caveat to that, which is it also requires a lot of a very hands-on approach from officers. So officers, say for example, who might have been used to a more manual records-based approach would have had teething troubles for sure. But those who are able to take it upon themselves and get trained, of course, department also had organized a large number of training programs to get the officers used to it. So in implementation terms, I think this really, it helped the officers, especially who have a good grip of handling things on the system. So this is one thing. And then secondly, as earlier Professor Vidhu Shekhar had rightly pointed out, the fact that you have removed the cascading effect and the pinch of the taxes is felt less. So this Chanakya's analogy of a bee taking the nectar from a flower without the flower even realizing it or so. So I think that has largely come true, despite all the other teething troubles that have been there in GST.
Dhruva sir, I just wanted to ask one more thing. Is there any study from the government side, or are you aware of that, about the tax collection earlier in comparison with the now? Because now figure we are available under GST how much we have. But in comparison to whether government is really gaining or there is a...
Offhand, I'm not able to recollect.
I'm seeing that the earlier state taxes, their collection, put together and now GST vis-a-vis GST. So is it increasing or not?
Yeah, it would definitely be increasing.
Acha. Yes. And after this GST 2.0?
I think after 2.0, the time we would have to wait for next year's figures for it to be fully. Well, but definitely there is a very visible buoyancy year on year. So the tax buoyancy is definitely a major aspect.
We have one more panelist.
Yeah.
So now the same question: what are the gains or achievements after introduction of GST from the taxpayer point of view, Yogesh sir?
Yes, thank you, Swapnil. Actually, I take this question: what was the gain promised by the government to the taxpayer? That should be the proper question. क्या promise किए थे? It's absolutely on a lighter note. Actually, many of the gains achieved by the taxpayer point of view, not to the full extent, but many achievements are there because your question is specifically from as compared to erstwhile law. Correct, na? The achievements as compared to erstwhile law. Means earlier excise was there, service tax, all local VATs, central sales tax. As compared to definitely more benefits and more achievements have been achieved by the taxpayer. 3-4 I want to point out majorly. The first, as everyone is aware basically who are practicing in GST and looking after the GST, is the removal of cascading effect, the major benefit. The other is a simplified tax structure. The next one is, as you pointed out, Swapnil, initially that removal of check post, etc. So that is absolutely gone from ease of doing business. That has gone. The more one is due to the increase technology-based tax compliance, the transparency in administration has been increased. That is the major benefit I see from taxpayer point of view. Government officer के ऊपर पहले जो भरोसा नहीं था, वो अभी due to the taxpayer actually compliance doing from technological base, that administration has transparency has definitely been increased. So these are the 4 major benefits I look from earlier tax point of view. Then the technical, if we see, this self-assessment, which was not there in earlier laws, means in majority cases it was the manual assessments and self-assessment was on sample basis. It is exactly a reverse way in GST. Majority assessments are self-assessment. In very few cases, there is a written scrutiny, GST audit, etc. Which is very sample as compared to the number of taxpayers. So that is the major achievement. The one more thing I look from taxpayer point of view is the availability of old data on a portal itself, because that was not available under any erstwhile law, because major compliance was through manual returns. So getting the old data is a genuinely big benefit to the taxpayers. So due to these technological driven compliances, old data is available to the taxpayer. So that is the major point. Then if you move towards the payment system, earlier only manual payments, physical checks, as madam rightly pointed out, Dias madam, physical checks, maximum demand drafts. Now everything is online, net banking, debit card, credit card, GPay. So even taxpayer can make the payment after banking hours. Taxpayer can make the payment on holiday. So that is the benefit I look from taxpayer's point of view as compared to erstwhile law. The one more benefit, which is basically who are there from practitioner side here and those who are practiced in VAT laws, the major benefit personally even I feel is a removal of all declarations. It was really a headache. Declarations to be submitted for concessional rates. For example, under CST Act, C forms, H forms, I forms, and basically a huge department of any company was engaged in that activity itself. So that is the major point, removal of declarations. So these are the 4, 5, 6 points I look from taxpayer's point of view. Of course, as promised by the government, many is yet to be achieved, but over the period of time, I am sure that that will be also be achieved from the taxpayer point of view. Thank you.
Okay, I thought you will say that kya hua tera wada. So as you see that GST has, in last 9 years of GST, the GST has really achieved so many things for our country. when we compare with the earlier things, now we are in a very better situation. If you talk with any big businessman, apart from all the compliance and procedural challenges which we'll discuss, but really as a country whole, it's really benefiting. Now I want to have this answer from the economic as a whole point of view about the gains of GST from Mohanty sir, because he was a part of various GST implementation and thing. So Mohanty sir, as a moderator and as an audience also wish to hear you. What are the benefits of GST as an economy whole point of view?
Hello. Hello. Can you hear me? At the end of the day, I'm too tired now. In fact, it is a 1 hour lecture. To compress it in 3-4 minutes, it is a really a challenge.
You can take sir, little more time also.
I will speak only, touch upon only those points which have not been covered by the previous speakers. Okay? I will not repeat any point. The first significant gain under GST, the truck movement today is on an average 325 kilometers per day as compared to 200 to 225 kilometers previously. Why? It was not because of bad trucks or bad roads, but because of the requirement to comply with various tax laws. One study found that in the pre-GST regime, truck drivers used to spend 60% of the time off roads negotiating various checkposts. There were 650 checkposts in the country, and there were 11 types of taxes in the road transport sector. Now, this is all gone in GST. So, the conclusion is the faster movement of goods has improved productivity. The second point, because of elimination of tax cascading and refund of taxes, the goods produced in the country are more competitive, both in the domestic market and in the international market. How? Young students may be knowing it is a cardinal principle of taxation, that international trade, that we export goods, not taxes. WTO agreement on subsidies and countervailing measures permit refund of taxes borne on exported goods. But what was happening in pre-GST regime? I was myself joint secretary drawback. I could refund only the central taxes. There was no mechanism whereby I could refund the sales tax, VAT, octroi, entry tax, CST. There was no mechanism. Now all the taxes have been subsumed under GST, so seamlessly I am in a position to refund these taxes. To that extent, without doubt, your goods have become competitive in the international market. The third point, you spoke about revenue. In fact, this is a point I want to highlight because everybody has spoken how the revenue are made. Important thing is that if you see the 5-6 years from 2019 to 2023, at the pre-GST level of taxes, the states would have collected 35.5 lakh crores. In the GST rates, GST regime, they have collected 46.56 lakh crores. So, in the GST regime, the states have benefited by more than 9 lakh crores. So, the conclusion is that this fiscal federalism has strengthened under GST. This is my third point. The fourth point I want to tell that the transactional cost has gone down under GST, mainly because of two reasons. Why? Because of transaction cost, compliance cost has gone down because of harmonization of tax rates, laws, rules, regulations and procedures. Second, the transaction cost has gone down because of automation of various processes like your registrations, returns, payment of tax, refund. This is two things. So this is a very big benefit to the nation and the taxpayers. The other point I want to say, the compliance cost, because pre-GST compliance, non-compliance was calculated at 55%. This has come down to 20%. How? Because of your automation of various processes coupled with your e-invoicing, e-way bills, invoice matching, tax evasion is now very difficult. So this has led to massive formalization of the economy. What is the, are borne by the fact that, taxpayer base has gone up from 65 lakhs to over 1.5 crores. And this, what is the implication of your formalization of the economy? It has led to record indirect tax, direct tax collection. What you see in the budget outlay, that this year, 14.66 lakhs crores. And in corporation tax, it is 12.31 lakh crores. One of the reasons for your record collection in direct taxes is because of your the GST. Last, because there is lack of time, because it is big subject. GST is the finest example of cooperative federalism. It is a feat, finance minister used to say, it is unique to India and it is repeated nowhere in the world. As Vivek said, because he also touched upon the subject, under GST, the states as well as center, they have pulled their sovereign powers of taxation for the common good of the people. This is the significant. Hence the maxim, and Prime Minister said, GST reflects the spirit of one nation, one aspiration, one determination. Hence the maxim, GST means one tax, one nation, one market, and one tax authority. Thank you very much.
So, very nutshell, sir, you have told us that about the benefit of GST and the various increase in the revenue from state point of view, logistic also point of view, and the issue which even that about refund under the for the export purpose. You also highlighted that compliance under GST is reduced. So I just wanted to, because our both co-panelists are the practicing. So what is your view on that? Whether compliance is reduced in GST or increased? Practically, what is happening means what you feel.
Actually, I can talk on this subject at least for an hour.
No, quickly.
So basically, there are so many implemented challenges, at least from taxpayer point of view, because
I'm not coming on the implementation, just to add his question. What is saying that the compliance in GST is reduced. So what is your quick view on that?
No, absolutely no. Actually, I will not agree with that view, because if you see any tax department of the company, that tax department is busy all over the month. एक के बाद एक रिटर्न आता ही रहता है. पहले GSTR 1 आ गया, फिर 1A आ गया, फिर 2B देख लो, फिर 3B देख लो, फिर ITC 04 है. So many returns. So tax department is absolutely busy over the month.
Okay. You want to add anything, sir?
I have a different view on this. If you compare with the earlier tax regime, there were 12 excise returns, 4 or 2 service tax returns, 12 VAT returns, plus returns under a different act. Now, instead of that, you have to file GSTR 1, GSTR 3B on a monthly basis, annual basis GSTR 9 and 9C. So, that way, the overall compliance is reduced. But there is a further scope for improvement also. Now, practically, the data is available with the government on the real-time basis because of the e-invoicing, GSTR 2A, 2B. This can definitely help in reducing the compliance time also, because a lot of reconciliations are being asked from the taxpayers. Once the government has this data readily available on the real-time basis, that can be used, and the compliance basically mechanism, the number of returns can be reduced in my opinion. So as compared to the earlier tax regime, no doubt the total compliance is reduced, but there is a further scope for reducing the compliance under GST Act itself. That is my opinion.
Yes, Monty sir want to add something. Yeah,
But compared to the pre-GST regime, you must not forget that under GST has subsumed 17 taxes and 13 cesses. So in the pre-regime, that is saying, the more taxes you have, then you have more tax authorities, more laws, more procedures, more notification, more compliance requirements. It was tremendous, I tell you. So naturally, there is considerable reduction in GST. Second, we are forgetting that in the pre-GST regime, there are 20 slabs of taxes. 20 slabs, more than that. You can imagine the complaints burden on the taxpayers. Now, from there, from 20, more than 20 slabs, we have come down to three slabs. So is it not simplification?
No. Sir, from compliance point of view, as you said that it is reduced, and we also read that almost VAT service tax return is not required to file, excise return is not required to file, VAT return is also not required to file. But do I agree with the view of Yogesh, sir? Sir, what is happening practically? Earlier I used to file the excise return for a 100 crore company in 1 hour. But to file a GST or 1 for 100 crore company, I am required to put at least 1 day to match everything, to check everything, that no mistake is happening. Then I am also again required to do reconciliation. You know, I think earlier panelist, I forgot the name, he said that we are I think, we may be number 1 country in the world for the digitalization in indirect tax which is doing. Every transaction is online. From whom I bought, from that fellow from whom I bought, everything is reconciled, sir. But industry is under tremendous pressure, sir. From 1st to 20th, everyone is working day and night for doing all these reconciliations, sir. The compliance is really increased. Of course, because of this only we have a huge growth in the taxation. We are seeing that from 7 lakh crore to 22 lakh crore, so many chores, so many fraudulent cases were there. Now we are able to detect them, but compliance is certainly increased. Number of return is reduced. जैसे मान लो कि पहले रास्ता जो जाने का एक जगह से दूसरी जाने का रास्ता जो था वो बहुत दूर का था, अभी रास्ता छोटा हुआ है बट रास्ते में ट्रैफिक बहुत ज्यादा है, तो ये जो भी मिसमैच करना पड़ता है. अगेन GST and we have a CBIC chairman and you also policies person from, sir, we expect from the GST and that GST should come with some reconciliation excellent software, but that is not been given to the industry. It should be given. So compliance, I have viewed that it slightly increased. Now we'll move to the second question. Implementation challenges under GST and what is the way ahead? So what are the, see, everything, friends, every good thing, every big change economy will have some problem, and that is going to be there. Change is the only thing which is, what is the statement of Mahatma Gandhi? Yes? Yeah. So what are the implementation challenges? The next part of our discussion, what are the implementation challenges in GST and what is the way forward from taxpayer point of view, Yogesh sir?
Yes, Swapnil. As we just started discussion on this written compliance point of view, so there are so many implementation challenges because actually we are in the practice. So we see these challenges from very near from the taxpayers. So that can be divided into 2 parts. The implementation challenges, some principal issues and some technical issues. What I observed, because Das Madam will definitely recall, when earlier service cell meeting used to consider, many of the issues were solved at this juncture itself. If some taxpayer has raised some issues in service cell meeting of the department, now it is called as GRC meeting. But nowadays, every issue has gone ऊपर भेज दिया है हमने. तो प्रिंसिपल इशू काफ़ी हैं जो यहाँ पे सॉल्व होते नहीं हैं. So if we start from some technical issues first and some principal issues from taxpayer point of view, as you said, from implementation point of view, I'll just first take what are the challenges right now are being faced by the taxpayers. So as we started on the return, from my point of view, it's a very complicated return. See, GSTR 1, 3B, though right now I'm not actually into filing, but what I understood from the taxpayer, it is a very complicated form to match, mismatch. If any one of you has filed 990 form, everyone has formed the 990 form. तो उसमें ऐसा कहते हैं कि basically 990 form ऐसा है कि it is confidently submitted by the taxpayer, confidently reviewed by the tax consultant, and confidently reviewed by the departmental officer, but nobody understands that form. So that was the complicated form as department made 990. It can be very easily, it can have the easy flow of the tax calculation. Means we have suggested earlier, even in the Maratha Chambers meeting, that if it is made on the line of 704 form of our Maharashtra VAT Act, then even departmental authorities can use it for their better assessment. It must have some flow of the transaction. So returns are very complicated. Then second point, I view from taxpayer point of view that there are very much restrictions even after implementing the technological compliances. For example, if my ITC is to be allowed on the basis of 2B, if it is reflecting in 2B, then only you are allowing me the ITC, then why the restriction of 17.4? It is not like earlier excise era that double invoice lenge log, aisa kuch nahi hai. Then let it be any time claim the SSC. Why it is not there? Then even due to technology, the ease of doing business should increase. For example, there is a, say, what example we can take, refund. After 2 years, refund cannot be filed. Why it is so? If it is a technology, let him file at any time. So there are so many implementation challenges from technical point of view, and principle I will not take right now here, but classification issues are there, some litigation issues are there. Then in technology, one more issue I want to raise here, technical issues, that why there is no any period allowed for the continuation of delay. If right now appeal is to be filed against any order, the 3 months period is allowed to the taxpayer with 1 month continuation of delay, and it is for the 6 months for the department, again with the 1 month for continuation of delay. So if just for sake of argument, if any little taxpayer has missed out his bus by not filing the appeal, then right now he has directly go to the High Court by filing a writ application, which is absolutely not justifiable to him. So in my suggestion, there are so many implemental issues, and we can discuss it atom by atom when permitted by any forum. That's all from my point of view. So thanks.
Yes, sir. So you rightly said about that for in GST, even for small issues, we are required to go to the High Court, like delay condonation. The power should be given to the. In fact, when last year I was in the GST Council and Council Secretary also, and even the policy wing also, I discussed about that. At least give some power to about a delay condonation. Genuine cases, so many cases are going into High Court. We can avoid that. Now, sir, Mohanty sir, what do you feel as an implementation challenge in GST and way forward from holistic point of view?
Hello, can I speak? Mr. Moderator, you have given me a very, very heavy subject at the end of the day, I tell you. Very heavy subject, I tell you.
Sir, this all subject we have only decided.
Look, today, I could see noted down what we have discussed entire day. Speaker spoke about that we need to have fewer rates, review of exemption notifications, lot of discussion on inverted duty structure, then small scale units, MSMEs, ITC blockage, discuss about classification issues, interpretation of notifications, plethora of problems faced by MSMEs, revenue collection. So, the question is that if you ask me, the problems, because the topic of our topic is today, how to enhance implementational efficiency. The implementation efficiency will be enhanced if your tax structure is simple, laws, regulations, procedures are simple. Because everything stems from, mark my word, your 50 to 60% of problem lies in the tariff. Once you simplify the tax structure, all these problems we are talking about, MSME, ITC blockage, everything will disappear. So now that wonderful government has done, because a few years back, World Bank had carried out a study. They found out of 115 countries, 49 countries have got one tax rate only. 28 countries have two rates. Only 5 countries, including India, Pakistan, Ghana, Luxembourg, Italy, those who have more than 4 rates. But now, when I'm speaking, 4 rates have become really 3 rates. So the challenge for us is to how to further curtail it to 2 rates. It is possible. Now, because I have been repeatedly emphasizing, the problem is in details, not on the circulating on the contributing on the sidelines. How it is possible? Now, when we started this GST in 2017, there were 229 4-digit tariff lines were attracting a rate of 28%, constituting 19% of your tariff lines were at 28%. Next year, by the end of 2018, it came down to about 35 items. Next 7 years, we have just come down to now about 15 items. Even now, there is a scope to streamline this 15, and we can still come to a 2 rate structure. Because we are talking about what is to be done. By highlighting problems, it doesn't. We have to find out a solution. How it is to be done? If you see the third list I am talking about, basically it contains 3 sets of items. One is your seen items. In India, actually, people don't make a distinction between a person who drinks and who is a drunkard, or for that matter, who is a chain smoker or who occasionally smokes. So even if you have a high rate on these items like pan masala, gutka, irritated waters, tobacco products, no issue. Okay, that can remain. There is no issue. Then second set of items are 4 so-called luxury items. They are called your medium-range motor vehicles, medium-range your motorcycles, high-end motorcycles, then your aircrafts for personal use, then your pleasure sports, yachts and shipping vessels for pleasure sports. So, because these are revenue-earning items, we can live with for some time, but it requires a revisit. Now comes the miscellaneous item. There are a number of items. It can be, in my opinion, it can be streamlined in one go. I will give you 2 examples. It will make it crystal clear. And it is a problem for implementation challenge and problem for MSME also. There is an item called in this 40% list rather, that is carbonated beverages of fruit juice or carbonated beverages with fruit drinks. There are 2 competing items. You know, all fruit juices, I want youngsters to note, all fruit juices are classified under tariff heading 2009. Rate of tax, what is the rate of tax? 5%. Okay. Remember, all fruit juices are classified on 2009, rate of tax is 5%. Then, fruit-based beverages attract 40%, classified under 2202. Now the question is, what is the distinction between these 2 headings? Only 2. The product falling under 2009, which attracts 5% duty, they are subjected to basically 2 processes. One is preservation under pressure using carbon dioxide. Secondly, you know, secondly, addition of few ingredients, that is sweetening matter, either natural sugar or artificial sugar. In chapter 2202, which attracts 40% duty, they are also subjected to these 2 processes. So what is the distinction between the 2? Distinction between the 2 is that the goods falling under chapter 22, you know, they are heavily carbonated. The extent of use of carbon dioxide more than compared to 2009. The second thing is that the addition of water, it is more diluted so that it takes the character of a beverage. But the problem I want to tell you, in the HSN, your threshold is not defined. Threshold is not defined. The extent of carbonation is not defined. The extent of water content is not defined. So what would happen? Because of this divergence rate, one is 5%, one is 40%, there will be tendency on the part of the tax official to classify, regardless of your extent of carbonation, regardless of water content. So there will be a tendency to take the item to 40%. So this is a genuine challenge because these are manufactured by small scale industry. Now the issue is that why it is, so what is the solution? Now the issue is, you may say that, why 40%? I may ask a simple question. What is the rate of tax on water? 5%. What is the rate of tax on the carbonated water? 5%. Carbonated water is 5%, but carbonated fruit juice is 40%. Is there any justification? From a larger perspective, I may tell you, this year, somebody today also talking about, I also visited Indore few years back, I saw a mountain of tomatoes. In India, 25,000 crores, value worth good, we are losing because of wastage of fruits and vegetables. Is it not a correct way of, encouraging the manufacturers to use fruit juice? So, this is one thing, we can streamline. I will give you another example. Tariff item 9614, that covers your cigarette holders and smoking pipes. I may ask this question because the rate of tax is 40%. What is the rate of tax? The line preceding this tariff heading, 9613, cigarette lighters. Rate of tax is 18%. What is the rate of tax on tobacco processing machines? 8478 tariff classification, 18%. What is the rate of tax on the cigarette vending machines? 8476, that is 18%. What is the rate of tax on BDs? 18%. What is the rate of tax on BD leaves? 5%. Indian katha, which is cancer causing, item 5%. So what is the great justification for having a rate of 40% on cigarette holders? What revenue we are getting? So the devil lies in details. So if all of us, we can jointly apply our mind, easily we can streamline, come to a two-tier structure. I have more things to say, but I would stop. Thank you.
Yes, sir. So, various examples from tomato to BD you have given, sir. Friends, in GST, that wheels, that we in Balaji wheels or namkin we eat. So people are classified under papad. Now disputes are going whether it is a papad product or not. Because papad moong dal tu dal ka hota hai. Wheels kabhi triangle mein hota hai, kabhi circle mein hota hai. So we need to avoid such kind of issues in our taxation, which is making really complications. So Bhargave sir, what in your view from the implementation challenges from a common man perspective?
Thank you, Swapnil. As a common man, I expect that the maximum benefit is passed on to me. Maximum benefit is passed on to me. Of course, there are certain challenges. There are provisions. There are enabling provisions in the GST Act also. But it needs improvement. I'll talk only on 2 points. One is anti-profiteering mechanism. The sunset point was set, particularly after GST 2.0, where the tax rates are reduced. The benefit is not passed on to the ultimate consumer. I'll give 3 examples, sir. Cement, the GST rate is slashed down from 28% to 18%. In the construction industry, lot of saving is there. I have not come across any builder or developer who has reduced the rates of the construction cost. At least there should have been a 5% reduction. It is not being done. And the anti-profiteering clause, though it is there in section 171, because of the sunset point, because they are waiting for somebody to file complaint, it has become basically the tiger without teeth. That needs to be strengthened. Even the officers also can find out these things. They know where the tax rates are slashed. Through audit, through investigation, they can find out whether the rates are reduced and the benefit is passed on to the ultimate consumer or not. Because the ultimate aim of the GST is to basically reduce the prices, reduce the cascading effect, to pass on the benefits to the consumer. The anti-profiteering clause is one aspect. If it is strengthened, lot of benefits will be passed on to the consumers. That is the first point. The second point is where the authorities should look into it, and that is the advance ruling mechanism. Somebody approaches to some advance ruling authority in India, somebody gives decision. Of course, we know that the ruling is applicable to that particular SSC, but that ruling has got a nuisance value. I'll give examples, what Mohanty sir said. I'll repeat the same example. Beverages. Flavored milk is a milk. If you put saffron in the milk, can you call it as a beverage? If you put turmeric in the milk, can you call it as a beverage? The concept of beverage and the concept of flavored milk is totally different.
Absolutely.
We talk about the classification based on the trade parlance. In the trade parlance also, what is beverage and what is milk? All this advance ruling has created a problem, and almost 4 years we were paying 12% GST on the flavored milk instead of 5%. So ultimately the benefit is not passed on to the customer because of some advance ruling. Of course, in all such cases, somebody goes to the court, Supreme Court, it takes time. But in the meantime, 4 years, 5 years, the common man is paying additional GST on the same commodity. That needs to be stopped. Some centralized agency, some review procedure, or some review mechanism should be introduced in the advance ruling also. So if we take care of this anti-profiteering and advance ruling, I think more benefits can be passed on to the ultimate user, more benefits can be passed on to the common man. That is what I wanted to tell. One more example I would like to give. I have given example of the cement, but look at the stationery also, 12% to 5%. Not a single reduction in the cost of price of pencil, ball pen, healthcare services, reduction on the medicine, GST rate on medicines, healthcare services. Still they are charging at the old rate. This can be avoided through anti-profiteering mechanism. Thank you.
Medicine they have reduced, sir, and now we are able to. They may be having the old stock because lots of old stock is there and from dealer and retailer. But I think as an economics, competition do take care of reduction in the tax rates slowly, gradually. But I do agree with your view on that advance ruling, sir. Sir, very simple thing. Every company has a facility for employee. Transport facility, canteen facility. One advance ruling saying you pay GST on the employee recovery amount. One is saying you don't pay. This such kind of a small issues in GST if we resolve. For example, let's say take an example of reverse charge mechanism. It started in 2003 or 4, I think, with the GTA. It is drastically increased under scope under the service tax positive list in 2012. Again, it is reshaped in GST when all unregistered person brought under the reverse charge. So, ये reverse charge concept क्या है दोस्तों? इंडिया में इकलौता ऐसा देश है जहाँ पे हम परचेस करते हैं और हमें GST में उसका इनवॉइस बनाना पड़ता है कंप्लायंस के लिए, लॉ में लिखा है. Now I think there is a time that we should give away the reverse charge concept. बहुत सारे लोग ऑलरेडी रजिस्टर हो गए. कभी बोला जाता है स्पॉन्सरशिप के केस में आप रिवर्स चार्ज भरो, कभी बोलते हैं कि आप रजिस्टर्ड है, वो रजिस्टर्ड नहीं है, वो ये है, वो है, एंड ऑल द यू टेक द GST फाइनल ऑडिट रिपोर्ट, सब रिवर्स चार्ज का ही होता है मिस्टेक्स. किसी पे भरना था, किसी पे नहीं भरना था. करेक्ट. सो नाउ Dhruva sir, what is your view on implementation challenges from government point of view?
Yeah. So from the government point of view, I would categorize it into 4 areas. And one thing is that these are all areas where I would say work has already started. So the changes which I would say are desirable have already begun, but there is still further to go. So the first one would be, I think, mindset. So I think going in for more of a trust-based verification, and from point of view of the attitude, not just the systems, I'll come to systems later. but the attitudes of officers, rather than being one of fault finding, especially those who are in the facilitation sides of things, those who are in the divisions, ranges, for example, in GST, then they need to really be in the facilitation mode, trust-based mode, because everything is on the system. We have to overcome the mindset that sab log chor hain, that kind of thing. So that is the first thing. And likewise, also not pick up frivolous disputes. Really study the matter really thoroughly before picking up a matter for whether it is, especially once you're going into issues like audit and enforcement. Return scrutiny is mostly reconciliation, so that's okay. Even there, one has to proactively guide the trade on how to resolve this, how to make good the payment. Now, ever since service tax itself, we have had a graded system of penalties. So you just point out a mistake, person pays the duty with interest, matter is done, no notice. And all these provisions have been very beautifully incorporated into GST also. Even in suppression cases, section 74, you have a graded system of penalties, that even if those ingredients are there, he can choose to pay with reduced penalties, which gradually increase over time at a very early stage and just reduce his liability. So these are things that the department needs to proactively tell him. This pre-notice consultation, very beautiful concept. And now of course the act says as far as possible or something, but these are the things that officers have to, it exists in the law, it is up to the officers to implement in spirit. So that is a mindset part. The second thing is the technology. Now in technology, yes, like I said at the beginning, the technology has been a huge enabler in the implementation of GST and continues to be so. There is a huge movement from trying to be very exhaustive, because you have the number of taxpayers, number of transactions shooting up exponentially, whereas the staffing has not gone up to that extent. So there was actually a huge burden on the officers in the last years, like 9 years in which GST has been around. Like for example, you would have data thrown at the officers from, say, one of the data analytics wings of the department, and all very valid questions, but just a huge increase in workload. So those things, I think, are now, they're getting more and more targeted, more and more risk-based. The risk parameters are being more fine-tuned, which is, I think, as it should be. But I would still argue that there is more refinement which is possible in that. The third is manpower, which is now recruitment in governments have gone up a little bit, like you had a series of these Rozgar Melas and all of that. Creation of posts and all that. But I think it's important, the time has come for officers to work smart. So being very focused in picking up only the cases which are really of value, not creating frivolous disputes, things like that. And overall, I think the ease of, as I say, on one hand, we keep talking about ease of doing business. I do think that there is a strong case to be made for ease of doing work also for the officers. So if the departments think in this way, both the center as well as the states, so I think there'll be much more bang for the buck in terms of how GST is implemented.
So due to limitation of time, because our panelist has to take the flight, so you wanted to add anything, or should we end up this?
I will just take 2-3 minutes, because I thought that, we discussed about tariff inversion. Actually, that has not been explained. What is the problem actually? That is a big problem for everybody, and mostly for the MSMEs. Let me illustrate by way of example. Because I again repeat, because devil is in the detail. Let us take the example of stainless steel utensils, classifiable under chapter heading 7323. This heading covers your cooking plates, tumblers, bowls, canisters. This is one. In the recent tariff changes, earlier tax was 12%, now it has been reduced to 5%. What is the raw material cost? Raw material, it is manufactured out of stainless steel flats, coils or sheets. Rate of tax is 18%. Again, it is a case of tariff inversion. Not only that, the problem is what I want to explain. There is a competing heading, that is 8215. It is again in the kitchen item. This heading covers forks, knives, ladles, skimmers, sugar trunks, service spoons. So this is a bowl. classifiable 73. The moment I put a stick, danda, then classification changes. Under 80 to 15, the rate is 18%. Look, now 2 headings I gave you. Manufacturing process, input raw material is same, manufacturing process is same, end use same, rate of drawback is same. Your GST rates are vastly different. What is the implication? Now, since I am a stainless steel manufacturer, I am in a box, I put plates and cups, tumblers. Tariff rate is 5%. In that, I can put also spoons and their skimmers and your forks. So, because you cannot say that these are not naturally bundled. These are also naturally bundled. It will fall in the category of composite supply, but the rate of tax will be 5%. So, there is a legitimate tax evasion. So, that is why I always say there is a need for simplifying the tax structure, and all your problems, what you see, different things what you discuss, mostly it will disappear. Thank you so much.
Can I just add
We have limitation of time. So we are in the messy stage of GST, but I think in future we'll have a very beautiful GST, one of the classic in the world. So with this, I conclude our panel discussion. I thanks to my all panelists. Now over to organizer. And thanks to all beautiful audience. You were very patiently hearing us. I hopefully you are hearing us, right?
Thank you, moderators and the panelists, for such an engaging session. In the interest of time, we'll not be taking any questions. I would now like to call upon Professor Lalita Gauri Kulkarni, ma'am, to deliver the vote of thanks.
Honorable Vice Chancellor Professor Umakant Dash, distinguished dignitaries on the dais and distinguished dignitaries in the audience, my fellow faculty members and students, a very good evening to you all. As the convener of this conclave, it is my privilege to offer the vote of thanks on behalf of my colleague, Dr. Rimli Basu, who is the coordinator of this conclave, and on behalf of Gokhale Institute Organizing Committee. Actually, for the entire day since morning, we have had not a routine academic discussion, but a vibrant dialogue and, in fact, a workshop, live workshop on how to build next-gen GST for Viksit Bharat, maybe GST 3.0, as some of the panelists are saying. At the outset, we express our deepest gratitude to Professor Santishree Pandit, Honorable Vice Chancellor, Jawaharlal Nehru University, for her masterly special address that framed GST as a critical geo-economic driving tool for Viksit Bharat at 2047. She very candidly reminded us economists of the importance of political economy for such important reforms in India. We are grateful to Dr. Nitin Kareer sir, Chairman, Maharashtra State Finance Commission, for his incisive exposition on how new GST reforms serve as a pathway to development in India. We thank Shri Vivek Johri ji, former chairman of Central Board of Indirect Taxes and Customs, Government of India. In fact, he was here up till now for the entire, he is here for the entire day. That is, in fact, a certificate for the conclave on GST here. So he has actually a series of very important points in his inaugural address, like rationalizing the dual rate structure, and using technology, how it can reduce the compliance burden, which we were discussing in this panel. So after the inaugural session, I would like to also thank Professor Salian and Professor Malaya for their scholarly insights. After the inaugural, we had panel 1 on sectoral reforms, sectoral impact of GST and consumption patterns. And Professor Vidhu Shekhar from SP Jain Institute, he has put forward very important point, how GST, stabilization of GST well in time before COVID has helped the country. In panel 2 on MSMEs, Sanjali Dayas ma'am was there. So the call for action was mainly simplifying the processes, and she represented GSTN and how it can enhance the credit for MSMEs that was discussed. Panel 3, how to reduce the compliance burden mainly and how to simplify the processes again. So here I wish to place on record our sincere gratitude to all the panelists, all the speakers of the day. And from Gokhale Institute, my sincere gratitude to the Indian Council of Social Science Research for providing us the opportunity and support to conduct this conclave that is rich in engaging multidisciplinary discussions here. No event of this scale runs smoothly without the quiet, dedicated work of many hands behind the scenes. I extend my sincere thanks to the team of very energetic, as you can see across the day, very energetic and wonderful student volunteers who have been working tirelessly for weeks in advance to make this conclave successful. They remind me of actually the little squirrels in Ramayana. Every registration form, every which is filled, every delegate guided was there payable in building this conclave. A big round of applause. We thank Institute's advisory committee of professors and deans for their guidance, the administration department, the registrar's office and office superintendent, CFO, accounts department, who are also enthusiastic participants in the conclave. Most warmly, I thank each one of you. Our heartful thanks to our own honorable Vice Chancellor, Gokhale Institute of Politics and Economics, Professor Dash, for his constant support and encouragement and enthusiasm in bringing such high-quality intellectual events here. So before I conclude, I would like to draw your attention to a significant outcome and key deliverable of this conclave. There will be a lasting scholarly contribution in form of edited book in collaboration with ICSSR on the proceedings of the conclave. So with this note of gratitude, I formally declare the proceedings of the National Conclave on Next Gen GST and the Road to Viksit Bharat is concluded. Jai Hind.